But U.S. equities ended mixed overnight. The Dow gained about 0.2% and the S&P 500 and the Nasdaq dropped about 1/3% each. Bond yields in the U.S. fell overnight but recovered somewhat. As things stand, the 10-year Treasury is at 4.64%, and it's also a mixed start to trade in the Asia-Pacific region, with 2 of the 3 early risers starting in the red. In fact, let's pull up where things stand right now very quickly. You have the Nikkei 225, which is trading with cuts of about 0.4%, and the Hang Seng, which is trading positive. You should also watch out for Brent crude. Prices have fallen quite sharply yesterday, and as of this morning, we're trading at very close to that $83.5 to the barrel mark. There's a higher likelihood now of a ceasefire in the ongoing conflict in West Asia. There's also a report by Bloomberg that the US and Saudi Arabia are nearing a historic pact that would offer the kingdom security guarantees and lay out a possible pathway to diplomatic ties with Israel if the government there brings the war in the Gaza Strip to an end. And finally, US crude stockpiles have jumped as much as 7.3 million barrels last week, which is the most since early February, according to data released by the Energy Information Administration. That is likely the third factor behind the decrease or the decline in crude prices. I'm joined this morning by Jeff Dennis, who is independent emerging markets commentator, and he's going to put things in perspective for you at the start of trade today. Jeff, thanks as always for taking the time. We saw, as expected, that the policy rates were unchanged, but then there were a few things that changed in the commentary. One, the Fed chair spoke about the fact that the next move is unlikely to be a hike, but he stopped short of speaking about when the cuts would come through and how many cuts would come through. What are you taking from the comments yesterday?
Well, you're right. I mean, I think by far the most important part of this report, or this meeting in the Powell statement, is the fact that he gave a very strong hint that we won't get a rate hike as the next move. Obviously, we have to see how the data plays out. In terms of when they might cut and how many they might cut, how many times they may cut this year, if at all. Remember at the last FOMC meeting in March, when they last adjusted the dot plot, they kept the 3 rate cuts in the forecast. Now, my bet is with the next FOMC meeting in June, they'll probably reduce that to 2. And I think there's enough going on in this economy that we still have a very good chance of getting 2 interest rate cuts this year, probably 1 in July and possibly 1 after the election in December. But obviously, we've got to get the data behaving for that to happen. And I think Powell didn't close the door to that. He just simply said, we've got to wait for more data. Oh, and by the way, I don't think the next move is a hike.
Okay. What about the lead indicators that you're watching in terms of the growth picture? Because it's been a little bit of a mixed bag there. While the GDP growth data that came out not too long back was a bit of a concern and pointed to the possibility that things are going to get worse going forward, not all of it is bad. So how do you parse that data?
Well, first of all, talking about the GDP data, bear in mind that although the number was very much weaker than anticipated, there are 2 things about it. First of all, it's history. It's gone. We were surprised by it. But on the other hand, if you look inside the data, this GDP number was held down by inventories and also by net exports. And if you strip those out, domestic demand was growing at about 3% in Q1. And I think that domestic demand component of GDP, which is what will matter to Powell and to the Fed, is probably going to slow down in Q2. So oddly enough, the GDP number may get better, but the domestic demand number, may get softer. I think what's important from here begins on Friday. We need to see a softer labor market. I suspect we will finally get a softer report than expected on the labor market, although I have no real sound basis for that. I just get the feeling we're due one of those. And as I've said to many people, there are 3 CPI reports before the FOMC meets in July. And I think, especially with oil prices, Brent falling quite sharply now, we're going to get some much better inflation data between now and then. So I'm watching, as I say, the employment numbers, the GDP overall, but in particular the inflation numbers. I still think we're heading for 2 rate cuts in the second half of the year.
The final question is on emerging markets in India in the context of those emerging markets. Are you going to wait a little bit for some clarity in terms of, the election? Is that a factor at all for you? What are you watching for?
I think it is a factor, but on the other hand, I think it would be a giant surprise if there was any sort of setback for the BJP, and I think it's really a question of just quite how many seats they get, frankly, and I think that's all pretty much baked in the cake. India's been an outperformer this year, and I think it'll continue to be an outperformer. I think you have to gauge entry points into India according also to all these global events. I think it's going to take a while before markets settle down and we do get this softer US data, softer inflation data, which really will clear the way for lower bond yields, a lower dollar, and a real sign that money will come into emerging markets. Now, having said all of that, EM's held up really well recently, partly because China's improved, and EM is up just over 2% on the year, developed markets up just over 4%. So EM's holding up very well. So I expect it's going to remain quite choppy in the short term. I think there'll be opportunities to add, but I think what's really going to happen is we're going to have a better second half of the year. Once it becomes clear the Fed will probably cut during the second half of the year. My bet is in July, and I think India in that context will continue to outperform.
Thanks so much, Jeff, for taking the time this morning. Have a lovely day.
Thank you.
All right, let's turn to the Indian equity markets and the latest cues from the F&O space. Of course, we closed with minor cuts on the benchmark before we head into the midweek market holiday. But what are the next levels to watch out for? Agam is standing by to break that down for you. Agam, morning. What levels are you focusing on?
Morning, Alex. Well, Tuesday was an extremely tough day to trade. It was extremely choppy, and I reckon that trend may just continue because what we are looking at the moment is a lot of uncertainty, a lot of indecision when it comes to traders in terms of markets, of course. And that, in fact, has further taken a hit when it comes to confidence because of the last 1 hour of move as far as markets go, in the last. But that said, for now, of course, the Nifty, while it did end in the red by around 0.2%, it really doesn't tell you the picture of what really happened last Tuesday. It's actually thrown out a lot of traders out of positions and out of all the standings that they've had, over the course of the last few weeks and months. That said, let's move on and talk about the Bank Nifty, because Bank Nifty was essentially the one which was the most choppy. And don't go by the flat number here, because at one point in time, it had advanced by around 400 points. And, the very next minute, you see the Bank Nifty come off by as much as 800 points in a span of just about 15 to 20 odd minutes. And it's taken all the writers, calls as well as put writers, by surprise. Moving on, as far as the option market is concerned, and of course today is the weekly options expiry for the Nifty, and it's going to be yet another choppy one. I want to talk about your overall open interest distribution picture, because that will actually give you an idea about how things are stacking up. You have OI all the way down to 23,000 in terms of calls, because at the moment we've seen so much volatility. 20,500, a reasonable amount of puts being added into the system. But should we see the Nifty come up by even 100 points from Tuesday's market close, you never know. This will start seeing a substantial amount of unwinding, and from there on, we could see further pressure coming onto the Nifty. Let's talk about stocks then, and I reckon that that's where a lot of traction is on account of earnings. So, we do have longs in Exide and something like an HDFC, MC, Birlasoft, Dr. Reddy's, and HCL Technologies looking at shorts, and short covering for Jubilant Food, Shriram Finance, along with SBI Cards and Escorts. Once again, Alex, I reckon that all eyes will be on the earnings. We've had a whole host of companies coming from the Adani stable, which have been, all of them been looking reasonably good.
Right. Thanks so much, Agam, for getting us those details. And let's, in fact, talk about a significant update for the BSE. And now you're aware of the regulatory action, or rather the charge that was announced on account of regulatory action. There's an update in terms of the transaction charges that they are levying in the equity derivative segment. They have raised or announced a raise in that particular segment. And we've got Saloni joining in to tell you more about that. Saloni, this is something that will set off the impact of the regulatory action?
Good morning, Alex. Yes, right, as you mentioned, but just to give a update on what has happened. So BSE has increased the transaction charges on 2 of its option contracts, that is on BankX and Sensex options contracts from May 13. Now this has come, as you said, after SEBI sought higher regulatory fee on the option contracts. Now this was supposed to have a one-time impact on the earnings of BSE. So brokerages had expected BSE could increase these options tariffs to offset the impact of this higher regulatory fees. Now coming to the charges that have been increased, they have increased the charges across various turnover slabs by about 32 to 48%. As you can see from the table also, about from their 3 crore turnover till 2000 crore turnover, it's increased by about 32% and 48%. Now this the regulatory the higher regulatory fee that has been sought on the notional basis could impact BSE's turnover or revenue by 15% as of FY25 estimates as per Jeffries. But now this particular update on the transaction charges could limit that to 2 to 5%. This is as per HDFC Securities. Now the last revision BSE had done was in October 2023, and one more important thing is here that this has come after rival NSE had reduced their transaction charges last month by 1%. So this is at the time when both the rivals are trying to compete in the growing derivatives market. So we'll have to see how much exactly does it impact BSE raise their market share in the segment.
Certainly, and it's a stock to watch out for in trade today as well. Thanks so much, Saloni, for getting us those details. Now, the Godrej group of stocks is going to be packed to watch certainly today, because the significant update that we got was that the Godrej family has reached an amicable settlement on an agreement to divide the group into two. Adi Godrej as well as Nadir Godrej will retain ownership of the Godrej Industries, and there's going to be a split away of Godrej Boyce. Mahima is joining in to give you the key details and what to watch out for. Mahima, what do you focus on here?
Right, Alex. So Godrej business has always been divided into the 5 listed companies and Godrej and Boyce overall, which is the lock business. So now after the restructuring that has taken place, the listed companies, the 5 listed companies, that is Godrej Industries, Godrej Consumer Products, Godrej Properties, Godrej Agrovet and Aztec Life Sciences will be held by Adi Godrej and his brother Nadir Godrej. And these 5 listed companies collectively are valued at around 2.4 lakh crore. Talking about Godrej and Boyce, the Godrej and Boyce and its affiliates will be under Jamshed and Smita, and they will be receiving the entire share in Godrej and Boyce, and they will also be receiving the land parcels of 3,400 acres in Vikhroli. Now, in terms of Godrej and Boyce, the revenue was around 14,000 crores as of March 23, and overall both groups will be able to utilize the brand name of Godrej, and there will be no royalties charged for using the brand name. Also, Adi Godrej has announced open offer to acquire the publicly held share of Aztec Life Sciences. Now the focus here will be mainly on the land parcels, because the marketing rights will be held by both of these Godrej Boyce and Godrej Properties. However, development rights will be held by Godrej and Boyce only because they will be the owners of land parcels. So Godrej Properties will be able to use the development rights only after entering into an agreement with Godrej and Boyce. And in terms of MOU for development, the former lands in Vikhroli will be in the hands of Godrej and Boyce. So this is the overall view of how the restructuring will take place for the Godrej house.
Yeah, absolutely. Thanks so much, Mahima, for getting us those details. Now, it was Labor Day yesterday, but it was also Maharashtra Day, and it was the day for the launch of NDTV's newest channel, which is NDTV Marathi. And if you get the chance, please do check out the programming over the course of the day on that new platform. We had the Chief Minister of Maharashtra at the event yesterday, and he spoke about the various reforms and the infrastructure projects that are transforming the state and, in fact, the city of Mumbai. Listen in.
या 2 वर्षामध्ये आपण जर कटाक्ष टाकला, मागे वळून पाहिलं तर आपण पाहाल अटल सेतू MTHL जो गेम चेंजर प्रकल्प आहे. शिवडी नावाशेवा आणि जिथे 2 तास लागायचे तिथे आपण 15 ते 20 मिनिटात पोहोचतो. मुंबईतला कोस्टल रोड आपण पाहिला, तो आम्ही एक साईड ओपन केला, आता दुसरा साईड ओपन आता 31 मेपर्यंत तो करू. नागपूर मुंबई बाळासाहेब ठाकरे समृद्धी महामार्ग जो पाहिला, जिथे 15-20 तासांचं ट्रॅव्हल टाईम होतं, आता 6 ते 7 तासांवर आलं आहे. मुंबई पुणे मिसिंग लिंक, जगातलं सगळ्यात वायडेस्ट टनल आम्ही करतो आहे. मुंबई पुणे आता तुम्ही अर्धा तास आणखी अगोदर पोहोचणार,
कमी होईल.
मुंबईला पुण्याहून येणार, पुण्याहून मुंबईला जाणार. मेट्रोची कामं बंद होती, कारशेडची कामं बंद होती, बंद पाडली होती का पडली होती हे आता तुम्हाला माहीत आहे सगळ्यांना. त्यामुळे खरं म्हणजे राज्यकर्त्यांनी इगो आणि अहंकार ठेवता कामा नये. राज्यकर्त्याचं काम असतं जनतेला कशामध्ये फायदा आहे ते बघायला पाहिजे. माझं मत काय यापेक्षा जनतेचं मत काय आणि जनतेला सोयीसुविधा किती फास्ट मिळतील हे राज्यकर्त्यांचं काम असतं. आम्ही सरकारमध्ये आल्यानंतर सुरुवातीला मी आणि देवेंद्रजी दोघं होतो. दोघांनी शपथ घेतल्यानंतर पहिल्याच कॅबिनेटमध्ये सगळे स्टे आम्ही हटवून टाकले, सगळे अडथळे दूर करून टाकले, सगळे प्रकल्प मोकळे केले. मग कारशेडचं काम सुरू झालं, बुलेट ट्रेनचं काम सुरू झालं, मेट्रो 2, मेट्रो 7A काम सुरू झालं, मेट्रो 3चं काम सुरू झालं, अटल सेतू फास्ट सुरू केलं आम्ही, समृद्धी हायवे, हे सगळे जे प्रोजेक्ट जे आहेत, हे प्रकल्प जे आहेत ते आम्ही कार्यान्वित केले.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Listen to the voices of reason as they talk about corporate health.
Welcome back. You're watching All You Need to Know. It's time to focus on stocks that will likely buzz in trade today. And let's start with the Adani group of stocks, and quite a few of them reporting earnings. Harsh is joining in to give you some perspective on those numbers. Harsh, how did it look?
Well, let me start off, Alex, with ACC and Ambuja, the cement companies. They've had good capacity expansion, so that's the first positive when it comes to the top line numbers. But just in terms of overall realizations, they came in slightly on the softer side of things. But flat power, fuel and freight and other OPEX is what has led to the beat with regard to margin. So you've seen a margin surge in especially on Ambuja. ACC of course dissected late last week, but at least in Ambuja you saw that margin surge. Quickly switching focus to Adani Total Gas, higher power demand is what's led to the strong surge with regard to numbers. Just look at that EBITDA number go from 195 crore to 288 crore. It's a very strong number, and you've got almost a 72% year-over-year growth when it comes to your PAT as well. Also, I'd like to quickly switch focus to Adani Wilmar. You've got food and FMCG volume, which has grown, in fact, surpassed the 1 million tons mark. So you're looking at a strong number in terms of food as well as FMCG. So that's the one piece which has done well. Also, the March sales in edible oil was robust. You had market share gains in the edible oil space for the month of March as well as for the overall year. So that's the other positive. Look at how profitability here has rebounded, 67% growth in profitability. Margins also taking a good hike there in terms of the year-on-year number. Last off, Adani Energy Solutions. This is, of course, erstwhile Adani Transmission. Again, when you look at the numbers, these are sequential, mind you. So that's one. The other piece is you're looking at a 2.5% uptick in EBITDA, almost a 10% uptick on net profit sequentially. So again, a very strong number. New transmission lines came on stream, and therefore that's led to a strong PAT number. There you go. In terms of Adani Transmission, you've seen a 10% surge in PAT.
Thanks so much for wrapping that up for us, Harsh. Let's continue to focus on earnings then, and we've got Varsha joining in to give you some more stocks to watch. Varsha, what are you picking up?
Good morning, Alex. On my list, I've got two stocks, starting with Sona BLW, wherein revenue was up 19%, while if you see margins were at 28% versus 27% last year. Now, they post highest quarterly revenues, EBITDA and net profit, led by strong EV segment. And Q4 FY24 revenue from BEV, that is battery electric vehicles, stands as 32%, which is highest ever. And the increase in EBITDA margin is led by better product mix. They've added order about rupees 5,100 crore during FY24, and with that the net order book stands at 22,600 crore compared to 21,500 last year. Then we have Havells India, wherein profit rises 25%, beats estimates. If you see the key highlights for the company, switchgear delivered decent growth despite higher base, whereas cables and wires maintain growth momentum with continued infrastructure-led demand, and growth in electrical consumer durable is seen to be driven by summer-led demand. So these are just two stocks that we should keep a watch on today.
Got it. Thanks so much, Varsha, for getting us those details. A few more stocks to watch out for, and this is on account of significant updates. Richa is joining in to tell you about the likes of Wipro as well as Jindal Stainless. Richa, what can you tell us?
Thanks, Alex. Good morning. I'll start with Wipro, which has received a multi-million-dollar deal with Nokia to overhaul its employee services desk. Wipro will build an AI-powered solution which will provide real-time IT support to around 86,700 users globally across 130 countries. Next is Jindal Steel, which has decided to invest around 5,400 crore across three major expansions. Number one, it has entered a JV for stainless steel melt shop in Indonesia for around 700 crore. Next, it has decided to invest around 1,900 crore for its expansion of its downstream lines, and around 1,450 crore for its existing facility upgradation. And lastly, to acquire 54% equity stake in Chromeni Steels Limited. Next stock to watch is Gokul Agro Resources, which has got an order worth 50 crore from the Gujarat Energy Transmission Corporation Limited. Now, this is for the grid connectivity and evacuation. And lastly, Rail Vikas Nigam, which has received an order worth 390 crore, which is likely to be executed over the next 24 months.
Got it. All right. Thanks so much for getting us those details, Risha. And this brings us to the end of this edition of All You Need to Know. There's lots to talk about though before the start of trade, and you'll find all of that on India Market Open. So do stay tuned. This is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. You know, our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask, what would it take? You know, I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data answer to that question. That would include inflation expectations, and all the other data too.
Well, that was the man of the hour or the week, the Fed chief, putting it on the table, no rate hikes and a potential rate cut as early as July. Markets seem pleased, all that and more. Good morning, Agam. We've got quite a morning. Our markets, of course, did quite the U-turn on Tuesday after those record levels. Yesterday, fortunately, was a holiday.
Yeah.
We're coming back this morning with Asia looking relatively muted, but there'll be lots of focus on what happens locally.
Right, absolutely. Well, given the fact that we haven't really seen too much of a reaction when it comes to the outcome of the FOMC, and besides that, we're continuing to see earnings, and they're all mixed, but mostly positive, more positive than negative. I reckon that a lot of these factors will eventually play out and our own markets and have that impact coming through.
Indeed. Let's do a quick check of what the implied Nifty looks like this morning. Remember, we've come back after a midweek holiday yesterday. Implied Nifty indicating to a flat to slightly higher start. Cues coming in from Asia are not very strong, so most of your Asian markets are trading flat. You've had the Japanese yen, which has been a talking point as well for the last few weeks, gaining about 3% on back of intervention from the Bank of Japan in the early part of this week, and more importantly, on back of the dollar giving up some of its gains. Well, like we said, the man of the week is the Fed chief. Key highlights of the much anticipated Powell-led FOMC decision. Benchmark interest rates were left unchanged at 5.25 to 5.50, which continues to hold at a 22-year high. The Fed has said that they will not cut rates until inflation is sustainably around that 2% target of theirs. Lack of further progress on inflation, economic outlook looks uncertain. That's what the Fed has continued to maintain. The Federal Reserve's policy statement on Wednesday was more dovish, and I think that's what equity markets took a little heart from in overnight trade at the margin than markets anticipated, with no hint of a potential rate hike. So remember, from the end of last year, we've gone from rate cuts to rate hikes to stagflation to inflation, and now going back to a potential rate cut as early as July. Well, Fed has also said that they would slow down the pace of balance sheet runoff starting as early as June, again more or less on expected lines. Yields on the 10-year has dropped 9.2 pips, which is the biggest drop seen on the 10-year since Feb this year. Gold has rallied about 1% on the Fed's move. Crude has actually declined quite sharply, maybe to do with dollar weakness, and also, of course, the fact that U.S. inventories have continued to see a rise. Along with that, The Fed chair also ruled out any sort of concerns on stagflation. Remember, these were questions coming in from the media that was also present, taking the best of the opportunity to understand what the Fed's dot plot looks like. But for now, it looks like no rate hikes, and also no rate cuts until July. And in terms of important data that came out, labor cost has actually risen in the US, and that could be viewed as slightly negative, at least in terms of inflation. That was the Fed, and that was crude and gold, and Asia clearly not doing too much in early morning trade on back of that. But of course, markets weighing every ounce of what the Fed chief said with caution. Citi, of course, put out a note saying that largely in line with what the street was expecting. The fact that it was less dovish than what the margin of the market was expecting is what could be responsible for a little bit of calm across global equity markets. Couple of other things. It's going to be earnings heavy for the US. The likes of Apple will be reporting later on in the day. You had Cognizant that reported post-market hours. The stock was up 4%. Usually Cognizant is important in context of what happens in terms of IT spends. The numbers were largely below were not very strong, but they were better than what Cognizant had guided for, and that's what the company took heart from. The stock was up 4%. Top line was on the higher band of the guidance. Headcount has continued to reduce. Client wins also remain slow. But then again, the stock did react positively, and that's what we're looking at. That could have an impact on IT stocks back home, but there's so much more than just IT stocks back home. You've got earnings, you've got auto sales, you've got Kotak, you've got Godrej, and the list is extensive. But the benchmark was very interesting on what happened on Tuesday.
Yeah, I was just going to say add the expiries to that list, because it was quite a crazy expiry. The last 1 hour of trade was, some traders would call it insane. I'm going to tell you what's happened. So, it was, of course, the confluence of the Fin Nifty and the Bank Nifty expiry on Tuesday. And through the course of the day, all the way until 2 o'clock, it was absolutely flat. All the indices were consolidating, and suddenly at around 2 o'clock, you see a sharp surge upwards, taking out all the call writers. And then following that, in the next 1 hour or so of trade, you see a sharp decline. And from there onward, the Bank Nifty has fallen as much as about 700, 800 points from the day's high. Remember, the Bank Nifty was also trying to make a beeline for 50,000. But that didn't come through. So there is no doubt about the fact that these are choppy markets. There's a lot of indecision. There's a lot of uncertainty. And, for those who are very, very certain about their positions, in that case, profitability is not necessarily a guarantee for them either. What are we looking at the moment? Last Tuesday, we did see the Nifty make a new high, but it also came off from that day high and from a life high. At the moment, we are looking at the Nifty sitting at around 22,600. We have a little bit of a base being built around 22,450, 22,500. That's where we're seeing an immediate weak support of sorts. And should we see the Nifty break that in today's day of trade, again, it's going to turn out to be yet another very, very choppy expiry. And of course, today is the Nifty weekly options expiry. On the higher end, we're keeping an eye on short. 23,000 does have a lot of accumulation, but I reckon that, that's not the mark that we're going to watch out for today. We're going to keep an eye on 22,800 because that's where we have a significant amount of writing coming through. And remember that Nifty's new life high is just about 17 points, 15 points short of the 22,800. So 22,800 will be a significant resistance zone at the moment in today's day of trade. But should we actually break that, you never know. You may actually see a lot of short covering as well. In general, what has also aided the markets was that fundamentally we've seen inflows from FIIs and DIIs, and both have bought stock worth well over 1,000 crores on a net basis. Not a very large number, but the fact that institutions are buying both foreign as well as DII, that's a positive. In terms of some of your other key metrics, if I look at the Nifty put-call ratio, that's at a fairly neutral range of around 1.11. And the FII long number in index futures stands at around 52%, which is also also very, very neutral. So there certainly is going to be continued indecision. And remember that we're heading into the next phase of elections. So it's not just going to be about earnings, but also elections, and it's going to lead to an increased choppiness. And the premiums, the option premiums speak for themselves. But again, we're going to keep an eye on the 400-point range today because it's also the Nifty weekly options expiry. And well, those are the levels that we are working with.
Agam, while it's going to be volatile, let's not forget that in every election year, the month of May has actually done spectacular returns for the Nifty. So you go back to the previous election years and you've seen how well the Nifty has actually closed out for the bulls on the street. And interestingly, it's Bank Nifty that actually even outperformed the Nifty further. And we saw that trend. In the month of April, Bank Nifty outperformed the index. In fact, 3 months on a roll, Bank Nifty's actually outperformed the benchmark itself. Even in the month of April, not just comparing to the Nifty, but Bank Nifty has been an outperformer as compared to most Asian markets and most of Wall Street as well. On the 30th of April, which is on Tuesday, after it did a big U-turn, Bank Nifty did actually make a new record high of 49,974. However, it was profit booking, like Agam said, in the latter part of the session that led to the decline of over 500 points from its high, causing it to actually end slightly lower. It was volatile and we can't take that away, but the fact remains that records were made and the markets are looking comfortable. This could be par for the course is what I would have imagined. But nevertheless, we've got with us the big talking point this morning is the Fed and the outcome of that much anticipated Fed decision. We have with us a very special guest joining in to talk to us about what he actually made of that Fed move. Robert Sorkin, Senior Global Economist of Citi Research, now joins in. Good morning, Robert. Thanks a ton for joining us this morning. Robert, I mean, how are you looking at this? The last I checked was no one was talking about rate hikes. We were just disappointed that rate cuts were delayed. This morning, of course, the street seems pleased that rate hikes were not mentioned and a rate cut could be potentially down the road as early as July. How did you read into the Fed statement? Because I feel like the markets are choosing to read commentary the way they choose convenient at this stage, as opposed to actually taking it as it is or as it should be.
Yeah, absolutely. And thank you so much for having me. It was a very interesting meeting. As you noted, I think there were more market participants or greater fear among market participants that Chair Powell may put hiking again on the table, given the very strong inflation prints we saw in the first quarter, given that the employment cost index, which is the best measure of wage growth, came in far above expectations as well. But, you know, that provided some relief to markets that Powell really did not lean into the possibility of hiking further. He really feels that the rates are restrictive and that they can just hang out at current levels for longer if inflation does not make as much progress as they would like. So that was kind of a positive, that it would really take a lot from here to get the Fed to think about hiking again. Now, in terms of cuts, I think people are taking comfort in the fact that Powell did not remove completely the idea that cuts could be coming this year. He admits that progress has stalled and that they would need to see further progress to really gain confidence that inflation is moving back to target. So I think the big news is making sure that hiking is off the table, it seems, and easing is not off the table, but just perhaps more delayed than the Fed was thinking just a few months ago.
Right. Robert, we've had, of course, very clear commentary that the Fed has indicated that they need inflation to be around 2% before they even think of moving on a rate cut cycle. How do you feel that's playing out? Because we did have some data which show that labor costs were on the way up. And in the backdrop of wanting inflation at 2%, how do you view that? Do you even feel like July is even a realistic timeline? Because otherwise what's going to happen is you're going to raise your hopes on a July rate cut. None of that's going to come through, as we've seen in the last few months. And then that can gets pushed down the road once again.
Yeah, and this is really challenging. You know, our base case does remain a July cut. And Chair Powell did open the door to thinking about easing rates if they become more concerned about weakening in the labor market, weakening in activity. And so if the economy does slow down more distinctly as we go into the middle of this year, and you do see some cooling in inflationary pressures, that may be enough for the Fed to start cutting in July. But that's a very tall order. You would have to see some combination of a deterioration in activity and inflation numbers coming in good enough that they feel comfortable cutting at that stage. Now, in terms of the inflation data, assuming that the economy does remain resilient as it has at the start of this year, absolutely, as noted, we have seen both on the wage growth side and particularly within services sectors, we're still seeing fairly sticky inflation pressures, and that's really tied to that still elevated wage growth. I think that's really what you heard from Powell is a lot of uncertainty about where those numbers are heading. There are some reasons to think that the Q1 data could be abnormally strong for non-fundamental reasons. Maybe there's statistical seasonal adjustment issues within the data, but that remains to be seen, and we really need to see how the inflation and labor market figures evolve in Q2 to really get a better sense of how much signal was there from that Q1 data. And I think that's exactly what you heard from the Fed today, is that they're not really sure. They still think that they'll make enough progress on inflation this year, but Q2 is going to be really determinative in deciding, how their posture is going to look in the second half of 2024.
Right, Robert, what we really are struggling to understand is that just a few weeks to a few months ago, the narrative, the conversations have shifted from, rate cuts, which have at the moment seems to have not appearing anymore, to rate hikes at the moment. Why is there so much confusion, if I can say that, and why is it that and how does the debt to GDP picture come into or considerations as far as the Fed's concerned?
Yeah, these are great questions. I think if you go back to the beginning of the year, the market was looking at the second half of 2023. They were seeing resilient economic activity and inflation on kind of a 6-month basis, really running near the Fed's target. And you've had the market kind of pricing in a very rapid easing cycle from the Fed this year, given that progress. I think maybe the markets got a little ahead of themselves. Especially because, as we've seen over the last few months, the Fed really wants to be sure that inflation is moving back to its target in a sustainable way. So they needed a lot more data than what they got in the second half of last year. And the data, as we've talked about in Q1, have really gone against that thesis, or have really brought into question that inflation is moving back steadily towards the Fed's target. And that's why you've seen this narrative shift from nearly 6 cuts priced in earlier this year to something closer to 1, and even some people starting to talk about maybe the Fed would consider hiking from here. Again, Chair Powell pushed back against the idea. I think the bar for that is very high, but it's because the data in Q1 have really worked in a different direction that you've seen that narrative shift. Now, in terms of the government's debt, there's no question that the government is still running large deficits. Debt levels are high in the U.S., and you're seeing interest cost on that debt rise, given the large deficits and the high interest rates we have now. I do not think that's what's playing into the Fed's decision. The Fed is focused on getting inflation back to target and maintaining full employment, and is not thinking about the cost that comes to the federal debt from these interest rates. Now, for the federal government, I think that does highlight a different issue, which is that they are running very large interest costs, and there are questions about how long that type of situation can run before markets start demanding even higher premiums on government debt. So I think the government issue is separate from the Fed, but is also a concerning dynamic in this environment.
Robert, what does all that mean for emerging markets like India? We've, of course, seen FPI sell out of our markets in the month of April. China, on the other hand, has seen inflows. The Japanese yen has declined quite sharply, which has also led to some money going into China. If I had to ask you for FY25, where does India sit on the pecking order?
Yeah, and this is a great question, because for emerging markets, I would highlight a few points. One, fundamentals tend to be quite good there. We're looking for very strong growth out of India again this year. A little bit of slowdown relative to last year, but last year was an exceptionally robust pace. And more broadly, other emerging markets hold up quite well in our forecast. We recently upgraded China several weeks ago to 5% growth on the year. Data on balance have been fairly good there for much of 2024. And you can look across a lot of other EMs where we've seen broadly positive stories. So I think the EM fundamentals are in a good place, and you're seeing fairly good growth stories. India's, as I said, is a great example, but in many other EMs. Now, where our discussion today comes into play is I do think that Fed policy has a large impact on global interest rates and exchange rates and large implications for emerging markets. And what you're seeing is, I think, if the Fed is going to stay higher for longer, that I think is at the margin going to influence the decisions of other central banks around the world. And you're starting to see kind of a rethink among many central banks about how fast they can ease policy in this environment, both because of resilient activity and inflation, but also because the Fed is such a guiding light for global monetary policy. And the longer the Fed stays higher, the more difficult it is for other central banks to diverge from that. So I think emerging market stories are very good. India is very positive, but the Fed's policy is going to be very important for seeing how FX and rates evolve in EMs.
You're right. If the Fed doesn't cut rates, it's going to be bad for markets like us. But one last question before I have to let you go. How do you feel about the Indian bond markets at this stage? Risk reward in favor of Indian bonds over equity. We also get included in the JPM index, and that's been the biggest talking point for Indian investors. How does that play out? Would you pick Indian debt over Indian equity at this stage?
I think, as I said, I think India assets in general are a very positive story. I think both in terms of the debt market fundamentals and also the equity market fundamentals are very healthy. And as I mentioned, we're looking for very strong growth in India this year, but beyond that, have a very positive outlook on India in general, especially given relatively favorable demographics compared to some other large EMs. A lot of positive investment stories coming from the government as India, as well as other emerging markets, are, I think, benefiting from shifts away from China towards investment and production in other EMs. So I think that's an important tailwind for India, among many other positive growth fundamentals. So I would think that assets more broadly in India look attractive, both on the fixed income and the equity side.
Right. Thank you, Robert. Great talking to you this evening to get some perspective on the Fed, on emerging markets, and of course, Indian equities and asset prices. We'll hopefully catch you soon. In the meantime, like we said, implied Nifty is indicating to flat to slightly higher start. Just before we had that midweek holiday, Tuesday saw the markets to a very sharp U-turn in the second half of trade. So it was volatile, finally seeing the Nifty go home with a small cut, and so did Bank Nifty. The focus this morning, once again, while will remain on the broader markets and the benchmark itself, it's going to be earnings that traders and investors will be focusing on. Let's quickly highlight for you what some of these counters are looking like in terms of reporting this morning. I'll start with a couple of cement majors, AC. So Adani Group companies reported earnings, and they were pretty impressive to say the least, but we'll start with ACC Ambuja. Numbers reported from the cement majors was largely better than what the street was expecting. Good capacity expansion led to an improved number on top line. Revenue for ACC was up 13% and profitability improved substantially, up 300%. Overall realizations though were on the softer side. Margins on the other hand for Ambuja, if we can move on to Ambuja very quickly, were not looking too bad either. The numbers were good. The margins also saw a big surge coming in on Ambuja. So that's clearly what we had in terms of earnings from ACC Ambuja this morning. Along with that, Adani Power as well reported numbers. Largely speaking, those numbers were more or less in line with street expectations. You're seeing a 47% decline on profitability because of deferred tax, which had a positive impact on the company in the same quarter last year, was of course a negative one in this quarter. So core business continues to do really well. The weakness on profitability is only because of an item which is outside the core business. Revenues improved substantially for Adani Power, up over 31% to come in at 13,364 crores from 10,242 crores. Margins also expanded substantially to come in at 36.29% versus 18.62%. So all in all, good quarter for Adani Power, good quarter for ACC Ambuja. Both those counters are going to be what you want to watch out for this morning. While realization for Ambuja Cement was slightly softer, the fact remains that the numbers apart from realizations look good. Top line, of course, seeing an improvement on back of capacity addition.
All right, well, moving on to a handful of other good numbers coming in. And of course, right at the top, we have Havells. It's something which has been in focus. Remember also that last quarter, we had a lot of volatility with respect to one of its peers. And that's where Havells did get a lot of impetus. But, you know, as far as the numbers are concerned, it does seem like it's a beat. It's higher than expectations. So we're looking at revenues, which are rising around 12%. But what's really heartening, I reckon, is the improvement in operations, which is why we're looking at a net profit number higher by around 25% on a year-on-year basis. Again, you know, the switch gears has delivered a decent growth despite higher base. We've seen cables and wires maintain growth momentum as well as far as Havells is concerned. It does seem like an expensive stock at the moment, but, well, you know, we don't have too many with the kind of growth profile, specifically when it comes to the bottom line. And Havells, of course, is one of those steadier options available in the markets at the moment. Let's not forget that growth in electrical consumer durables has also largely driven by summer-led demand, which has, of course, been the case in terms of peers as well, but that's panning out well. The other stock that we want to have in focus and talk about is IndiaMart Intermesh. Again, this is another company which has continued to do well. You know, steady numbers coming in, 17% growth in terms of revenue. We're looking at a 78% growth in its bottom line at 100 crores against an expectation of 80 crores. So it's a beat there as well, an operational one. And I reckon that a lot of investors who are already invested in this will be happy with the kind of performance that IndiaMart Intermesh has come up with. And we also talk about Gravita India. This is a relatively lesser known stock, but there are a lot of high net worth individuals who are tracking this one. Of course, this is one is into lead products. It's also had a fairly good quarter coming in. We're looking at 15% growth in revenue. Its EBITDA is up as much as nearly 14% as well. And its profit has, well, up just around 8.5%. But that's because of certain operational difficulties through the course of the quarter on a year-on-year basis. We've seen a marginal decline in its, as far as margins go. Overall, board has approved an interim dividend, but the volumes growth, that looks like it's coming in at around 14%. So I reckon that is the realizations which have weighed on the revenue. But all in all, it certainly does look like a reasonably good quarter. And the other big takeaway, of course, here is that Gravita is looking to diversify into lithium-ion, steel, and paper recycling as well. It's something that could eventually add more avenues for revenue for the company going ahead.
And I'm just going to continue the list of reporting because that's an extensive one. Adani Total as well reported numbers, good set of earnings. They've also announced a dividend. Net profit was up 72%, and that's what the markets will take heart from. All in all, solid quarter on Adani Total. in terms of reporting revenue of 71.6%. Net profit was up to about 168 crores in the fourth quarter against 98 crores in March 2023. Revenues rose 4.7 crores to 1167 crores in the last quarter against 1114 crores. They've recommended a dividend of 0.25 paisa per equity share, 1 rupees. So that's a pretty good set of earnings coming in from the Adani stable. Along with that, Adani Wilmar as well had a good quarter in terms of what we've seen. The food and FMCG volumes have hit the 1 million ton mark, and that's what the street is going to be excited about. EBITDAs have sprung up very, very sharply, up about 103%, to come in at 363 crores versus 178 crores. Profitability also saw a huge jump of 68% with a reporting number of 157 crores. March sales in edible oil was also very, very strong, which led to a little bit of a bump up in terms of what we've seen on numbers. So Adani Wilmar, Adani Total, Adani Power, ACC Ambuja are some of and Adani Energy are the counters that reported earnings. Just a quick disclaimer, the channel you're watching is a group company of the Adani Group.
Right. And we'll move on. We have auto sales which are starting to come in. And right at the top, of course, we have Maruti Suzuki. Now, on a year-on-year basis, if you keep an eye on that, we've not seen a staggering growth here. But and it's actually, in fact, the numbers slightly below the street expectations as well for the month gone by. And as far as Tata Motors is concerned, that's also something that you can keep an eye on. Again, only a tad bit lower than street expectations when it comes to the monthly numbers coming in. We move on to the two-wheeler segment, where we have TVS Motor Company. Again, good growth coming in as compared to last year. But, and of course, this one is higher than expectations as well. Eicher Motors, on the other hand, while it's also looking at a good growth coming in, that's also slightly higher than what the street was working. In fact, all the two-wheelers so far are looking at good numbers coming in. And, it's the same for Hero MotoCorp as well. Coming down to commercial vehicles, again, well, a little bit of an outperformance for Tata Motors commercial vehicles, not as much for Volvo Eicher, and Escorts largely in line with expectations. Moving on to RVNL, we do have yet another project being won. This one is worth around 391 crores. And talk about Indus Towers' earnings as well, looking at 6.5% growth in revenue. Margins have, well, expanded by as much as 600 basis points nearly. That's coming in at around 57%, and profits are looking up at around 32%. So good earnings, operationally beat as far as Indus Tower goes.
Yeah, you can add Sona BLW to that as well. Good earnings from them and good earnings from Vedanta Fashion. We will, of course, analyze that with our guests shortly. But a quick mention before we go into a break is going to be Kotak. The joint MD KVS Manian has stepped down. Now that it could potentially be another slew of bad news coming into the counter. So watch out for how Kotak reacts in trade this morning. There is conversations and we have some information that he could be moving as to federal banks. So those are two counters you want to watch for in trade. BSE as well, they've revised their charges on derivatives, all that and more on the other side. But that's a whole bunch of counters we will be tracking in trade. We'll take a break. We'll come back and set you up this morning as we gear up for another volatile session on D-Street.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to
Welcome. This is India Market Open, where we are taking stock of the futures and options space. It was an extremely choppy day of trade when it comes to Tuesday. The last 1.5 hour on Tuesday was an extremely difficult one as well, with a significant sharp moves both on the upside and the downside. Today is the Nifty weekly options expiry. Can we expect more difficulty when it comes to trading? Well, it's not an easy time to be an options seller in such markets, but I'm going to start with the basics. Let's talk about the futures, and we didn't see too much change in the underlying. At the end of the day, the Nifty did come off by less than 0.2%, and we saw very little change in the open interest as far as the May futures go. The Bank Nifty futures, again, the picture wasn't very different, though we did see an increase in open interest there, but the index looks flat. But don't go by the absolute number, because the Bank Nifty was a little bit of a chaotic, we did see a little bit of a chaotic move in the last 1.5 hour of trade. Of course, this was punctuated by the fact that both the Fin Nifty and the Bank Nifty expiries were on the same day, and that could have potentially led to a lot of rockiness in the last couple of hours. But moving on to the options market today, we have the weekly Nifty weekly options expiry. This is your overall open interest distribution picture for today's expiry. While 23,000 call does have significant amount open interest, I reckon that it's not going to be as relevant as perhaps something like a 22,800 call, where you do have a reasonable amount of calls being written there. On the lower end, once again, 22,500 puts are the one with the max OI at the moment, but I reckon that given the kind of volatility, given the kind of choppiness that we've seen off late, I reckon you could potentially keep an eye on something like a 22,300, 22,400 as well, in order to give you a wider range. But moving on, in terms of stocks, keeping an eye on something like an Exide and HDFC AMC, which did in fact see longs, shorts for HCL Technologies, Dr. Reddy's and Birlasoft. And on the other hand, in terms of stocks which saw unwinding, we saw about a short covering for Jubilant Foodworks, Shriram Finance, SBI Cards and Escorts. But moving in, what can we expect from the markets? And based on the expectations, how can we place bets in the options market? Well, let's get an expert here. We have Rahul Ghosh of Hedge.in joining us in the show today. Rahul, good morning. Thank you so much for joining in. Let's start off with your overall view on the benchmarks, the Nifty and the Bank Nifty. What's the way forward here?
Good morning, and thank you for having me. So if you notice, for the last couple of weeks, our view has been that May is going to be a 5-week expiry, and 5-week expiries are generally volatile in nature. And true to that, that is what we are currently seeing playing out in the markets. Two levels I want you all to look at. Number one, I expect May series to see sub 22,500 levels. That is point number one. Point number two, the current range is between 22,550 and 22,800. If you have a close below 22,550 today, which is just about 50 points away on the downside, you will see 2-3 days of consolidation or 2-3 days of down move. That is point number one. Point number two, if you're looking to go long, I would suggest wait until 22,800 gets crossed, because the rejection that happened on Tuesday was not a small rejection. It was almost 250 points on the downside from the peak. So it's time to be a little cautious when that kind of rejection takes place from the high the third time round. Coming towards the Bank Nifty index, it's a better index to play for the long side. However, the concentration of short straddles around 49,000 and 49,500 makes us believe that there might not be any sharp down move or any sharp up move, at least for the next week to come.
All right, but based on that, Rahul, how are you placing your option structures? What kind of option structures are you playing as far as the Bank Nifty goes?
So we're looking at a bullish to neutral structure in Bank Nifty, taking into consideration the open interest data that I just mentioned about. So we're planning a call butterfly. Generally, the structure of a call butterfly works where we buy a call, we sell 2 calls, and then we buy a call. It's basically a forward-looking ratio spread with a protection on the upside. So the first leg over here would be 49,700. What we're doing is we're looking at the 15th May expiry, which is about 2 weeks away. So we buy the 49,700 call. We sell 2 lots of the 50,200 call. Once again, 15th May expiry. And we buy again the 50,500 call, again of 15th May expiry. Now, when will this trade make money? This trade will make money if Bank Nifty moves up and stays anywhere above 49,700. Point number 2, if Bank Nifty stays sideways for a couple of days, this trade will again make very, very small, but would still make money. And if Bank Nifty moves towards the downside, which is contrary to our view, the loss in the trade would be approximately 100 points or 1,500 rupees based on the lot size of Bank Nifty. One more point over here. In case you see Bank Nifty below 49,000 and you're above 10th of May, one can even roll down the sold calls to make the risk in few hundred rupees, that is 500, 600, 700 rupees, to make the trade even safer. But it's important to note that this has to be done only after the 10th of May and only if Bank Nifty is trading below the 49,000 level.
And of course, you stand to make the most if the Bank Nifty is close to around the 50,200 mark, in and around, and of course before 15th of May. But Rahul, let's move on and talk about stocks as well. The first one on your list, I reckon, is SBI. Can you take us through that one?
So the last 2 weeks we had, if you remember, Tata Motors and BHEL, and both we played on the long side. Thankfully, both played out very, very well. Both gave good return on capitals from a bullish strategy. Today, we're looking at M&M rather than SBI, and we're giving a slightly conditional buy in M&M. The current market price is around 2070. Beg your pardon. The current market price is around 2050. Above 2175, we can initiate a long, or if you see some correction towards 2100. So both cases, I'm keeping it open. I repeat, above 2175, or if there is a retracement to the 2100 level, we can plan a bull call here as well. M&M is actually at its all-time high. And in general, if you look at the auto sector, it's one of the better sectors which should continue to perform for this year. So we can look at the 2200 call and the 2240 calls sold. That is a simple bull call where we buy the 2200 call and we sell the 2240 call, keeping the caveat of these 2 levels where the trade has to be initiated in.
Okay, well, a straightforward bull call spread being played on Mahindra & Mahindra. Rahul, on that note, taking a moment to thank you for joining us and taking us through your views on the markets, as well as helping us with a handful of option structures that we can in fact deploy on the ideas that you've given us. With that, it's back to you, Samina.
Thank you for that, Agam. That, of course, is the F&O picture. It looks like it's going to be an interesting, volatile day of trade. Between all that, there's going to be important, and this one actually comes in from a standpoint of an old conglomerate as we know it. The 127-year-old Godrej company has been split. In fact, the Godrej family has reached an agreement to split the conglomerate into 2 branches. As per the settlement, Adi and Nader Godrej will control the listed companies, while cousins Jamshed gets the control of the unlisted entities and the land bank. Well, the agreement which was submitted to the exchanges will address the issue of royalty, brand usage and land bank development. Also, what you want to keep in mind is that the lawyers who did advise both parties have said that this was done amicably well. It was done over a period of 4 years. And of course, with the good taste that this was done in, it could be the blueprint for future, of course, realignments of families that may come our way. Along with that, Cyril Shroff has also said that the negotiations stretched 4 years, and this included the COVID period too. He does say that these sort of matters move very slowly, but the good thing here was that the family was very dignified and took advice seriously. The process was complex, and in the end, there were solutions for everything. Prabal Basu Roy, board member and advisor to the board chairpersons, now joins us. Good morning, Mr. Roy. Thank you very much for joining in. Mr. Roy, a 127-year-old family finally gets realigned. The split from the way we know it is going to be where Adi and Nadir Godrej will control the listed companies, while cousin Jamshed gets control of unlisted entities and the land bank. What did you make of this? This was amicable, there was a process, it was complex, but solution was found. I guess this does become the blueprint of future realignments of families that we may see come our way.
Good morning, Samina. Good morning. See, there are multiple aspects to this, like this was obviously done for succession planning at the group level, responsibility to stakeholders, and social responsibility. I think they took all these three into consideration while designing this package to make sure that such large groups, when they split, things can go horribly wrong, like with massive, value destruction, like say in the case of Reliance and Ambani side, or Thappers for that matter. So I think due care was taken, and the thing which I liked, as you rightly said, and I expected no less from the House of Godrej, was that it was done very quietly and professionally over the last 4 years. And most importantly, in a respectful manner in which it was achieved, and therefore the spirit in which it was done. And that is very important. But having said that, Samina, if you have a minute, I would like to touch upon another aspect, which is the larger aspect, actually. If you have time, I can talk about that.
Yes, please.
See, and that aspect is, and I'm writing about this, like it or not, in our part of the world, family control will remain, and promoter-driven entities, the matter of succession will come up with every generational transition or two in terms of distribution of assets. Now, this is very different from what is there in the West, where most family groups, retain shareholding, a significant shareholding, but the management control has migrated to institutional shareholders-backed managements, professional managements. And the reason for that is massive size and massive complexity. I'll give you an example. I'll give you a few examples. Just take Fortune 500 companies. The Dalton family controls Walmart in terms of shareholding, but not in terms of management. The same is the story with Ford Motors, Koch Industries, Cargill, Hearst Corporation. In Germany, it is the Quandt family which controls BMW through shareholding, but not management. Henkel, Mark, Bosch, many of them. In Sweden, Ericsson, Electrolux, ABB, Volvo, they're all controlled by the Wallenbergs, but they don't have any say in the management. Now here, by splitting these assets in most cases, we are by definition restricting the size from getting bigger, from getting really massive and world scale. And so it's a governance thing. And over the next maybe 100 years or so, who knows? This could happen in India too, when family members realize that, they may not be willing or competent to manage these enterprises on such a large scale. The Ambanis, for example, at the moment, will be a very good, interesting case study in the next 3 decades, despite, the current patriarch having taken extreme care and caution in handling the succession. Same goes for Wipro, same goes for HCL. So we are in very interesting times because India is now growing, the enterprise sizes are growing, and yet, it's not fully there in terms of creating mega corporations which can dominate the world. So that's the larger picture.
Right, Mr. Roy, it's all about succession planning, family constitution, being custodians of the significant wealth that some of these promoters have amassed. But one quick question, and I want to talk to you about minority shareholders, because you said that these companies were run by institutions. They are enterprises in their own sense. These are not family-run businesses, even though that's what the foundation is. Will this split have any impact on minority shareholders, in your opinion?
No, I would see that depends in the Indian context. That depends totally on the quality of the promoter. I've written about this multiple times. In governance, you can bring any number of rules you want and laws you want, but unless the promoter believes in minority shareholder rights being aligned to the majority shareholders, it will not work. And there are enough loopholes to make sure it doesn't. Most of it being board governance, etc. Now, as far as the House of Godrej is concerned, I have full confidence, given the past track record, that minority shareholders will not be shortchanged in this entire split, and they will continue to benefit. And the size in which Godrej is, by actually splitting the private company out and keeping the public company separate, and there is huge value unlocking, which is definitely possible, which has probably driven this thing. Because, the private company over time can obviously list itself and go its own direction and so on and so forth. So, yes, as far as the House of Godrej is concerned, I'm personally very confident about the minority shareholders fund.
And very last quick question, Mr. Roy. They've said that, of course, the realignment will be implemented after the necessary regulatory approvals. What sort of timeline do you anticipate this to take? Historically, how long does stuff like this usually take for clearances?
See, there are three aspects to a merger or demerger of this size, or a split of this size. One is the legal side, which is, essentially, with the authorities, you get into issues like the differences in valuation, and therefore stamp duty and therefore registration and so on and so forth. The other is the financial side, which I think has been agreed between those two sides, and there should not be any problem. And third is purely regulatory, which is the question of approval. So between the legal and regulatory side, I think, especially because that huge land parcel is involved in Vikhroli, I would think anything between 2 years or thereabouts it will take, provided there is no bickering inside the family, which won't happen. In this case, it won't happen. So about 2 years, let's say about 2 years.
Right. Thank you, Mr. Roy. Great getting perspective from you to understand what this means for the Godrej family, what this means for India Inc. and other founder-led companies. It's all about governance, succession planning, family constitution, and this could really be a blueprint for future realignments of companies and corporates. We'll move on from there. There's so many more stocks, and markets, of course, continue to be the biggest talking point as we gear up for pre-open trade. Soni Patnaik and Nirav Asher both join in with their sense on the markets. Soni, I'll start with you. What happened on Tuesday? It was looking really good after a very sharp up move on Monday. Tuesday, up in the first half, new records were made on Bank Nifty and Nifty. And suddenly, boom, right? We've not only just given up the day gains, but we also actually went home with a cut. As we gear up this morning, how would you trade the index?
Hi, good morning, Samina. Thank you so much for having me on the show. See, of course, on Tuesday, we saw some profit booking taking place in the second half. It was mostly on expected lines just ahead of the FOMC meeting that was due last evening. And, it's just a good sign that, both the indices, they've entered their support level. And it is very crucial because from this support, one can reinitiate the long. So somebody who would have missed out the chance on a Bank Nifty's move, which it tested nearly 50,000 and has completely missed out, it's a good chance that the correction has happened on Tuesday. It has approached the support levels because Bank Nifty is at the edge of its support of 49,000, 48,600, very strong support. So this can be a good level to reinitiate the buy again. And, Bank Nifty can test 50,000. Clearly, it has more strength along rollovers for Bank Nifty from April to May series, and it could just be the beginning. There is a minor hurdle of Bank Nifty around 50,000. Any move above that, you can also see 50,500, 50,800 levels. I think similarly for Nifty, it did make a new all-time high, but of course it was just on a caution note that, it saw some profit booking. There's a range for Nifty right now from 22,600 to 22,800 as well, you can see. So this range may remain for some time. So I think it's a good play. A range play can come out, buy at the lower end of the support range, and then you can sell it at the higher end of the support range. So the range. So maybe from 22,600, one can initiate longs, keeping a stop loss of 22,500 on closing basis. And it also again bounces towards 22,750, 22,800. You can book. Fresh upside for Nifty can only be seen above 22,800. So above that, Nifty can make its mark towards 23,000. So out of both the indices, Bank Nifty is still holding more strength than Nifty. And both the indices, Bank Nifty can clearly show you a buy on dip sort of a formation even now.
Let's get in Nirav Asher into the conversation. Nirav, good morning. Thanks for joining in. I'm going to start off with your view on the Godrej Group companies. I reckon that nothing fundamentally has changed for these companies. There may even be a sentimental uptick because of the fact that, this has all been resolved very amicably. Still, if you consider something like a Godrej Properties or a Godrej Consumer Products, these are perhaps at the forefront of the entire group. Your view on these companies going ahead?
Yeah, good morning and thank you for having me on the show. Yes, I think a legacy of 127 years, and we are seeing a settlement, a family settlement, which has been done in a very, very harmonious way. And the way it has been said is that it's an amicable settlement which has been received. It's likely to be received well by the markets, because we are seeing the listed companies being handed over to Adi Godrej and Nadir Godrej, and these of course include the likes of Godrej Industries, Godrej Consumer Products, Godrej Properties, Aztec Life Sciences, etc. And Godrej Boys and the 3,400 acre land parcel at Wipro being handed over to Jamshed Godrej. Now, I think the shareholders will be more concerned about entities like Godrej Consumer Products and Godrej Properties in particular. But the way it has been coined is that there has been the memorandum of understanding which has been signed between Godrej Construction, Godrej and Boys, which owns that land parcel, and Godrej Properties will continue in the same spirit going forward. So I think it should be a big relief as far as the shareholders are concerned. And hopefully, I think with the baton passing on to the new generation, I think there will be a lot more vibrancy in these companies going forward. So I think we expect something positive to come out of the way this settlement has been worked out.
Sony, your picks this morning, there's lots of earnings, which of course will see stocks react, but anything on the charts that looks good to you or not so good to you?
Samina, the first pick would be in Power Grid. We've seen a clear, strong, fresh breakout coming in Power Grid. It has also given a very strong close above the 300 level, which used to be a resistance earlier. I think it's a strong sign. There is also fresh short covering seen on Tuesday as of the closing happening in Power Grid. From current levels, one can enter longs, keeping a stop loss of 290 and a target of 320, 325 can be seen in Power Grid on a positional basis. The second pick would be from the banking space, like I just mentioned, because Bank Nifty is holding a lot of strength and a good buy on dip sort of a formation. The pick comes in SBI. So SBI, we've seen 2 days ago, it had given a very strong breakout above 800, still continuing to hold above 800 levels. So one can buy on this small dip that we can see in SBI towards 820, 815, keeping a stop loss of 800, and the stock can be a stock of a May series. You can see it testing higher levels of 860, 880.
Sony, Nirav, stay with us. We're gearing up for an exciting and volatile day of trade. We'll take a break. We'll come back and continue our conversation.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on big
Welcome back. This is India Market Open. We're taking stock of the auto sales, all the volume numbers that have come over the course of the last couple of days. Let's get in my colleague Puneet to tell us all about that one. Puneet.
Yeah, thanks for that, Agam. So we're looking at a lot of winners as well as losers in the April auto sales which are reported until now. Do note that they're still trickling in, so expecting the numbers for a couple of automakers still. But one of the key notables was on Maruti basically. So it's come in lower at roughly 5% sales growth versus expectation of 10%. Do note that the company has announced the launch of the new Swift, which is expected to, and the bookings of the same have already started from the 1st of May. Analysts do estimate that there has been, because of the new launch, they've taken back a little bit of the other compact, the older Swift, which would roughly be around 15,000. Tata Motors, on the other hand, the PV sales have come in slightly subdued, just 2% growth compared to the previous year. While we look at the two-wheeler companies, TVS has reported a really strong seller set of numbers. Domestic motorcycle market really strong, coming in at 27% year-on-year growth compared to the previous year. While on their EVs, it's key that the FAME subsidies have been reduced now under the new scheme, but they've sold roughly 17,000 vehicles compared to just 4,000 to 5,000 in the previous year. So they're continuing the momentum from financial year 2024. While for Eicher Motors, they've crossed the 80,000 sales mark. This has eluded them for a lot of times in the past few months. So a strong show from Eicher as well compared to the analyst estimates. While in commercial vehicles, Tata Motors has shown really strong growth, coming in at roughly 29,000. Both analyst expectations as well was flat, coming in at just 22,000. So really strong show coming in from them. We do see that the Navratri as well as the Gudi Padwa festival in April would have been key to the strong growth. While on the other hand, VECV, which is the Eicher Motor commercial vehicle arm, has shown a really degrowth, coming in at roughly 5,300 vehicles versus expectation of 6,500. Finally, Escorts also just flat. So we're expecting numbers from M&M as well as Bajaj Auto soon. Back to you guys.
It's been a good quarter for some of those like TVS. The monthly numbers were impressive. Maruti as well. It's been third straight month of not such great numbers, but nevertheless, the brokerages don't seem too disappointed at this stage. Nirav, what stood out for you on those auto sale numbers for the month of March? April, actually.
Yeah, for the month of April, I think we've had some reasonably good numbers. Nothing really to be disappointed about. I think, as we've said, that it's been a virtually flawless performance by the auto sector. But there, of course, there is some slowdown at this point of time. But we've seen two-wheelers which have performed quite well. I think Hero MotoCorp has reported a 35% jump in the sales on the back of very good export sales. We've seen very good performances coming in from TVS Motor Company. And as far as Maruti is concerned, there has been some softness, but I think the utility vehicles have done quite well, and the export performance has also been quite good. So that is a positive factor. And tractors have seen some slowdown. We are seeing some slowdown in construction equipment segment also from Escorts Kubota. That is because of the election factor also. I think there's been some slowdown in construction activity on account of that. But commercial vehicles continue to do quite well because the infrastructure sector still continues to perform well in the economy. So I think no reasons to despair. I think the performance still continues to be quite strong. And we also expect some good numbers from M&M and Bajaj Auto, especially Bajaj Auto on the export side. It will be important to monitor the performance.
Sony, very quickly, I want to take your view on, okay, let's actually start with auto stocks because they were the big focus on Tuesday as well before we go into some of those earnings reaction. Anything in the auto pack that looks good? The likes of M&M, Hero, Maruti, anything that would be a good trade this morning?
Stocks from the auto space which have given a very fresh breakout and some good positions. One would be Ashok Leyland. It has given a fresh breakout, was struggling quite a lot to cross at 190, 192 mark, and finally it has done so. Today's pre-open is seeing that it can test 200 levels, but I feel that this could just be the beginning because it has given the breakout after a very long time. So Ashok Leyland for a positional play looks quite strong to test 220, 225 even from current levels. And there's a very strong support of 185. One can maintain a stop loss at 185 and look for higher targets of 220, 225. The second pick would be Bajaj Auto, which has seen on Tuesday it has taken a good support around 8,800, and today could be quite interesting to see because if it holds the 8,800 support and tries to take out 9,000 level again, you can see it retesting the 9,200 even plus levels. I think these two stocks can be quite kept in the radar for from the auto space.
All right, well, since we have spoken about auto, let's move on and talk about the cement space. Maybe we can get in Nirav to talk about what's actually standing out. Of course, we had earnings from ACC Ambuja. The day before that, we had earnings from Ultratech Cement as well. Nirav, how is the sector looking? Any standout numbers for you? Any opportunities in this particular sector at the moment?
As far as the cement sector is concerned, we started to see the pickup in demand from the last month of Q3, and slowly the demand has been picking up, and that has in a way put pressure on prices. The realizations have been under pressure, but at the same time there have been stable raw material prices, and there has been a fall in the power and fuel cost. So to that extent, I think it has offset the damage. And as far as the results are concerned, I think we saw numbers from Kesoram and Dangya Bharat which were disappointing. But I think we've seen very good numbers coming in from Ultratech, which now has a capacity of close to 150 million tons per annum, and a very, very strong EBITDA being reported close to 1,200 rupees per metric ton. So that is one positive which I see Ultratech Cement. And the second is, of course, Ambuja Cement, which has a capacity of 79 million tons per annum, and it's targeting 140 million tons per annum by 2028. Now, the best part about this is that Ambuja Cement says that cost optimization is the core of our strategy, and they have reported a massive improvement in the EBITDA per ton. Now their EBITDA per ton is close to 1,085 per metric ton. So I'm very excited about the prospects of these two companies going forward as far as the cement space is concerned.
If you can also come in on Kotak Mahindra Bank, of course, we've had the RBI initiative against the bank at the moment. The bank after that and has since made certain changes in its leadership as well. But given the kind of sharp knockoff that we've seen in this particular bank, at this point in time, the market is split between whether or not this is actually an opportunity to buy into it, or perhaps it's a wait and watch mode. Which camp are you in?
I think it's better to wait and watch because a lot of negative developments over there, and I think it's better to let the dust settle, wait for some clarity to emerge on the path forward, and then decide to take the lead.
Right. Well, a couple of other stocks, Sony, that caught our attention was, of course, I'll get a view on fundamentally as well from Neera, was REC. They reported numbers, but like the last quarter, did a 10% up move on back of numbers. As we gear up this morning, Sony, how does REC look? And in that same breath, you've already talked about Power Grid. PFC could be another one, PFC and REC.
Samina, for REC, of course, these important support now to look for would be 490. So if it's not breaking 90 today, defending the levels, you can see it retesting the higher levels of 525, 530 also as we speak. Of course, on Tuesday, we've seen a good breakout on charts backed with volumes. So I think it's very important if it holds the 490 support. So talking about PFC, similar formation again on charts for PFC as well. For support levels, one should look forward to 430, 426 as a support range. If it's holding, then the stock definitely can retest its higher levels of 470 plus levels. So I think these two support would be quite crucial for both these stocks to hold today.
Well, it's going to be important to watch out for both of them in today's trade, but they've been a very, very sharp rally coming in on those counters. While we were talking about Kotak and what that means with the joint MD now stepping down is something that we should find out. Nuvama, I believe, has a rating on that and a call on that. Mahima is standing by with more on it. Mahima, what do you have in terms of brokerages this morning?
Right, Samina. So I'll start with Kotak Mahindra Bank. Nuvama has downgraded Kotak Mahindra Bank to reduce, and it has cut its target price from 2095 to now 1530. They're saying that the negative events and high attrition make the outlook for Kotak very unpredictable. They've also said that recent changes shall hurt the growth and profit at least for next 12 to 18 months. They're also saying that losing a long-standing key manager person is a negative amid the many KMP exits that have taken place in the last year. Digital prowess flagged off as a key strength is lacking and viewed by the regulator. They're also saying that RBI's digital ban shall put the bank 1-2 years behind the aggressive peers and recommend switching to ICICI, Axis, IIB, HDFC Bank for a 1+ year horizon. The next important brokerage that came out was CLSA on InduSInd Towers, which could possibly move the stock. They've maintained buy with a target price of 450, which is an upside of almost 26%. They're saying that revenue are in line with estimates, EBITDA and PAT are above their estimates. They're saying that they added more than expected towers as per CLSA's expectations, and Vodafone fundraiser will provide growth to Indus Towers. And lastly, they have said that potential stake sales could reiterate multiples for Indus Towers. So these are the two important brokerages for the day.
Well, okay. Mahima, thank you so much for getting us that update on, as far as brokerages this morning are concerned. Indus Tower, of course, has come out with good earnings, operationally a very strong set coming in as well. And it's something to keep on your radar as well. Nirav, Indus Tower, is this on your radar? Along with that, the rest of the telecom sector, what's the way forward here? Anything that you like, dislike?
Yeah, actually, as we've maintained this view that the strong response to the Vodafone FPO has augured well for the entire sector. And of course, we've seen strong performances coming in from the rest of the industry players also. We've seen Jio platforms perform quite well. We've seen Bharti Airtel hit a record high. And I think this positive development at Vodafone augurs extremely well as far as Indus Towers is concerned, because of course It is the backbone infrastructure as far as the telecom industry is concerned, and very, very essential service for the sustainability of the telecom services. So continue to maintain a strong view on Indus Towers.
Call coming in on Indus Towers. The stock, of course, was in pre-open is about 1% higher. Let's quickly address a few other names in pre-open trade. If you can get Kotak, let's see how that is doing after the announcement of the joint MD stepping down. Another 2% cut on Kotak Bank is what we have. ACC, Ambuja are some of the ones that will be reporting, reacting to their earnings. REC, after a sharp up move on Tuesday, may see some more traction this morning. Flat to slightly high is what we have in REC. Along with that, stocks like Havells, Vedant Fashion will be responsive in terms of what their earnings were like. Auto companies also, so Maruti, Tata Motors, TVS are counters you want to keep on your radar as well. Sony, apart from that, a few other counters that I want to talk to you about is railway names. RVNL, of course, has had a big order win. But anything else in the railway pack that you'd consider for the May series just before the election outcome?
I think the entire sector seems to be sort of, a bit of a sideways entire range. And, if you just look at, have to pick, then maybe IRCTC can be definitely looked at. There was some good rollovers on the long side above 90% for May series. And the stock is also holding strongly above the 1,000 level. So as long as it's not breaking the 1,000 level, the stock can definitely retest 1,060, 1,070 range. Any fresh upside can be seen above that range where it can head towards 1,100 plus levels. I think the stock is pretty much at a good risk reward ratio, and if it holds 1,000 level, takes out the resistance, then definitely there's some significant upside can be seen in the May series.
Sony, I do want to very quickly and specifically talk about Nifty's intraday view, because today is the weekly options expiry, and we've all observed what happened last Tuesday. If you just consider today's day of trade, because it's the weekly options expiry, what would your trade be? What levels would you watch out for? Would you deploy options at any point in time?
Agam, if you look at just for intraday today's expiry move, then 20-500 seems to be a good support for intraday. As you can see, the put call ratio of 20-500 strike price is still holding quite strongly above 1.4, which is indicating that the put writers are ready to defend this level today. The expiry range seems to be between 20-500 to 20-600, 650. And, not a lot of upside can be seen. The range can be quite, it can play out in a more of a sideways trend for the day. Last hour, of course, there can be a volatility move we can see. And if it's able to take out the resistance of 20-600, 620 bare minimum, then we may see some 50-70 points on the upside coming in. So I think fresh moves, there could be two sort of strategies to apply for the day. One could be to buy on dips around 20-500, which is a support, keeping a stop loss of 20-400 in cash levels. And from there, it bounces to 20-550, 560 or 50-60 point gain, one can book profits. The second round of strong move on the upside can be seen only if it's able to cross the 20-600, 620 resistance for the day. Above that, at least another 20-700 levels can also get tested. So these are two sort of strategies one can apply for expiry move today.
Right, that's the word coming in on the Nifty and Bank Nifty. And of course, as we gear up this morning, there'll be lots of stocks that will be reacting to their earnings. You've got auto sales, you've got corporate action for the likes of a Godrej and even a Kotak for that matter. Broader markets, remember, will be in focus once again. Lots and lots of broader market stocks have reported earnings, so the likes of an Havells, to an Indus Towers, to the whole bunch of Adani companies as well that will be reacting and responding to the earnings that we've seen. Global cues were almost flat or largely behind us in terms of a no action coming from the Federal Reserve, largely in line with expectation. OMCs will be in focus on back of weakness on crude, so stocks like BPCL, IOC, HPCL could be seeing some buying in today's day of trade. Bank Nifty will be interesting as well after a record high that was in on Tuesday, did a pretty large U-turn. Whether or not that stays is what we should be watching out for today. It's a flat to slightly lower open, pretty much what we've seen across global equity markets. Asian markets are trading flat. The Nifty as well not doing too much in terms of trade this morning. Bank Nifty as well trades flat at at 49,372. The broader markets are outperforming the benchmark, and that's a trend we usually quite like. The mid-cap index is up 0.3%, and the small-cap index also trades with a gain of 0.3%. The Sensex is oscillating between gains and losses, just like the Nifty. The Nifty now, after a flat to lower start, has turned positive again with a 0.1% gain on the Nifty 50, 22,600 being respected in early hours of trade. The breadth is looking good, and I think that's what the street will be very happy with. Like I said, your OMCs are going to be in focus this morning, largely on back of lower crude prices. BPCL is up 2%. HPCL IOC, which Agam will bring to you, will also see some traction in early hours of trade. Power Grid continues its up move. It was a stock that was looking very strong technically, continues to have it pretty good in trade this morning. Adani Enterprise is also having a good morning. M&M is up about 1.5%. It was your biggest gainer on Tuesday after their recent launch. And auto numbers, the stock is up 2%. Banks are not looking too bad. Steel companies are also having it higher. Autos again this morning are trading with a clear positive bias. On the sell side, the Joint MD KVS Manyan stepping down means Kotak is sulking. The stock is down 2.5%. In this 1 week, the stock has declined quite sharply in terms of trade. Metals are seeing a little bit of a soft day. Maruti, like I said, has had 3 months of weakness in terms of auto numbers. The stock is down about 1%. DV's HUL seeing some profit taking, but largely speaking, it's a decent day, Agam. It's flat. It's consolidating. There's a little bit of a positive bias, but the breadth is not so bad this morning. And I'm guessing the street will be taking heart from that.
Yeah, it certainly will be taking all those factors into consideration. But we're also taking stock of the earnings coming through. And of course, from the broader markets, let's pull up all the companies which will be in focus, see how they are in fact reacting to earnings. Havells, of course, right at the top of the list. A very strong set of numbers coming in. But I reckon we also have a downgrade that possibly could be because of, well, the valuations. Of course, right at the top in terms of earnings impact, we have ACC, Ambuja, both of them flat. ACC actually came up with strong earnings coming through. Of course, Adani Power, on the other hand, is also, well, marginally in the red. So not too much of an impact there. Very strong revenue growth, but there's been a one-off, when it comes to the bottom line on account of certain taxation moves. Moving on to other companies which are also reacting to earnings, well, we do have something like Havells up around 1.3%, as I was suggesting that while the earnings have been good, valuations are working against Havells at the moment. IndiaMart Intermesh, on the other hand, looking at a sharp up move, up around 4%. Gravita India was the other one, where you have a lot of high net worth individual interest here, but I reckon that the earnings were a tad underwhelming coming into. But let's move on and talk about the other stocks which are also in focus. Of course, in the newsmakers, we have RVNL, well, yet another order there. BSE, of course, making an up move around 2% after it has raised, your transaction costs on certain products. And that was, of course, on expected lines considering the SEBI move that we saw about a few sessions ago. Besides that, we have banking stocks in focus as well on the KVS money impact. Well, Kotak Mahindra Bank down around 2.7%. Federal Bank, on the other hand, up by just as much. And among others, we're also keeping an eye on the automotive space. Auto sales coming in, Maruti Suzuki under a tad bit of pressure, down around 1%, perhaps on expected lines. TVS Motor Company up around 1.5%, also on expected lines because of strong numbers, and Escorts also marginally in the green. So all these three companies are, well, largely reacting to the kind of volumes that we've seen. All in all, a mixed day of trade, Samina, but more gainers than losers.
Yeah, and I think you've highlighted a few of those broader market gainers, but REC stands out for me. After 11% move yesterday, the stock is up nearly 4.5% as we see it, 4% now. 526.70 is what we have in REC. Pull up PFC as well, because along with REC, it took PFC higher too in trade. 3% on PFC is what we have. I talked about BPCL. Along with that, HPCL and IOC are also looking really good on back of lower crude prices. BPCL is up 1.5%, HPCL is up 3%. IOC also should be seeing some buying, just about kick-starting the day, I guess, for IOC is what we have. Chola Invest is up 5%. Rainbow Children is looking good. Adani Total, after a good set of earnings, the stock gets a massive thumbs up, 4% higher on Adani Total is what we have. Apart from that, Great Eastern Shipping, Federal Bank. It seems like Kotak's loss could be Federal's gain. We will, of course, get some more details and confirmations on that. But for now, Federal Bank looking excited in trade on market news, or, of course, rumor. If rumor had to have it, joint MD KVS Manian could be joining Federal Bank, and on back of which the stock sees a 2% gain. Capital market stocks still looking really good. Indus Towers, if I can get that one up. Good numbers, brokerages upgrade the stock. All in all, it looks pretty good on the way Indus Towers is playing out. 2% high is what we have. Havells, I think Agam already referred to those numbers. Good numbers again, 2% higher is what we have on Havells as well. On the sell side, it's no surprises there for guessing that you've got some pressure building continues to stay on Sun Pharma Advanced. If we can pull that one up and see what it's getting up to after seeing it's finally trading flat to slightly higher. So started the day negative, but it's declined, or rather traded, given up nearly 50% of its value in the last 1 month. Patanjali is down 3%. Supreme Industries is seeing a morning of profit taking. AstraZeneca continues to see weakness. In trade, Yes Bank, Hindalco, JM Financial, Cochin Shipyard, Godrej Properties down 2.5% is the way we look at it. So all in all, not a bad day of trade. The breadth is good. A couple of standouts are REC and PFC for me. MOIL also looks really good. Jana SFB also having a strong day of trade, and Adani Total also good stock. Sony, quick one. It's 9:20. If you had to initiate a fresh trade intraday, what would it be?
So it will be in, in this tower, we can see it holding strongly above 360 levels, and the stock is also adding some fresh positions today. So for intraday, 360, 359, good support. So keeping a stop loss of 359, one can look for targets of 366, 368 for the day.
Sony, I want you to come on something like a BSC. Of course, we saw a sharp knockoff about 3 sessions ago, but since then, it seems to have been on a little bit of a recovery path at the moment, though nowhere close to the kind of levels it has been used to trading at. What's the way forward here for anyone who would be interested in perhaps buying this particular counter?
So BSC has seen, some profit booking on charts, and there was quite a recovery from the lower support levels of 2600. So going forward, also that may act as a good support. As long as 2600 is not breaking further, you may not see much downside. On the upside, of course, the resistance is right now where it is heading towards 2900, 2910, and it will be quite important if in today's day it's able to take out the resistance, even close above it and head towards 3000. So I think it's important just to watch out for the resistance and do not hurry into making any fresh longs as for the day. Let the resistance cross, then we can see some further upside.
Nirav, from all the Adani Group companies that reported, what did you like? The market seems quite impressed with the likes of an Adani Total, Adani Wilmar also not too bad. Adani Power's also a decent run. Anything that you like from what you saw this quarter?
Yeah, as far as the base effect is concerned, I think Adani Total reported good set of numbers. Adani Wilmar also a decent set of numbers. But I was particularly impressed with Adani Power and Ambuja Cement. In Adani Power, I think it was a very strong margin beat, and at the same time, we've seen a very substantial improvement in cash flows. At the PBT level, also there was a sharp improvement, but at the PAT level, it doesn't look good because of a deferred tax credit last year. So I think personally very impressed with Adani Power results, and of course Ambuja Cement, which we have highlighted earlier also, that how there has been a cost optimization and what aggressive targets they have till 2028. So I think these two stocks have really impressed overall.
Okay, let's take a look at a handful of other names which are also buzzing in trade right now. And if you look at the broader markets, if you consider the mid-cap 100, we don't have a lot of momentum on the upside. Of course, one of the top gainers on that particular one is BSC, something that we have addressed with Sony at the moment. But besides that, Federal Bank is the other one, which is also up around 2.7%. We have HPCL, which is up and about. That's also advancing by around 2.6%. And along with that, Vodafone Idea, and Indus Tower. So these are the top 5 gainers on the mid-cap 100 index. On the losing end, we have a lot of pressure on Godrej Properties. There is, of course, clarity with respect to the Vikhroli land parcel. And of course, we know the amount of land that the Godrej Group owns in Vikhroli. But this may not necessarily have to do anything with just the restructuring deal. Supreme Industries is the other, very interesting one, which is down around 3% as well at the moment this morning. And we have Patanjali Food that perhaps is a little bit more of a usual suspect at the moment. And Max Health is also under pressure. That's down around 2%. But we don't have too much to speak for when it comes to, well, the broader markets and the key gainers and losers here. There is one counter which actually piques my interest at the moment, and that's Coforge. We're expecting earnings today. So, let me go back to Nirav and ask him about the mid-cap IT space and if there is anything that stands out for him. Nirav?
Well, I think at this point of time, we would be a little bit skeptical about the mid-cap space, especially after seeing the results of Tata, Elxsi, etc., which have been to a certain extent disappointing. So I think we will be a little bit wary of the mid-cap space and stay away for the time being.
Well, on that note, going to take a moment to thank both our experts, Nirav and Sony, for joining us and taking us through their views on the markets and discussing a whole bunch of stocks and sectors with us. On that note, we slip into a short break, and on the other side, we get you a conversation with the CFO of Cholamandalam AMC. Stay tuned in.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
morning. Welcome. You're watching NDTV Profit. Thanks for tuning in. I'm Harsh Saita. We have with us the management of Cholamandalam Investment and Finance to talk to us about Q4 numbers, set the context. It's a very strong set of numbers and good growth numbers that they've clocked, and we'll talk a little bit about that. And we have with us Mr. Arul Selvan, as always, the CFO at Cholamandalam. Welcome to NDTV Profit, sir.
Welcome. Thank you. Good morning.
Good morning. Sir, I want to first off try and understand, you've grown extremely well in FY24, 37% year-over-year AUM growth clocked. So I want to try and understand what the number for FY25 will be. On this slightly higher base, will the number be slightly more tempered, or are you seeing enough opportunities?
No, we will be right now, looking at a growth of around 20 to 25% in the coming year. We are always conservative. There are reasons to it. A large part of our business still depends on the rural economy, and until and unless the monsoons if you are very clear about how the monsoon settles down, there will be some impact if the monsoons are not so good or widespread. Also, election results we need to factor in, and we need to see how the overall liquidity position with regard to cost of funds, etc., also pans out. There are again differing signals coming from the environment, both from the federal side, and thereby it will have impact on the Indian economy also, as well as RBI by itself. So we need to see how the availability of funds at what cost will make it business sense to grow, because we believe in growing profitably, so we would not be following growth just for the sake of growth. So we need to make the committed ROTA levels to achieve this. So these factors we will certainly watch out before committing on a larger book growth.
Understood, sir. And what segments would you be targeting in terms of your growth? Is there a predominant focus area that you see yourself growing in FY25?
Yes, as a percentage wise, we will grow a little faster on the loan against property, home loan, and the new businesses, because these businesses, the loan against property and the home loan, are making inroads into other parts of the country from where they were earlier, operating from. So the geographical expansion would give them the traction to grow faster, as well as in the new businesses, because the base is low, their growth percentages would look seemingly high, but in absolute terms, vehicle finance would still be the largest player with regard to disbursement growth and AUM growth. But overall, portfolio-wise, vehicle finance portfolio may come down again marginally. We would have seen that it has been coming down in spite of its growth, but that is because the rest of the businesses are going faster.
Understood. And sir, how quickly would you continue to run down that, or rather, just in terms of mix, reduce, or how would the mix shift maybe in the next 3 years in favor of loan against property and home loan as you scale geographies in those segments?
Yes, see, vehicle finance will come down to around 50% or a shade less than 50%. The loan against property and the home loans by themselves should be in the range of around 30 to 35% of the overall AUM. And the new businesses would be constituting the balance 15%.
Understood. And so new business itself has grown extremely fast, while I'm focusing in more on growth at the moment. But new businesses itself, in terms of disbursements, quarter of your disbursements to new businesses. What's the strategy here? Any concern with regard to you venturing into these new businesses and growing extremely fast without having enough of comfort on asset quality, or you're completely comfortable there?
No, we are comfortable there. We have seen that. We have explained over a few calls over the quarters also on how we are tracking and how we are making, even minor corrective actions. For example, in the fintech-like partnerships, which is, less than 1% of the overall book, but even there we have made corrections to make sure that we don't exceed on NCLs. NCL would be our predominant focus with regard to any business we grow. So that would be tracked very closely on a very online basis. So that would help us to keep them in check. So these businesses would continue to grow, and but vehicle finance would be still the largest business. I would say even 3 years down the road.
Understood. I'd like to talk about Q4 specifically. Margins have come back in Q4 and they've come back decently well for you. You expect this kind of 7.8% kind of margin to continue into FY25 as well? What's the thought and the guidance like?
Yeah, it will continue unless something drastically goes wrong with regard to the interest rate scenario, which we don't see right now. While I don't subscribe that there will be any fast reduction in interest rates, I also don't see that going up drastically. But we need to factor in geopolitical risks, if any, that could push up oil prices, push up the exchange conversions, and thereby lead to interest rate hikes. So we will have to watch that. But for it, I think NIMs can be comfortably held at this level. Is our thought as we go forward.
Understood. And with regard to credit losses, this time around, you've delivered quite a beat in comparison to what the street was expecting on the credit loss count. Could you talk to us a little bit more on that? What's led to a really decent number on that count?
So credit loss has always been our focus, as I told you a few minutes back. We would be focusing on that, and we have been making corrections. We have been tightening our underwriting principles, and thereby we have made inroads. But also, you should factor in Q4 will always be a quarter where credit losses would be minimum, because a lot of push happens to reach targets, etc. It may move back a bit in Q1, but we should be back to better levels as we move forward in the subsequent quarters. This is a trend you will see happening even pre-COVID, if you analyze quarter by quarter.
Understood, sir. Sir, with regard to, you've spoken about your focus on profitability along with growth. You're moving into a more secured business of housing finance, of LAP and the like. Does that therefore dilute profitability and margins? Could you try and give us some context on that?
No, the customer profile we focus on gives us a better ROTA. So the housing loan book which we focus on is not on the salaried class, where the yields are very, very fine, and there's a lot of competition from banks. Our focus is on self-employed non-professionals who do self-construction. So we focus on Tier 3, Tier 4 cities. If you see, the yields on this book is above 15%, and thereby if we control the losses and control the OPEX, this portfolio can give us a very decent ROTA, and as I was saying earlier, even higher than the vehicle finance ROTA.
Understood. So just in terms of margins, vehicle finance versus housing, what's the kind of margin profile that would have? Could you give our viewers some context on that?
It's slightly different, between them. Vehicle finance itself has got a wide array of products, right from heavy commercials to two-wheelers or tractors and the used segment, where the yields differ almost more than 10 to 12 percentage points itself between the products. For example, heavies will be, dispersed in the range of around 10.5 to 11% yield, while on the other end, two-wheelers can be in the range of around 20 to 23% yield, because for various reasons the OPEX are different, their losses could be different, the profile is different, the amount of effort that has to go behind them is different. So vehicle finance as a whole basket, they will deliver a NIM of around 7.5%. The home loan on the other end is a 14 to 15% yield product, and as I was saying, if we could contain the OPEX and the NCL, it should deliver easily greater than 4% pre-tax ROTA.
Sure, understood. Sir, with regard to how OPEX has moved, it's gone up quite substantially when I'm looking at it sequentially. What exactly are you investing in? Could you give us some context on that? And therefore, where should ROAs lie as well as OPEX lie in FY25?
The OPEX increases are on account of different, 2-3 reasons predominantly. One is, for example, as I was saying, we were making inroads into other parts of the country for loan against property and home loan. And we create separate verticals for every business with regard to sales, credit and collection. So we don't cross utilize people for any of the businesses. So each business, when we grow, we bring in separate teams so that the focus remains on that particular product by these teams. So this cost has come in. The other aspect is insurance income is now being also done by us directly, which used to be done by a subsidiary earlier because we got our own agency license cleared by IRDA. So there are some cost elements associated with that, but that is compensated by the insurance income coming in the top line. So that would increase the OPEX a bit. Apart from that, in the last quarter, normally we will close out all the requirements on, for example, the CSR expense, etc. And as you know, CSR expenses has to be accounted on cash payment basis. So those costs would have also pushed up the OPEX. There are certain one-time expenses, there are certain routine expenses, but broadly the idea is to hold the OPEX to asset ratio in the range of 3%. That's been our target. Yes, we exceeded it this quarter, but we have to look at it as on an annualized basis.
Understood. And so what does this do to ROAs? They've come off by 20 bips probably because of all the rate hikes that have been priced in this year. What should that do to ROAs for FY25? Still hold above the 2.5% mark?
Yes, we track it more on the pre-tax. So yes, we are targeting 3.5 pre-tax, so it should be 2.5 levels easily.
Understood. Got it. Thank you so much, sir. It's been a pleasure speaking with you and getting all of that context. That was, of course, the management of Cholamandalam Investment and Finance on their Q4 numbers. With that, out of time on this one, we'll take a short break, more on the other side. Stay tuned to NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find
Hello and welcome. You're watching India Market Open. It's turning out to be quite an interesting morning. Stocks are moving on back of earnings, and we have the whole Adani pack. In fact, most of them are reported numbers, Adani Wilmar being one of them. Anshu Malik, MD and CEO of Adani Wilmar, and Shrikant Kanhare, CFO of Adani Wilmar, join us to talk to us about how it's been for the company in the quarter. Morning, gentlemen. Thanks a ton for joining us. It's been a good quarter on the face of it for Adani Wilmar. You've managed to surpass that 1 million ton on FMCG sales, edible oil expansion. So lots of good things as well that have happened in the quarter. You want to throw some color on how it's been and what's the guidance going into FY25?
Our business in the fourth quarter has been good, particularly in both in food and edible oil. In industry essentials, particularly the oil meal, the volumes were a little less, but otherwise it has been a good quarter. The first half was not as good, but the second half surely has seen much better results, both in top line and bottom line. Going forward, we see a great scope of growing both in terms of volume and improving our bottom line. One, because of the stability expected in the prices of commodities as we go ahead. Second is the distribution reach that we have created over the last 25 years. And now we reach almost 730,000 outlets directly. And indirectly, almost 1.8, 1.9 million retail outlets. Food and FMCG both to put together is increasing at 30% domestic business, growing at quarter on quarter. So that is a good thing to happen, and we have touched 1 million. So going ahead, I see great opportunity for AWL.
Malik, that's amazing. It looks like it's a promising year ahead for the company. But let's break that down, right? I want to talk to you about what rural demand is looking like as we go into FY25. Are you expecting an uptick on that? Give me a sense of guidance of what we can expect on top line and exports as well. Any plans to revive that piece of the business?
On rural, you see, last year hasn't been good from agri production point of view, and the growth of agriculture has been much lower than expected. Normally it is 4%, but was 0.7%. That is because of the erratic monsoon in the first half of the year. The Rabi crop was good. Wheat and mustard was a good crop this year, and that has given some solace to the farmers. We are looking at the Kharif crop and the monsoon, and you know how important monsoon is for the rural economy. What is predicted to be a normal and a better monsoon, if this happens, I think the Kharif crop will be wonderful. With Rabi good and the Kharif crop coming to be good, I think by September, October, we will see revival of the rural demand. That is one side, but for Adani Wilmar, we have been in staples business, and staples are all essential commodities, whether you talk of wheat flour, rice or edible oils, and all these things are required by even the rural consumers. We have in fact seen 1% growth over the urban. So our share of rural has gone up from 30% to 31%. So to that extent, we have seen rural demand better for us, principally because edible oil prices have been lower than last year, and wheat and rice prices have been stable at least at that level.
Shrikant, if you can actually come in on the pricing environment right now. We're seeing an improvement in your margins in the third quarter. And of course, pricing, I believe, has been dynamic because you guys have been making a lot of decisions based on market conditions, which are also very volatile. Firstly, how has pricing impacted margins in this quarter? And what's the way forward? If you could also give us some sort of an idea about your expectations of margins range as we move into FY25.
Yeah, so if you firstly look at this quarter, we have, of course, outperformed as compared to the same quarter last year. But having said that, of course, in our business, there is always an overlapping between one quarter to another quarter on the inventory gains and the contract gains which are sitting, which sometimes gets delivered either in the quarter one or quarter two. So with these, I think the numbers are quite good. Coming back to your question on the pricing and how does pricing play in our overall scheme of the thing. See, we have been saying this for quite some time that the our revenues are basically impacted due to inflationary pressure. So in most of the time, given that we have a very strong brand, number one brand in the country, we have been able to pass it on any inflationary pressure to the consumer. And therefore, our entire focus is always on how do we improve the margins per ton. And that is something we have been able to deliver in this quarter. Whatever we faced in Q1 and Q2 was very unprecedented because of the high price inventory and the disalignment of the hedges. I think that that problem is now behind us. We have been going back to our normal numbers which we used to deliver in FY22 and FY23. And therefore, having said that, Q1 margins, if you really ask me, should be in line with what we were delivering earlier. And of course, should be better than what we have delivered in this quarter.
Would it be fair for us to assume that there will be upside risk, if I can call it that, on margins going ahead into FY25?
Really don't see there is any risk on upside on margins given the two factors. One is all that commodity volatility that we saw in Q1 and Q2 is behind us. I think markets have stabilized, prices are stable. And whenever the prices are stable and in a range bound, I think companies like us who have got a good brand in place makes better margins. So therefore, I don't see any risk as such on a business model. The second thing, of course, is the food segment or a food portfolio in the company's overall basket is improving. So this quarter, we had been able to clock 17% of volume came from the food. We have been able to clock 1 million tons of food volume, which is quite a remarkable feat for any company to achieve. The food gives you a better margins, and therefore, when you move ahead and in the next year, when the food proportion also increases, edible oil prices remain stable, I think we don't see any risk on the margins as we sit today.
So there could be a good possibility of improvement in margins in FY25. Mr. Malik or Mr. Kanhari, either of you can come in on this one. Talk to us about branded products because your market share that has been improving consistently over the last 10 quarters. As we go ahead, what sort of margin, what sort of guidance can you give us in terms of the branded products?
See, staples business is all about good supply chain management and very good distribution. If that is there, then the market shares can improve. So we have been working on that segment since last 3-4 years, very clearly with a focus after COVID that distribution is the key to success. So we have gone in roads from 16,000 rural towns. Last year we did around 33,000. Now we will do 50,000 target we have taken. Rural sits on a bigger population of almost 70-75%, but the share is 30-31% for us. So we have enormous scope to grow. Second, the challenge in distribution in rural markets are on supply chain and your logistic cost. Now that our volumes are big enough, we did around 6 million tons total as a company, and edible oils volume, packed volume were 2.7 million tons, and food 1 million ton. Put together gives us enormous strength to move goods at a lower cost and thereby give value for money to the consumers. We are confident of getting higher market share as we go ahead.
All right. If I can also touch upon industrial essentials at the moment. Now, the second volumes have seen a little bit of weakness coming in, at least on a year-on-year basis for this particular quarter. And I reckon that this can be attributed to the weakness in oil meal. Can you take us through what's really happening with the segment? I believe that exports have also taken a hit here. What's your reading about the way forward?
On industry essentials, oleochemical is a big business of ours and has been growing at around 15-20% per annum, and we are expanding that. We have an export portfolio also, but oleo has done very well. Castor, we are world's largest castor oil player, and we export. We are the largest exporter also. Now, in Castor, plants are running at almost 95% capacity, so not much of growth, 5%, but we are expanding there also. What comes is the oil meal export. Oil meal is a matter of, consumption at the destination and how price effective we are. And in soybean, the South America meal is cheaper. So that gives us a disadvantage. Our advantage is only that we are non-GMO meal. So we are exporting to Korea, Japan. What happens is that you need little time to develop these markets because there is a lot of back and forth in terms of quality control and specs and all that. But surely we have cracked that, and we will see better oil meal exports. Other than oil meal, rest of the two business, castor oil and oleo, has been surely have done better.
Well, thank you very much, Mr. Malik and Mr. Kanhar. It's been a good quarter. Wishing you all the luck and congratulations again on having it good this time around. And good luck for FY25, and we'll see you soon. Well,
thank you.
Yeah, in the meantime, the markets are volatile but holding steady. Lots of stocks are catching our attention. REC, PFC, the biggest gainers. On the street, you've got gains coming for Adani Total, OMCs as well. Other companies like Vedanta Fashion, India Mart are some of the top gainers on the Nifty 50. You've also got Raymond that's having it well. Chola posted its earnings is up 4%. Federal Bank, on anticipation of KVS moving to Fed Bank, is doing well with a 4% gain. HPCL is looking good. IRP, PHEL are all having a pleasant morning. With that, we're completely out of time, but thanks for watching. Up next, I catch up with Harold Vander of HSBC Emerging Market Strategy to talk to him about what it looks like for India going ahead. So stay tuned.
36 lakh farmer families affiliated with Amul across 18,600 villages of Gujarat have pledged to vote with their families during these elections. I would also urge you to take this pledge and vote as a part of the democratic process of our country.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarva and Krutrim in India, are training these models for Indic languages and the way we speak to each other.
welcome. You're watching Talking Point, and joining us today is a very special guest, Harold van der Lind, Head of Asia Equity Strategy at HSBC. Harold, thank you very much. It's always great talking to you, and it doesn't get better. The start of a brand new month, a month ahead of elections locally, lots of global and local factors to talk about. But I'll start with the most important one this week, and that is the FOMC meet. Bets are on whether or not there will be a rate cut at all in F5 in this calendar year. You want to tell me what the possibility of a no-Fed rate cut in the current calendar year, considering the kind of economic data that we've been seeing coming out of the US?
Yeah, well, good to talk to you again, Samina. The Fed is extremely important for Asian equities. And you're right. We started this year with the market saying, hey, maybe there could be as many as 5. Some banks were even talking about 7 rate cuts this year. That's really being pushed out of the window. And now some people are talking about maybe rate hikes even this year. Now, I think that might be a bit too early to judge it. But clearly, some of the inflation numbers have moved a bit in the opposite direction than in the beginning of the year. And it looks like we might not even get rate cuts this year. But for the moment, our base case is still that there will be rate cuts coming through, but clearly there's risk to that particular view unfolding, and the market is repricing that.
And Harold, interestingly, in the month of April, we've seen FPIs actually sell out of India for the very first time in the year so far. And this is not just equities, it's debt as well. Do you feel like rising bond yields could mean markets globally and India in specific could see outflows from the US investors?
Yeah, well, I think there's 2 things going on. It's something on China and what happens globally. So globally, yeah, interest rates and bond yields in the US have gone up. So it makes a little bit more sense to put money into the US market again. I'm really talking about US money markets, right? Putting in deposits, because there you get 4.5% or maybe 5% on certain deposits again. So I think we've seen money move a little bit out of equities in general, all around the world, and India is no exception. So I'm not overly worried about that. That's, I think, sort of a near-term sort of consideration for India.
And let's talk about China, because I know you've been tracking that very closely. And the last time we spoke, you were constructive on China, but I believe you are even more constructive on China today. The yen is at a record low. US bond yields are rising. India may or may not be seeing FPIs come in lock, stock, and barrel, and that could have to do with the local factors such as the elections. Where does China stand, and how much of China's potential inflow could eat into India's pie?
Well, before China, very quickly India, because we do really like India, but it's just a market that's performed so well. It's rather expensive. So we say, maybe we should wait until the slightly better time. But it's a market that we effectively still like. China's almost the opposite. China's got an enormous amount of challenges to deal with that are well presented in well, you guys have talked about it as well. Property, economic growth, and all these sort of things. But we've seen such a massive sell-off that now China, a lot of people say, hey, maybe it is a bit overdone. And it comes at a time where India is expensive. And you see that there's some strange things going on with the yen. I mean, I'm not quite sure what happened this morning exactly. It looks a little bit odd, some of the movement. But you see that the Japanese stock market is not really responding to that as it did in the past. It's not rallying much higher. So I have the impression that people are reallocating some money from Japan into China, not so much from India, really, but from Japan into China. So China, interest in China is really picking up.
Are you buying more China than India? Or recommending more buying in China than India?
So at the moment, actually, we like both markets, but the way we like them is very different. China, I see, as a market that might do well, and in the near term, it's oversold. It's a sort of a tactical adjustment that we take to China. So for the moment, I think it will probably do a bit better than India. But if you ask me, hey, 12 or 24 months out, which market do I prefer? I would prefer India. So because India is a very different story. That's why I think we should not see these markets as you sell one and go to the other one. These are like apples and oranges. They're really different. And they give you a very different sort of exposure. India gives you a nice sort of long-term growth story, very, very multiple growth drivers, not a lot of risk on growth, but valuations high. And China is the opposite. A lot of risk on growth, but hey, valuations are really low. That's why I think you should probably have both actually in your portfolio at the moment.
They've become mutually exclusive in the recent past.
Yeah, something like that.
And that's interesting, right? Because it was always an India-China play, which has now changed. Let's talk about local factors, because I think back home, the focus largely is on what's happening on the election front. Do you think that the markets, do you think yourself included, is focusing more on policy continuity than actually a general election result?
Yeah, I think what we've seen at the beginning, since the beginning of the year, there's been a lot of elections coming through. Indonesia, Taiwan has had elections. India is now in the midst of it. It seems like the market expectation of continuity has worked in Taiwan, has worked in Indonesia. It seems like it's going to work in India as well. So the market is assuming most likely no real change in the government party. Therefore, continuation of policies. That's considered to be kind of positive at the moment. So it's being brushed aside for the moment that is any particular issue in equities. So most of the conversations we have about India is about valuations, it's about the growth, it's about what do individual companies do, and not so much about, oh, will there be a shift in policies because maybe a new prime minister might come in or something like that.
Harold, and that I need some more perspective on. Valuations of all equity cohorts and almost all sectors appear expensive, even by the most optimistic in long-term investors into India. Maybe the large cap not as expensive as some of those broader market sector themes that we've been seeing. Is there anything that looks compelling to you, keeping valuations in mind at this stage?
Well, you know, with India, the thing is that Indian companies always belong to the most profitable companies on planet Earth. So you have companies in India that generate enormous amounts of profits, don't have to invest a lot. It's a textbook sort of companies that you want to have. And that explains partially the high valuations. So one thing we just have to accept is it's like, I don't know, it's like maybe a handbag. You have cheap handbags, you get expensive handbags, but you like the expensive one because you get better quality. And so it is with Indian companies as well. So we just have to pay for that. Irrespective of that, it doesn't mean that it's at the moment really expensive. But if you dive a little bit deeper in the market, and you guys have talked about this as well, it's the small and mid caps that are really rallying. So in the large cap space, there is better value. So in banks and selected consumer names, I think there is still reasonable value to be found, but you have to be much more selective in India. That's absolutely the case at the moment.
And I want to talk about one space that FIs historically have always liked, and that's the banking space in India. Do you see a further drop in bank deposits, considering the increasing flow of money towards capital markets, equities, mutual funds, to list them all? And what does that mean in terms of outlook for Indian banks and simultaneously for non-banking stocks? So capital market players, the exchanges, the mutual funds, the guys who are betting on private banking. How does that look to you as a whole pack, banking and non-banking?
Yeah. So what I think, what we see in India, we see it in a couple of other countries as well. Indonesia, early signs. Thailand, a little bit. We've seen it in Korea in the past. Is actually really powerful. You have a lot of people that are having savings and they want to reallocate it. Normally they put it into the banking system and the banks would lend it out. But now they're actually putting it into capital markets and bonds and equities and these sort of things. And that's a rechanneling of savings into investments domestically. That's really powerful. That's really good for an overall economy. So that's good for growth. But yeah, for the banks, that means that maybe they have a little bit less on the deposit side and they need to get the deposits in. They have to raise deposit rates. That's not so good for their margins. But given that the overall growth remains pretty robust, I'm not overly worried about this. What we see in India is really a healthy sort of rechanneling of savings into productive assets at the moment. And that can continue for some time. And we know from other countries can be quite powerful to generate growth.
Harold, I don't know whether this is a theme that you've tracked in India, and it seems like DIs definitely like this sector, and it seems like a lot of it is election play. It's built up underperformance of decades together that's helping the defense sector, to say the least. And some of these defense stocks are trading at very high valuations. Do you have faith on this multi-year defense story that's playing out in India? And if yes, are you betting big on it at this stage?
Well, the defense industry around the world is in a very different place than it was 5 or 10 years ago. We have intensifying rivalry between great powers, and India is one of them, around the world. So we've seen defense stocks move around this from China, Japan to India to Europe, everywhere, to be honest. And this is something that will be probably continue to be parts of our lives. Intensifying rivalry between new countries, not even the right word anymore, right? But countries that become new players on a geopolitical stage. My country, the Netherlands, was a real big player 400 years ago, 300 years ago. We're nowhere now, right? So these things coming up. And that new reality puts a lot of life into new industries, and defense is one of them. But also, for example, the tech industries that supply the chips or the cameras and then all these other things, and the memory and the processing power to defense. So there's a lot of these industries that have structural stories unfold. From here and there, these stocks will move on near-term consideration, but in the longer run, yeah, those are sectors that will continue to see growth, and it's up to us then to figure out how you benefit from that.
Right, just extending that conversation into other sectors and the government's focus, would you bet on riding the CAPEX theme considering the government's increased focus on infrastructure spending, Harold?
Yeah, so I slightly have a different view on that. So I traveled in Tamil Nadu a couple of months ago, and yes, the infrastructure is being built out, but it's still early days. So you go from A to B, and you're a little bit on the highway, then you're going to get off the highway through the paddy fields, then you're up a highway again, and then you're down on some dirt roads through the paddy fields, and then there's a bit of highway. So they're building it out, and it's not connected yet, but give it 2 to 3 years' time, it will be connected. And then the benefits from that are that you have a connection between A and B. So trade between A and B will go up, more transport, there will be hotels, there will be property prices will go up. So very often, I think the way to play these sort of themes is actually buying consumer companies or maybe companies that indirectly benefit from it over the longer run. And be careful with the companies that might have a big order now, but maybe not in 2 years' time. So while the attention very often is then straight on, the construction companies will benefit from this, I like to look at the kind of longer-lasting beneficiaries of this. And it could be a hotel, and it could be a company that, convenience stores, that just benefit from improved infrastructure around India.
Harold, for India, what do you think the theme is? Over the last decade or so, it's always been about made in India. Suddenly, the bias could be changing now to make for India. Where would you, if I had to ask you to put your money on one of these, where would it be? Make for India or make in India?
Well, it looks to me it's a little bit of both, right? And I'm chickening out a little bit here, but India has never been a manufacturing powerhouse as China has been in the past. It was a services powerhouse, right? But not so much a manufacturing. But that seems to be changing, and that lifts the domestic consumer demand. So what we've seen in China is happening in India in that sense as well. So you want to be in both areas. But what I really think will be an exciting industry is not AI or robotics or some of the manufacturing. It's actually because a lot of people, when they have another job and they make more money, they invest that money. That's what we just spoke about. So you're going to have Indians buying Indian assets. India buys India, if you want to put it like that. It's that rechanneling of savings that's really good for stock markets, but also good for wealth management. That's really an interesting sort of long-term growth driver as well. India will get richer and will become a bigger investment source of investments as well. That I think is an interesting growth industry.
Buy more homes, and if yes, then I think real estate also goes on that list, right?
Yeah, for example, real estate could be brokerages, could be wealth managers, and these sort of things. It could also be, for example, maybe over the longer run, it means that interest rates over the longer run can come down. So that's good for bonds. So there's many ways to invest in that particular theme.
Also, premiumization, we hear about that a lot, and we've seen that in a few numbers. Staples in the consumption space haven't seen the sort of traction premiumization or aspirational companies have seen. And a lot of those e-commerce names, right, a Nykaa, a Zomato, I'm calling them aspirational because they have changed the way Indians or India really deals with discretionary spending. Do you feel like that's a theme you'd like over staples? Because there are only that many toothbrushes and toothpaste one can buy.
That's right. But there's still a lot of Indians who would like to buy that. So I think that is happening, but it will happen very differently than, for example, what we've seen in China. In China, a lot of families were really small. You had a one-child policy, right? So you had one child and very often two people in a family that worked. So you have, for one salary, only three people, and actually it's two salaries that very often they brought in. In India, that's not the case. The man works, very often the lady stays a little bit more at home, female labor participation rates are lower, and families and households are bigger. So the scope for discretionary spending will improve in India, so the premiumization will be there, but I think it will be a very slow process in India. And that's good if you're in a business, because that means you get more time to build out your business. So I think the dynamic of that, it will unfold, that premiumization, but very differently than what we've seen in other parts of the world. It will be very uniquely Indian, I suspect. Does that mean you want to move away from staples? I don't really think so. But do you want to? I think the key actually is here, not so much discretionary or staples. The key is distribution. Can you get your product, if the Indians want to buy it, can you get that all across India? And being able to distribute that across all these different parts of India that are so incredibly, that's what India is so interesting, right? So diverse. If you can get that distribution right to reach all these people, that will be the secret sauce, I would say, to success for Indian corporates.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want
talk about a sector again that's done positive returns for most part of the last decade, and those are IT stocks. Again, something that a lot of people betting on India have usually liked. But the outlook currently seems rather uninspiring, given the delayed rate cut from the U.S., political outcomes that the markets worldwide are anticipating. Throw in Gen AI, so many moving parts, right? How do you feel about the IT stocks? Do you feel like they could be the dark horses of FY25?
Dark horses, maybe. I mean, there's two things. It's one of India's success stories, the IT companies, right? So it's a fantastic story. And the Indian companies have really moved on from just call centers to becoming global providers of IT service. And some banks have more people working now in India than in their home country. So that's been a real long-term success story, and I don't think that will be derailed soon. In addition to that, it's a sort of US dollar exposure. If the rupee would weaken, you benefit from that as well. So that's one story. Then you have a near-term story, which is, well, most likely with high interest rates, the US is supposed to weaken. We've been talking about this upcoming recession for some time. We haven't seen it yet, but that could weaken. Europe is weakening. So maybe near-term, the order flow and the demand for that will be curtailed. That's bad, but the longer-term story, the positioning that India has really carved out in this particular sector is not just unique, but it's really remarkable. So is it a sector you want to have long-term exposure to? Yes. But if the US numbers come out and look like GDP is really rolling over and is getting weaker, do you then want to have exposure to it? Maybe not. So it's more of a near-term consideration, I would think about that.
You know, Harold, you indicated a couple of times that Indian markets have always been expensive, but we do look a little more expensive than our historical average. I want to understand from you, what in your opinion is a risk that you're watching out for Indian equity markets? Or put another way, right? What do you think could lead to a correction on Indian equities? Would it be price or time bound? And the reason I ask you this is because if incremental flows need to start coming in lock, stock and barrel, we would need a correction either price-wise or time-wise.
Yeah, I think there's a couple of risks that we need to keep a close eye on, but none of them keeps me awake at night, so to say. First of all, you're an importing country. You need to import energy and these sort of things. If oil prices would shoot up, that would not be good for India. And typically, oil prices, if they move towards $100, people don't care about it. They go over $100, whoops, so everybody cares about it. So that's one thing. I think a second risk is that we now see a lot of individual growth drivers, investment flows, consumption flows, and these sort of things. That's good. But if for some reason that would start to fade, some of the growth that has come out of India is because your credit costs have come down. They've cleaned up balance sheets, the banks. Now, that's really good, allows them to expand credit, give out credit, but that will eventually come to a halt, so that's a risk factor as well. So if the earnings growth numbers are going to disappoint, that's the second risk factor that I would be looking at. And then there would be risk that maybe India can't really control. That would be what happens globally with the global macro. If for example, we see a complete reversal in either, say, the US, interest rates in the US go up, and then the bond yields shut up and stock markets go down, that would not be good for any stock market, India included. Or what we just spoke about, that China is suddenly becoming so much stronger that it actually does suck up money, not just from Japan, but from other parts of the region as well. And that would be India. As I mentioned, I don't think that's a near-term risk, but these are some of the risks that I would be thinking of when it comes to Indian stocks.
Harold, what percentage of your India allocation is still on the sidelines? Do you recommend increasing cash holdings with regard to Indian equity markets? And also, taking profit at higher levels at this stage is what's on your mind?
No, I mean, if I think about cash holdings, I think about what is the direction of US bond yields. And I actually think that when it comes down, so we like equities. So I don't want to have a lot of cash. You want to be in equities. And in that sense, you want to be in Asian equities as well. I think China really has a bit of momentum developing, so I would be looking there. For India, would I put cash on the side? Probably not, to be honest. Would I buy more? Well, we're overweight, so we like that exposure. But I think the momentum in the near term could come from China. So the additional money I would probably, or we see that people putting that into Chinese equities at the moment. but I wouldn't go necessarily into cash. I think it's very dangerous to bet against the Indian equity story if you have such good earnings growth coming through. So we'd like to stay fully invested in that sense.
Right, so stay invested, but it could be a little more stable and slower in terms of growth for FY25.
Yeah.
What sort of a number in terms of growth or returns are you expecting for FY25 for Indian equity markets?
Well, I think consensus is looking for something well over 20%, 24 out of the top of my head. So there's pretty decent growth coming in. That might prove a little bit too much on the high side. I think India might be slowing a little bit from last year, but maybe I'm wrong. But I suspect if we can run something between 15 to 20%, that would already be pretty good. So I'm guessing we're probably ending up in the high teens, but consensus at the moment is looking for a little bit higher numbers. And I hope to be proven wrong in that sense, because I mean, growth is good for equities, and this is why we don't want to be in cash. We want to remain fully invested, because the risk is on the upside in that sense.
I'm so glad you say that, because I mean, it's anyone who's concerned about it being a negative returns year of returns for the markets will take a sigh of breath. Just one quick one, and I want to talk to you about gold, because what's happening in gold is also very interesting. It's very rare that you see risk on and risk off assets play out well at the same time. Gold has had a strong run from the start of this year. I know geopolitical stress could be one key driver for gold prices, but how are you approaching gold, and are you looking at gold's rally as a cue to what lies ahead for risk assets in the next couple of months?
No, to be honest, I don't really look at gold in that sense. Yes, I've noticed gold is moving higher. I think there's a variety of factors to it that you already mentioned: geopolitical considerations, maybe bond yields coming off. So therefore, on the margin, why would you keep your money in a deposit? You put it somewhere else. Gold is an alternative. I think from what I understand, there's been good buying in China of gold as well, because if you're Chinese, do you want to buy property? Maybe you're cautious. The stock market has not done very well. So people are looking maybe for something else. Gold demand might have picked up for that particular reason as well. So there's a lot of these moving parts. But if I really think about, hey, what should I do, for example, in Indian equities? Gold is something I look for because India is an importer of gold, but I really look at bond yields. I really look at the growth profile in India. So the stuff that we just spoken about earlier on, the FOMC, the Fed, what are they doing? What is the earnings growth in India? That for me are the real key drivers. And gold is something that I put then on the side. I don't let them determine what I do in equities.
Right, Harold, as always, it's a pleasure having you on the show and talking to you about your perspective on India and the rest of the world. We'll hopefully see you soon again, and have a good week.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk.
Trade in the green, the Sensex closer to 74,700, while the Nifty trades about 22,800. Barring IT, real estate and media, all sectors trade higher. And booming rally for auto index, which clocks another high post April sales data. Strong growth seen in two-wheelers and PV segment. Meanwhile, weak demand haunts electrical two-wheelers. Sales plummet 50% in April. Another blow for Kotak Bank. Week after punitive action by RBI, bank's joint managing director KVS Manian steps down. Stocks down in trade this morning. And a fresh high for GST collections in April as collections cross over 2 lakh crore rupees. Markets making a substantial growth of 12.4%. Hello and welcome. This is Samina Nalwala and joining me is Agam. We'll take you through all the F&O action in the markets this morning. It's a good-looking market, to say the least. After a bit of a U-turn that we saw on Tuesday, the bulls are back with full force in trade today, with the Nifty trading close to levels of 22,800 and the Sensex also having it pretty good. Broader markets are looking good. The breadth of the market is solid, and that's what we're going to be taking heart from in trade this morning. 22,687 on the Nifty, and 83-point up move is what we have. Stocks like PFC, REC reacting well. Auto stocks having a good day of trade. Adani Group companies also not doing too badly, posting their earnings. But Agam, it's not a bad picture. We are very comfortably respecting 22,600.
Yeah.
And it seems like the momentum is there, the breadth is good, the broader markets are outperforming, and Bank Nifty is also doing a little bit of a number this morning.
Absolutely, and well, positive green is always good. And considering the Nifty is actually advancing at the moment is something that bulls will be happy with. We're starting off the balance of this truncated week on a positive note. But speaking of well, positivity, let's pull up Havells. Let's see what that one is doing at the moment. Let's see how that one is faring. And that is also advancing at the moment, marginally so. But speaking of Havells, it's reported a solid set of numbers in the March quarter, posting a near 24% rise when it comes to its net profit, while its margins also did expand. But we spoke to the company's chairman, Anirai Gupta, on what has worked for the quarter and what we can expect going in. This is what he had to say. Listen in.
So overall, if you look at FY25, post FY24, where we have started seeing some pickup in the second half of the year. So that gives us confidence that FY25 should be a better year. Based on a few factors. One, the infrastructure and industrial demand continues to be strong, which was the trend even in FY24. We have started seeing some pickup in the real estate as well as consumer demand, which augurs well for our segments like switchgears, cables, and electrical consumer durables. And thirdly, the season, after a long time, the summer season has started kicking in well, which could mean good growth prospects for air conditioners, air coolers, fans for the business. So overall, I think we are quite excited with the start of the year for FY25, and we look forward to a good year in growth. Talking about electrical consumer durables, these are quarter-on-quarter based. The trends can change or the mix can change depending upon the seasonality of certain product categories. But overall, we've seen good growth traction in cables and wires and in electrical consumer durables as well.
So we'd asked you to quantify, Mr. Gupta, double-digit growth with an upside risk to FY24 in terms of revenue growth is expected. Fair assumption for us to make?
Well, I mean, last time also we had low double-digit growth. So this year, hopefully, if things continue to get better, because last year first half was not a great, not great in terms of demand. So I think overall, the FY25 should look better.
But I want to talk to you about margins, Mr. Gupta. You've managed to improve margins to 11.8 in this quarter. I believe some part of it is due to cost optimization. Again, on the margin front, 11 to 12% could be maintained in FY25, or do you anticipate better margins? You're also launching new products. So just give me a sense of what is the margin objective that you're setting out for yourself.
Well, I guess, last year was a stable year in terms of prices of raw materials. So when there is stability, it always augurs well for the margin predictability. Unfortunately, we've seen raw materials started going up in the last couple of months. That does not necessarily mean that because there is a lot of focus on cost optimization. So our stress will always be on, mix of growth, margins, market share. So we have to balance all these things. But going forward, the positive trend towards margins is definitely satisfying, and we'll continue to strive to do better.
Right. Lloyd Consumer has seen a big push from your stable. You've also sold a lot more. The revenue contribution coming in from Lloyd's is also at what, 24.5% versus 14.5% that we saw in the previous quarter. A large part of the capex is also earmarked towards Lloyd's Consumer. Is that expected to be the key growth driver into FY25? And also, what are the sort of margins you enjoy there? Is it a better margin product?
Well, in fact, as compared to other Havells product categories, the margins in Lloyd are lower as of now. And it's also because we're making huge investments in Lloyd. As you rightly said, a lot of capex has gone. We've set up 2 large manufacturing facilities and set up a capacity of 2 million air conditioners, given the fact that we do see good growth coming in air conditioners in the coming times. But I think overall, we have made decent investments in capex. We'll continue to make investments in brand, distribution, product R&D in Lloyd. But having said that, as I said, certain products are seasonal, and Lloyd air conditioners is a seasonal product. So in certain quarter, like fourth quarter and the first quarter of FY25, the share of Lloyd would go up, and in the subsequent quarters, Havells other product categories share will go up. So it's always a mix, and that's why we want to see it for the whole year. And I think there is continuous investment in other Havells product categories also. Last year, our capex was about 800 crores. This year also, it will be around 800 to 900 crores, which also primarily is towards Havells other product categories. Because Lloyd, we believe that we have set up these 2 facilities, and we are good on capacity now.
And what is capacity utilization standard at these plants?
Overall, if we look at, because, again, it's a seasonal product, but overall for the year, it's between 60-65%. And so, yeah, as I said, we are good with capacity as of the moment.
Right. Also, you did talk about spending on Marcom and, of course, distribution. And this brings me to the next question. You're venturing into kitchen appliances, which I believe is going to be as early as this month. What are the plans there? You have, we believe that 10% of the market share is what you aim to own in the next couple of years. Draw us the glide path for kitchen appliances. How value accretive will this be? When will it start contributing to top line?
Well, one of our businesses in electrical consumer durables is domestic appliances. So these are all electrical appliances like, mixer grinders. So we are already in the kitchen for the consumer, mixer grinders, toasters, blenders, and all. And this is a sizable business, and we have the distribution channel which caters to this product category. We realized that one of the product categories that we were not in, which completes the product range, is chimneys and hobs. So it is more of like a category addition to the existing product range and the existing distribution channel. We do believe that we have strengths in this channel, and the consumer does look at Havells brand for kitchen appliances. So we are quite confident that we should be getting a meaningful share in this business in the next 3 to 5 years.
So I do understand there will be lots of synergies, right? But have you earmarked, what portion of your cost have you earmarked to building that expansion? Because while I know your distributors already sell products for you, I'm guessing there's going to be a little bit of marketing spend as well that could have to go into this, right? So just give me a sense so that we get an idea of what that could do to margins, at least for the next 2 quarters, till the brand is built out.
Well, I think, this is not such a large category that will dilute the margins in a big way. We'll continue to invest just like we've invested in. In fact, Havells has always been seeding new businesses in the past, and it's a careful balance between, as I said, growth and profitability. So the addition in this business or the entry into this business will not mean margin dilutiveness for other product categories.
So what is the percentage of market share you hope to capture over the next, say, 2 to 3 years?
We actually don't quantify. And as I said, we want to be a meaningful player in the next 3 to 5 years.
Okay. I just want to have a couple of questions on your balance sheet. Your short-term debt seems pretty significant at 3,500 crores. What is the reason for that? Do you plan to retire some part of it into more, or rather optimize it better?
Sorry, there might be some mistake in seeing this. In fact, we have net cash of about 3,000 crores.
100, yeah. Okay. Okay. So we will, of course, yeah, I can see the cash and cash equivalents at 266 crores. What is the plan to use that? Are you going to use it to continue building expansion? Any more facilities being added? Any triggers really that as we look into the new year?
Well, as of now, I don't see any major capex. As I said, this year our capex is about 800 to 900 crores. We continue to sit on a healthy level of cash in the company. Going forward, we have been an expansionist company. So if at any point of time we see a decent opportunity to invest this money, we should be using this cash reserves of the company.
There you have it. That's the management of Havells telling us about all that is in store for the company going ahead. On that note, we slip into a short break, and on the other side, we get you more action from the futures and options space. Stay tuned in.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it.
Welcome back. You're watching the FNO show. It's a good-looking market. Consolidation is underway, but with a positive bias on the index. The broader markets are looking good as well, and the breadth of the market's pretty solid. Avanti Feeds, PFC, REC are turning out to be your top gainers. Oil marketing companies like BPCL, HPCL also looking pretty good in trade this morning. Well, we have with us Ajit Mishra, SVP Research at Religare Broking, now joining in. Ajit, first up, what's the trade on the index this morning?
Good morning, Samina. So, we are seeing recovery after the last trading, second half profit taking. And broadly, the range is still intact at around 22,600, 650 is the area basically where we are seeing, buying interest emerging. And around 750 to 800, we have multiple hurdles. So as of now, I feel that one should wait for any dip. Intraday, let's say around 620 to 640 is the zone where one can look for buying opportunity. Today being the expiry also for the index, with strict stop at 560 and 720, 740 being the target.
And Bank Nifty, Ajit?
So Bank Nifty, I feel that today it might trade lackluster, after the recent sharp swing from 48,000 to 50,000 mark. And If somebody is planning any fresh trade, then one should wait for any dip around, let's say 49,000, 49,100 zone for fresh entry, and 48,800 should be the stop in that position, with 49,600, 49,800 being the positional target.
All right. So, Ajit, then in that case, before I come to you, let me start by taking a look at some of those stocks which are in fact looking at an increase, a decrease in open interest. Can we pull out that list of all the stocks which are in fact buzzing in trade and seeing a big change in open interest? So, well, we do have REC, which is up 8%, what do you know? And this is on a strong increase in open interest as well. So we have about 14% increase there. Godrej Properties is the other one, but this one is under pressure. It's down 5%. And I reckon that this possibly is a little bit of a fallout from the overall amicable split that the Godrej Group is going through or will undergo over the course of the next few months. Hindalco is the other one which is under pressure. But not as much, but it's still looking at some shorts. And Kotak Mahindra Bank, well, it's lost out on the 1,600 rupee mark, now down 3.6%. And it's not looking good on this one. I reckon that at this point, it's at cost for many of those investors who had put in money around COVID. That was back 4 years ago. So that one is not necessarily great news for long-term investors of Kotak Mahindra Bank. And of course, India Mart Intermesh reacting to earnings coming through, reacting well, up around 5.5%. Let's move on and talk about, the stocks which are seeing unwinding. You have Canfin Homes, Hero Motocorp, along with something like Balkrishna Industries, which is looking at unwinding, but longs unwinding and not necessarily though, because Axis Bank is actually flat, and so is ICICI Bank marginally in the red. Some amount of long unwinding, but not too much to speak for otherwise. Ajit, coming back to you on stocks which are on your radar, what do you like at the moment?
So, Agam, after in the last training session, the OMCs were under pressure post the IOC result. But today, again, we are seeing that there's a strong recovery across the board, and especially BPCL, we have seen a fresh up move with strong volumes. So we feel that the consolidation or the recovery post this consolidation, which we were eyeing earlier, should resume now. And 650 is what we are eyeing in the immediate future. So with stop at 620 in BPCL, one can go long. Another stock that we like from the life insurance space is ICICI Pru. So the stock has already witnessed decent correction, and in the last 3-4 trading session, we have seen a strong base formation on the daily chart around the major averages, and possibly in a day or two, we will see strong up move in the stock. The move have already started, but the momentum is likely to catch up in next 1 to 2 days. So 596 is the immediate target. One can positionally hold for 610 also, and 570 should be a stop in this position.
Ajit, Tata Motors is looking pretty solid on the charts, I believe, and autos have only just started playing catch up from Monday. Tata Motors for the May series, is it a good stock to trade on the long side?
Certainly, Zamina, because this stock has not participated much if you will consider the move that we had in the other auto majors in the recent month. And I feel that the consolidation that we were seeing is almost over for this stock. Volumes are not very encouraging on the breakout, but I feel that soon there might be a catch-up move on that front as well. So yes, one can continue to hold longs. One can accumulate also even at the current levels. 990 should be a stop for this fresh position, and positionally a retest of the record high or maybe higher. So close to around 1070, 1090 is something that one should maintain as a target.
All right. Along with that, let's take a look at some of the big movers in the futures and options space. Of course, I've already spoken about the key gainers and losers in terms of futures open interest. But now I'm looking at your absolute numbers in terms of, advances. So in the futures and options space, you have something like a Power Grid that's up around 3.6%. Then you have something like a Zydus Life. That's up around 3.3% as well. You remember, since morning, we've had a handful of experts who've been talking about Power Grid. Power Grid is looking at a 7% increase in its open interest as well. And this is something which has taken a lot of interest of late. Ajit, anything on Power Grid that you're observing? I know that we've already had experts since morning who are suggesting a buy. Your take on this one, are you contra or you would also look at an upside here?
So certainly, Agam, because the stock has finally crossed the previous swing high, the record high zone in the last trading session, and that's why we are seeing this, momentum, fresh momentum in the stock. So, but at current levels, since the stock is already up around 4%, I feel that for fresh buying, one should wait for any dip, intraday dip, or maybe in a day or two, closer to around 300-305 zone. For the favorable risk to reward, because now we have the strong support around 394. So with that level as a stop at current level, I feel that one should wait. But positionally, if you are holding, then you can trade your stop losses to 300 and continue to hold.
All right, and one of your other gainers in today's trade is Asian Paints. What Asian Paints has been doing, at least since perhaps the last week of February, is that it has not been able to break over the mark of 2,900, 2,950 thereabouts. It seems like that's where it's seen a little bit of a hurdle to cross over, and it's not been able to do that. At the moment, it does seem like it's testing that mark once again. That's where its underlying is. Its underlying is over 2,900 rupees at the moment, and it's moving up by around 1.8%. Ajit, at what point in time would Asian Paints become a genuine buy, a convincing buy?
So Agam, if you'll see on the larger time frame, means on the weekly or monthly chart, you'll observe a pattern that the stock has been hovering in this band with 2,600, 2,650 to 3,500 for almost over 2 years now. And in the last two instances, we formed a higher lows, and this time around also it's a similar pattern that we have been forming, that after retesting the support around 2,800 zone, we have started seeing the stock witnessing a sign of reversal. It's not a complete reversal. So for the confirmation that the stock has reversed, 3,050 is a strong hurdle. So immediate, we have around 2,970, and the major hurdle around 3,050. So once we cross that mark, then obviously the potential to retest the upper band, which is around 34, 3450, that would open. And as of now, also I feel that in case if somebody is playing for a day or two, with stop at 2890, one can still go long with 2970 being the first target, and then 3050.
All right, Ajit, we'll leave it at that. Thank you so much for joining us and taking us through your views on the several stocks that we have discussed, and of course your overall view on the markets. And with that, we're out of time on this edition of the F&O show, but lots more lined up on the other side. You're watching NDTV Profit.
$36 lakh farmer families affiliated with Amul across 18,600 villages of Gujarat have pledged to vote with their families during these elections. I would also urge you to take this pledge and vote as a part of the democratic process of our country.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money,
Welcome, you're watching the Small and Mid Cap Show. I am Mahima Vajrajani and with me is Harsh Saita. Well, before we move on to the managements that we're going to speak to today, let's take a quick check on how the markets are panning out to be. Well, in terms of the benchmark indices, Nifty is trading within a range of around 125 points, roughly 19 points away from its day's high at present, trading at 0.3% higher, off from its day's lows. In terms of top gainers on the Nifty include Power Grid, BPCL, Bajaj Auto, Asian Paints. In terms of Nifty contributors, if you can pull up the Nifty contributors, HDFC, Power Grid, Reliance and TCS is what are the stocks that are pulling up the Nifty. But in terms of stocks that are weighing down on Nifty include Kotak Mahindra Bank, of course, Bharti Airtel, ICICI Bank and Maruti Suzuki. In terms of Sensex, the Sensex is within a range of 400 odd points, off from its day's low again. If you can pull up the breadth of the market quickly, it's skewed towards the buying side today. But the ratio looks, there you go, the ratio is almost 50-50, no, not 50-50, 2:1. But let's take a quick check on how the broader markets are doing. Mid cap 150 and small cap 250. What are the indexes in terms of broader markets doing? There you go, mid cap 150 is up around 0.17%. So a bit underperforming as compared to the benchmarks, and small cap 250 is down around, up around 0.18%. But Harsh, in terms of sectors, Nifty Energy is stealing the show today.
Well, yes, Nifty Energy, and let's pull up the sectoral charts. Yes, the PSC index is doing very, very well. So is auto on the back of those auto numbers, Mahima. And Realty, of course, sulking in trade today, but outside of that, it's been doing very well broadly over the last month or so. Banking not doing much, absolutely flat in trade. It's likely that it's positive because actually the drag would largely be led by Kotak. Actually, let's pull up the banking index. I believe that outside of Kotak, the banking universe should be doing fairly well. There you go. Federal Bank up 3.3, HDFC Bank up 1.3, SBI 1.2. SBI, HDFC itself over 50% of the index. So clearly the index ought to be doing well outside of Kotak Bank. That's essentially what is playing out. Let's also pull up the PSU index, try and see what's buzzing over there before I move to the BSE 500 constituents, top gainers, losers on the BSE 500. There you go. That's the PSU index. Look at that. On top, the power financier twins, REC PFC, doing super well. Second consecutive day where they're doing extremely well. But outside of that, HPCL, Power Grid, so it's a power-dominated kind of a rally from the PSU side. Look at it. Below that as well, BHEL, BPCL. So it's completely power-driven in terms of pretty much all the PSU stocks as well, but just the kind of rally that we are seeing. That's the BSE 500 now. REC, Avanti Feeds, IndiaMart, PFC. Again, those couple of power financiers really hitting out of the park. REC second consecutive day on top of that chart. But among the top losers, Godrej Prop, Godrej Industries, Supreme Industries, seeing a bit of a cool off. Numbers disclosed, I believe, on Tuesday, if I recall right. Just Dial 2 down roughly 4% odd. You also have Kotak Mahindra down 3.7% on that list. But let's welcome on board SIS Limited. Two very interesting conversations we are going to have today with two very diverse sectors. One is SIS Limited. We have Dheeraj Singh with us to talk to us about numbers. Dheeraj, talk to us about, first off, the securities business and margins, because margins have fallen a bit short of what you had guided for.
In security business, if you look at the FY23 to the FY24 numbers, the security business has actually grown by 1.1% in margin. Overall, the EBITDA growth has been 19%, which has been one of the highest growth in many recent years. So we are focusing on the margin as a top priority. We've got that going in the Security India business. Even the international business, security has grown in the EBITDA margin, both on a quarter-on-quarter basis as well as on year-on-year basis by 0.3%. Facility management business has not improved on the EBITDA margin side, but we've cleaned out a lot of the contracts, which gives us a good platform for the coming year to work on the margin, and we are very confident of seeing an improvement there.
Understood. Mr. Singh, Mahima joining this side. I want to understand that, your market share, as you said in your previous quarter's con call, is around 5%, but you aim to grow it at 10 to 15%. So, what will be the growth triggers that will take you to, that 15% mark, and how quickly do you think will you go there?
So, any market leader in a developed country has 15 to 20% market share. Our own Australian business in security is about 20% market share. So in India, the drivers that will help us, one is obviously the phenomenal GDP growth that we are expecting, which will have a multiplier effect on a business like ours. Apart from that, we all expect the minimum wages level to increase. It's lagging behind for many years. So we are talking about the living wages also. That will again help our business because we have a cost plus percentage model. We are getting into many new sectors, so we are gaining market share from other competitors. As there is more focus on compliant services, compliant standards that are going to be required from the clients, that will make a shift towards the larger company like ours. So all of this together will help the business continue to gain more market share.
Understood. And with regard to the cash business, any headwinds that you are seeing in terms of the sustainability of the cash business over a longer period of time? That's my first question. Second, how quickly do we list?
So first question, let me share with you that pre-demonetization and as of now, the cash in circulation has grown 3 times. So it's a 3x growth for the cash in circulation pre-demon and now. At the same time, yes, the digital payments have also grown 800%. Somebody is both cash is here to stay and grow together with the digital payments. Regarding the delisting part, we have announced that we are considering the delisting and very soon. And we hope that within a year or so, we'll be able to deliver that.
Understood, sir. Sir, with regard to the cash business itself, I understand you've highlighted that the opportunity seems large. Would you therefore, there are some pockets of the market which are tending to lean on the assumption that it's a business which may not survive into the next decade. Do you believe that that is untrue?
Absolutely. As I mentioned, the cash in circulation has grown up 3 times together with the digital payments increase. So the cash part is definitely going to stay. We've seen the similar trends in developed markets too. Having said that, we are also pivoting our business to working directly with the banks on more outsourcing solutions of the banking industry. And that part of our business is growing rapidly. We're doubling that part of our business every year. Last year, it was about 3.5%. Now it is about 7%. So we will continue to focus on that part of more banking outsourcing solution services.
Understood. Mr. Singh, I'd like to shift focus to your debt. Your debt has been reducing. So I just want to, I want you to give a color on, how the debt will pan out to be by the end of FY25. Do you see it reducing, going up? How is it shaping up?
So below level of 2 for the net debt to EBITDA ratio, it is a comfortable level for our industry. As of now, we've reduced it from about 1.72 to about 1.5, and which is pretty healthy. Now, if you do an acquisition in the near term, it might see a little bump. But what we are very happy to share is that our collections has been one of the highest in the last quarter, which gave us an OCF to EBITDA ratio of almost 68%, which is an all-time high. So we continue to focus on our cash collections. And as and when any acquisition opportunities come, we will consider altering our debt structure.
And Mr. Singh, going forward, I want to understand that, what kind of revenue growth are you expecting, one thing, and will it be through wage growth or volumes, one thing? And, what will be the revenue mix like going forward?
So if you look at the past 28 quarters, we've been growing at more than 15% CAGR. And for the coming year, we should be in that same range. Apart from that, we are looking at inorganic mergers opportunities, which can add it further to it. Security business and the facility management business in India, both will obviously continue to grow at a higher rate than the international business, where we will focus more on improving the margin profile.
Good. Quickly, Mr. Singh, last piece, with regard to acquisitions internally funded?
For some of the acquisitions, which might be smaller, we can do internal funding. For others, we will consider external funding.
Good. Okay. Thank you so much, Mr. Singh. We're short on time, but we will call you maybe in a month or so from now to break this down a little bit better. Thank you so much for your time and the perspective on Q4 numbers.
Thank you.
Well, we'll slip into a very, very short break. On the other side, we have the management of 5-Star Business Finance joining us to talk to us about the company's fourth quarter earnings. This one is trading at a price to book of 4.5 times, trailing 12 months, of course. Stay tuned. Expensive business.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find
Welcome back. You're watching the Small and Mid Cap show, and 5-star business finance is in focus on the back of Q4 earnings. And to break down the numbers for us, we have with us Mr. Rangarajan Krishnan, CEO of 5-star business finance, who joins us now. Welcome to NDTV Profit, sir.
Hi, good morning. Thank you for having me on the show.
Yeah. My first question to you is, the significant AUM growth that you've witnessed, where is it exactly coming from? Is it geographical expansion, or, what is actually aiding the growth? And, going forward in 3 years, do you plan to double this?
So the growth typically comes from 3 factors for us. I think one is, of course, the geographical expansion and the number of branches that we're able to put up in a new year. Last year has been a very significant expansion for us. We actually ended up opening 147 new branches. A part of these branches are what we call as split branches, wherein we transfer a set of existing accounts from an older branch to a newer branch. This helps us in better business and collections and managing the risks in a far better manner. The second aspect of the growth comes from the number of people that we're able to put in a branch. So last year, through this branch additions and a little bit additions to the headcount in the existing branches, we added roughly about 900 officers across these branches. So that adds to the throughput of what we're able to get out from each of these branches. And of course, the third is also, in terms of any increases in the ticket sizes that we're able to get. So last year we saw, the ticket size on an average increase for us from about 3 lakhs to 3.5 lakhs. This used to be the ticket size that we enjoyed pre-COVID levels. During COVID, we were consciously conservative and we got down the ticket sizes by tightening our credit norms. So last year, even that came back on track given the increasing incomes that we were able to witness at the ground level. So a combination of these 3, gave us an extremely good growth last year. We ended up clocking a growth of about 39% in the previous year.
Understood. So, Mr. Krishna and Harsh also joining in, want to try and understand, are you going to double loan book in 2 years? Would this kind of trajectory continue, this 40% kind of growth?
No, I think we will be comfortable at 30% plus kind of a growth rate. One is what you are capable of, but of course, second is also what you should be growing, given the considerations of where the economy is, where the players are, what does the regulator want, and what is the risk environment. I think considering all this, we are fairly comfortable in growing and clocking a growth rate of about 30% plus. So instead of doubling the book in about 2 years, we are confident that we will certainly double the book in about 3 years.
I want to try and understand that is this a conscious calibration is what you're talking about, or is this a higher base which is slowing you down?
No, I think the segment that we are serving, we have sort of addressed this multiple times in the past. This is a very, very niche segment amongst most of the sub-segments within financial services. This segment probably enjoys the least amount of competition. This has the highest entry barriers. This is the toughest to operate, in terms of operational intensity of the business that you have to do. And we being a very significant player in this segment and having experience of over 2 decades, I don't think there is a dearth in the opportunity per se. So it's more about calibrating and making sure that you are doing the right moves and building the company for the long term rather than clocking an immediate sort of expansion in your growth rates.
Understood. Mr. Krishnan, I really want to understand that, why aren't others entering into this then?
No, I think, see, firstly, you have to understand who are we serving. We have three categories of segments that we serve. The first and the largest category are people who do extremely small businesses. You see them, in every small towns and every city in India. So these are people who are single shop owners. They can offer any kind of a product or a service through the single shop outlet. We have almost 60% of our customers coming in from this segment. So these are people who don't have a big credit track record, who don't have an operating bank account, while they do have an account. But it's very difficult for you to get comfort looking at their bank transactions in the past. So it's very difficult to evaluate their incomes. The second segment that we serve is self-employed individuals. Again, this is a very, very large segment in India. So this includes your plumbers, painters, masons, carpenters, drivers, maids, a whole host of these people. Everybody is credit hungry. Everybody has a lot of credit needs. But again, they cannot go to formal institutions for the reasons that I just explained. The third segment that we also cater to is typically people who get their salaries in cash. And that's a very large segment in India. We still have a lot of casual laborers, people who are employed in shops, people who earn their wages. They get paid in cash. So, it's very difficult for them to again go to a formal financial institution and establish their income streams. Now, given the difficulty around establishing income streams and given the difficulty around establishing previous track records, mostly this segment of people go and end up borrowing from money lenders or the informal segments. And that is the segment that we are trying to disrupt. So for somebody to be successful in this segment, you have to understand these segments very, very deeply in terms of firstly, how do you assess their cash flows? And secondly, how are you going to collect the monies back on time? And thirdly, how are you going to keep the operational costs in check? I think a combination of these three is very difficult. I wouldn't say it's impossible. This is a segment which is attracting a lot of attention. But I think, competition will pick up over a period of time. For players like us who have been exclusively focused on this segment, we probably enjoy an edge.
Understood. Okay, and as you're suggesting that competition is starting to pick up, is it?
Like in any other segment, this is a fairly attractive segment. I think people get attracted to the yields. People get attracted to the large size of the opportunity which is there. And, they are trying to carve their own niches within this segment. It's a good thing in some sense. Because, I think all of us are trying to eat the market share of informal money lenders rather than stepping on each other's shoes at this point of time.
Understood. And therefore, you should be able to sustain on your margins and yields?
Yes, I think to a large extent, we will be able to sustain on margins and yields, except to the point that we have always been guiding the market that today we are enjoying a little bit higher spreads than usual. Because if you were to track us over the last 2 years, we have enjoyed the benefits of lower cost of borrowing, but we haven't really passed on this benefit to the customer segment still, because we have been waiting and watching the interest rate scenario that is panning out in the country. So it's a question of time. I think when we get the clarity about how the scenario is going to play out, we will be passing on some benefits in terms of our lower cost of lending to the borrowers. So we always say that the steady state spreads that we would like to enjoy is about 12%.
Understood. So where would therefore, in your view, yields lie? Would you calibrate it according to your cost of borrowing as it continues to come down? So first off, how much should cost of borrowing come down from here? It's come down substantially. What's the scope like, maybe in the next year or two? And I think where would yields therefore lie?
Today, the cost of borrowing for us is about 9.7%. We have enjoyed significant benefit over the last about 2 years. But assuming that it stays around 10% for now, unless we are able to break and get into the next level of credit rating, or we are able to get a larger balance sheet, which will take some point of time. So let me not assume very significant benefits in cost of funding. But if we are assuming that our cost of funding is around 10%, we would like to enjoy a spread of about 12%. So our comfortable lending rates will be the range of 22%. Today, it's about 24%. So, we will definitely be able to pass on some benefits to the borrower over a period of time. I don't think it will be immediate, but over the next about 2 to 3 years, we'll be able to gradually pass on these benefits to the borrowers.
Understood. Mr. Krishnan, I also want to understand that, your branches have grown significantly, but your OPEX has remained in the same range. So how are you managing that one thing, and going forward, OPEX will remain in the same range?
Yeah, I think thank you for asking this question. It gives me an opportunity to clarify this. Usually, we don't end up opening close to 150 branches in a particular year. Our steady state ability to open new branches is in the range of about 70 to 80. And this is what we have been guiding this market. But last year, we consciously took a slightly different strategy. We wanted to break down the larger branches and make it into smaller branches. We wanted to be operating in a denser network of branches rather than operating in very significantly large size branches, because that helps us manage business better, that helps us manage collections better, it helps us manage attrition better, and much more important, it helps us bring down the overall risk in the business. Imagine handling about, let's say, 2,000 customers in a single branch as opposed to handling about 1,000 customers in 2 branches. This is a very widely different operational risk that you are dealing with. So last year, about of the 150 branches that we ended up opening, roughly about the same 70 branches are freshly new branches, and the balance set of branches are split branches, which means one branch got broken down into 2. When a single branch gets broken down into 2, your OPEX doesn't go up because you are redistributing your existing people, you are redistributing your existing resources from a single branch to 2 branches, and that has helped us maintain the OPEX cost, at a very reasonable level.
Understood. And you expect to operate in that 33 to maybe 40% kind of OPEX band? OPEX to income?
Our cost to income is about 35%, and that's one of the best cost to income that you will see across the segment. And we are very comfortable operating in the same vicinity.
Understood. And with regard to ROAs, you've got best in class ROAs, 8.5%, just below 8.5%. You expect that to sustain because it seems that the way in which factors are lining up, margins, OPEX, credit costs we haven't spoken much about, but credit costs nonetheless, and therefore ROA should hang around that 8.5 kind of mark?
Harsh, except for the fact that when leverage increases, ROAs will drop. Everything else what you have said is perfect. So our ROAs will drop because today our leverage is hardly about 2.25%. So, and our capital adequacy ratio is close to 50% when the regulatory requirement is 15%. We have been very clear that the business is going to be funded purely out of internal accruals and existing capital for the next about foreseeable future of at least 4 to 5 years, which means we don't need to rely on external capital. But when you are growing at this base and you don't have the need for external capital, which means the capital adequacy will keep dropping and your leverage will keep increasing. Consequently, your ROAs will drop. So 8.5% is not what we are expecting in the steady state. Our steady state ROAs will be more comfortable in the range of about 6.5%. But I think the point to note is you will see an uptick in the ROEs, which you have been able to demonstrate even this financial year, where the ROAs have picked up from about 15% to 17% plus, or close to 18%. And you will see that in the next 2 to 3 years, as leverage further picks up, we'll be able to deliver a 20% plus kind of an ROE.
Understood. And how many touch points would you get to? Maybe say 3 years from now, would you double touch points?
Yeah, I think doubling touch points in the next 3 years, combination of new locations plus split branches is very much in the cards. We should be able to do it.
Okay, Mr. Krishnan, with that, we're completely out of time. Thank you so much for breaking that down for us in such an elaborate manner. It's all we have on the show for now. Stay tuned for more news and updates on NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. we have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different.
And thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary and we'll take you through the next half an hour or so of trade. Let's take a look at where the markets are right now and you're seeing gains of about 1/3% for the benchmark Nifty 50 and the broader markets are languishing just a tad bit. In fact, if anything, we're at close to the high point of the day for the Nifty 50. You see that bit of gain in the last 10 to 15 minutes of trade itself. And the mid-cap index currently with gains of just about 0.2% or thereabouts and similar gains for the small-cap index as well. All told, it is a little bit of caution that is in evidence in risk assets, not just here in India, but across the world, where you're seeing a patchwork of performance in both the US markets, which were mixed, as well as the Asia Pacific region. But let's take a look at some of the key indices to watch today. The auto index is looking strong. It's up as much as 1% or thereabouts in trade today and one of the top performers. But the metal index is also doing reasonably well, up about 1.2% or thereabouts. Energy is in focus because crude oil prices have declined quite sharply in the last couple of sessions. As of this morning, you had the Brent crude, which was trading at $83.5 to the barrel, and in fact it has lost quite a bit of ground over the last couple of days. You have oil and gas, which is up about 0.8%. Among the losers, you have realty as a pack that's not doing too well in trade today. It's down about 1.5% or thereabouts, and the Nifty Bank, which saw quite a precipitous fall at the end of the session on Wednesday, is continuing to lose ground, but it is off the low point of the day, still down about 0.3%. Let's focus on auto then. And you've seen quite a few updates over the course of yesterday and today on the auto sales numbers for the month of April. And there's a pretty clear picture that is emerging in terms of which segments are doing better than the others. To tell you more about the update, we've got Puneet joining in. Puneet, what can you tell us?
Hi Alex. So as you rightly said, there is a clear theme which would be that rural has done slightly better this time compared to the whole of previous year, where the trend of rural has been on the downward. So when you look at companies across segments of two-wheelers and commercial vehicles, they have delivered strong performance, with Hero MotoCorp in the two-wheeler space up 35%. The sales is up 35% on a year-on-year basis compared to the previous year, while TVS Motors has also performed well, growing at roughly 25%. Both these counters have blown past analyst expectations, as we can see on the screen, where the sales were guided for by the analysts on a much lower basis. Now for Hero specifically, the 125cc segment has done really well with the Extreme, while for TVS Motors, they have products range across the 100 to 125cc, as well as the EV scooter has done well, despite the lower subsidies given by the government in the new EMPS scheme. For Bajaj Auto as well, there's a 17% growth, while Eicher has grown roughly 12% compared to the previous year. Commercial vehicles, though, are showing the real growth, up 31% for Tata Motors, the market leader here. Two segments specifically, the passenger carrier as well as the intercity transport vehicles, the ILCV is what they call it. Both these segments have grown more than 100%. What this would indicate is that the people who generally have the passenger carriers who would generally transport people from point A to point B, this segment has grown 100%, showing that this segment is coming back. FY24 was very weak for these particular segments and is the key for both these companies. While VCV, and here is a divergent trend, the only CV maker showing a degrowth of more than 18%, while their MHCV sales have fallen roughly 24%. A little more commentary in the earnings call will be key. While finally the passenger vehicles, not so much growth, and for Maruti specifically, it does well when rural does well. But here in this is a key update that they've launched the new Swift, which will be going, the bookings for which have started from the 1st of May. And they have pulled back some of the older stock in the compact mid segment where the Swift operates. So that's why lower sales for it. Mahindra & Mahindra has continued a strong SUV focus. So do know that they operate the Bolero SUV in the rural space as well. So overall, just to sum it up, the rural theme has worked well for all companies. Going forward, we'll see more commentary by the managements in the earnings conference call. But right now, stock's doing really well for the rural players. Back to you.
Thank you, Puneet, for that. Good morning, viewers. Now, on that note, let me introduce you to one of the guests. We have Osho Krishnan of Angel One joining in. We'll also shortly be joined by Sameer Dalal of Natwalal & Sons. But circling back to Nifty Bank, we'll definitely talk about autos in just a minute. Osho, I want to focus specifically on the Nifty Bank index today, as Alex has already spoken about what happened in the previous session. And today as well, it's a bit of a chop and churn in the index itself. A lot of volatility. You look at the high points, you look at the low points of the day. How are you viewing this on the charts, Nifty Bank?
Very good morning to both of you and all the viewers. Firstly, thank you for having me at your show. Now, coming back to the query on Bank Nifty, yes, Bank Nifty have seen a very strong traction in the last two trading sessions. But as we can see that the last session was the expiry for Bank Nifty, so it has seen strong long unwinding, but overall the structure remains very buoyant in Bank Nifty. So I'm expecting that on the downside, 49,000 to 48,900 on the spot level should be acting as a very strong support zone, while on the higher end, the resistance is very nearby. Approximately the close of last session for Bank Nifty, which was approximately 49,430 odd levels. That is a very crucial level to watch for. The time it surpasses that on a decisive manner and sustains above there, then we can witness a strong rally in Bank Nifty. On the higher end, I am expecting approximately 49,700, 800 to be seen as immediate target, followed by the mark of 50,000.
We're still waiting for Sameer. All right, Sameer has just joined in. Sameer, thanks so much for taking the time. We were talking about auto sales and the ones that have come through. A quick view on how you view the numbers and which stock do you like?
Hi, sorry for the late arrival, but yeah, you were asking about the auto numbers. So, I actually haven't been able to go through a lot of them. What I do know about is the Bajaj Auto numbers, which came in quite decent. But the rest of them I still haven't looked at, so I don't have an answer to you at this point.
Fair enough. But given what you know so far, what stock, according to you, from the OEM pack do you like the most?
So actually, if you ask me from the OEM pack, a lot of them have already run up quite a bit, and where valuations have, moved up, and I think a lot of the stocks are fairly valued at that. So the opportunity actually, if you ask me, lies in companies that are outside the existing OEMs in the sense of the traditional ICE engines, but someone who's focusing more on the electric vehicle and the opportunity for growth. So one of the companies that we do track in that space and we like is a company called Reeves Cotton. We mentioned this on your channel before as well. And I'd like to say that we have a holding and we've recommended it to all our clients as a disclaimer. And a lot of our clients hold it. So they're making the electric two-wheelers and three-wheelers. They're increasing their product profile. Where they've taken a bit of a hit in the recent past was that you get these certain benefits which the government said they were not allowed to take because of certain amount of parts that were being imported. Now they've repaid all of the benefits that they received in the past, and to the point have also reapplied for this FAME license. And once that comes through, we get a feeling that they will become more competitive when it sells. Not said that they're not already, they're already selling bikes without being able to get those FAME benefits and being competitive in the market. So that is one of the stocks that we do like. But like I said, in the traditional OEM spaces, I think the one stock that maybe valuation comfort to some extent is there is Hero MotoCorp. That hasn't run up. Bajaj Auto post its buyback has moved up quite significantly. I think Tata Motors, Maruti all have moved up. Maruti, of course, has the fact that numbers came in quite good so far. So, I mean, but like I said, I wouldn't be looking to invest in them at this point of time. Maybe on corrections, yes, but Greaves Cotton and Hero are who I would.
All right. Got it. Let's quickly jump into the queries now. Now, let me remind you first that you can write to us on any of our social media channels or on the WhatsApp number that's on your screen. You can also write to us from the YouTube live chat and we'll take your queries from there. Let's start off with the queries. The first one is on Divi's Labs. This one's from Rajesh Maheshwari. He's writing in from Singapore. He says he bought the shares at a price of 4,465 rupees, slightly elevated prices there. Now, his question is, does it make sense? And the stock seems to be, isn't doing too well in the last couple of months as well. Osho, I'm going to come to you in this on this one. Does it make sense to hold on to the stock? Do you see upside?
See, overall in Davis Lab, yes, as you have mentioned, in the broader perspective, the counter might not have given that much of return, but in the short-term perspective, the counter have seen a very strong traction and it has research from the 200-day SMA. So that is a very positive development on the technical front. But again, on the higher levels, approximately 4,000 and 4,050 odd levels is a very crucial resistance. Until it surpasses this level on a sustainable basis, there can be some kind of consolidation or some kind of profit booking that can happen in this counter for the short term. But the time it surpasses the zone of 4,050 on a closing basis, then from here onwards, one can expect a decent rally of approximately 300 to 400 odd points.
Okay, fair point. We've got the next question that is from Neeraj, and he's asking about Tarson's products. Samir, do you have coverage on this one? He's looking for a long-term view on this, and I suppose he's asking whether he should get in at this level.
You said Tarson, right?
That's right.
No, we don't have coverage on that one.
Okay, so then do you have a view on whether AB Capital is better than Aditya Birla Sun Life AMC?
So they're very different businesses, right? So if you own AB Capital, you also own Aditya Birla Sun Life AMC. So AB Capital, first of all, is a business that is into lending. They have lending operations, which is the key focus. They're growing their loan book quite well. After the new management has come in, we've seen a massive re-rating. You've seen NPAs coming lower. You've seen the provisions coming off. You've seen profitability going up. So on all factors, it's good. Then you also get the insurance business along with the health insurance, which is of course right now still in the early growth stages and reporting some losses, and the life insurance business, which is quite profitable. So if you were to ask me which one of the two I would to buy, I would prefer AB Capital, because at the end of the day, I believe the lending business is something that will continue to grow. The life insurance businesses will grow, and I get to play the Sun Life business. I mean, the AMC business separately. Through the AB Capital kind of investment. So I would recommend AB Capital over AB Sun Life at this point of time.
All right. The next counter we're talking about is SBI Life. This one's from Mr. GC Prakash. He's also writing to us on YouTube. They say they bought the counter at a price of 880 rupees. So a considerable profit there, Roshu, and this is from a shorter term perspective, from 1 to 3 months. Now, the stock hasn't done too much in the last 1 year itself. Would you suggest holding on for maybe 3 more months?
See, overall, this counter have seen a very good traction in last 5 to 6 trading months. Overall, it is in the cycle of higher highs, higher lows, and recently is trying to get a settlement or get a support kind of a consolidation near the 200-day SMA, which historically has seen a very strong support zone for this counter. So from here onwards, there can be a decent and gradual up move that can be seen in SBI Life. On the higher front, I am expecting again, once it surpasses the zone of 1500, 1520 odd levels, then this counter has the ability to again re-enter into the uncharted territory. So even for short-term perspective, one should definitely hold this counter. If advisable to keep a stop loss near about 1380 on the spot price for a higher target of nearly 1520 for very short term, and after that we can even witness a very strong upsurge in this counter.
All right. That's the view on SBI Life. The next one's on IRFC, which Arun Kumar from Ghaziabad in UP has bought at levels of 71.6. He's asking whether to book profits at this juncture. Osho, on the charts, how does it look? It's currently trading way above the buy price. In fact, it's been a doubler for this particular viewer. Should it be? Should money be taken off the table right now?
See, IRFC is a counter that if you don't require the money invested in IRFC, then stay invested in this counter. Overall, this counter have seen a very strong traction, as you have mentioned. And after that traction, the counter is into a time-wise correction phase, which should be considered healthy from a longer-term duration. So from here onwards, I am having a very bullish view and expecting that in a short run, it should again retest the zone of 180, 185. And on the lower end, 135 to 40 is a very strong support zone for IRFC. So if money is not required, I will advise to stay invested in this counter.
All right. Next counter we're talking about is Tata Steel. This one's from Anush Patel. This one's from Sohail, and they bought the shares at a price of 1,000 shares at a price of 162 rupees. So slightly below where it's currently trading at. From a longer term perspective, Sameer, would you suggest holding on to Tata Steel?
So given the fact that metal counters are doing well right now and everyone's expecting metal prices to remain firm, because China seems to be seeing some moderate sign of recovery, they're talking of the fact that the Chinese government will come and give some support for the real estate sector, which has been struggling there. And steel actually has a big consumption there as well. Apart from that, the auto ancillaries and all of that space is doing quite well. So the demand for the metals will remain robust. As long as the cycle continues to remain up, I think one can stay invested. However, one thing with metal counters is, there's a massive amount of volatility and there can be very fast changes in how the prices come down. So if one wants to stay invested and enjoy the bull run in the metal counter right now, stay invested, but keep a stop loss. And keep the stop loss rising as the stock keeps rising because of these metal prices. But keep it 5% below what the going price is at that point. And if you see a 5% fall, take your money and get out of the stock, given the fact that the volatility can be quite high.
Absolutely. That's the case, I guess, with metal. When the underlying, you don't know where it's going, right? Sameer, thanks so much for that view. We have to take a very quick break. On the other side, we'll take more of your questions, so do stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai. Brought to you by State Bank of India, the banker to every Indian.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling?
Welcome back. You're tuned into Ask Profit. Let's dive into the queries again. This one's from Anush Patel. Talking about two counters here, and Osho, I'm going to come to you on this one. The two counters are NCC and NHPC. They want to know if this is the right time to enter these two stocks, and if you can give us the levels that one should enter at.
See, firstly on NHPC, I have a very strong view on NHPC, and I'm expecting that in a very short time, it will be entering into a 3-digit figure. So on the higher end, I am expecting 102 and 105 to be seen as the immediate target for NHPC. Reason behind it, it is hovering at a very strong technical setup and recently has seen a very strong breakout around the zone of 95 odd levels. So from here onwards, I am expecting a very decent move. Approximately 105 should be the immediate target for short-term frame, but overall the structure looks very prominent, and I'm expecting even for a medium-term duration, it has the ability to move towards the zone of 112 to 115. Now coming to NCC, NCC again is looking very positive, currently entered into a consolidation phase, but historically the 50-day and 100-day EMA has proved to be providing a very strong support zone, and it is hovering around the 50-day EMA. So there can be some kind of lackluster move or consolidation that can be seen on short-term frame, but overall the chart structure is very strong, and I expect the time it breaches the zone of nearly 250 odd levels, then from here onwards again a strong traction can be seen for higher targets of nearly 275.
Absolutely. It's another doubler over the last 12 months. I think we're going to have to do a separate show on all of these doublers. Let's talk about IOCL though. We've got a viewer who has got a tremendous quantity. Asif, he's holding 1 lakh, is that right? 1,50,000 shares of IOCL that he's bought at levels of 80, and wow, you know, he's making quite a bit here. The question, Samir, therefore is to you. He's got a long-term view on this particular counter, and he's been holding evidently for some time, making quite a bit of money. Should he hold on?
Honestly, if you ask me, I would take some money off the table, not from the point of view that whether I expect the stock to go up or down, but it doesn't hurt to book some amount of profit. Now, coming to IOCL specifically, the company has done really well because the refining margins for the company had moved up, the retailing margins had moved up, and all of this cannot sustain indefinitely. Yes, the last quarter results, if you see IOCL, the results came in a little subpar where the refining margins did come down, and we got these high refining margins because we were getting cheaper crude from Russia. Now, we may not continue to keep getting that price, and with that, maybe refining margins could take a bit of a knock. Secondly, we are in the election period, so of course these price increases in crude that have recently happened, we were not able to pass on. Going forward, they will definitely increase some amount of retailing prices, but I feel a lot of the positivity for the stock has been captured in. So book some amount of profits if you want to continue to ride till the Russia-Ukraine war goes on, until you have these embargoes on Russian crude in the global market. These counters will do well, but once these embargoes and if the war and the embargoes go, I think what you will see is that your margins, profitability and all will start coming off, and that time the stock will fall quite quickly. So take some profit now, maybe 20%, and keep the rest if you want for another 6 months, and keep viewing the situation as it is.
All right. Now, the next counter we're talking about is Castrol. This one's from Satya, and this is also from YouTube. Now, they say they want to ask that if this is the right time to buy a stock like Castrol. Now, we see the fourth quarter numbers for this one. Nothing, I mean, it hasn't done too much in the fourth quarter. Even if you look at the stock, Samir, the stock has been pretty much on a downturn in the last month or so. Would you suggest buying at these levels? Is it a right time to buy?
So actually, if you look at a slightly longer term period, the stock has given exceptional returns. It's moved up from 120 odd to 200 and 220. Yes, last month has been a bit subdued. The reason why Castrol actually, if you look at valuations, is trading at quite attractive levels from a point of view is that expectation is as the oil moves to electric vehicles, the demand for the oil, which is their core business, will start coming off. And if that starts happening, the main profitability and the main business gets affected. Plus, the space is already very competitive with HPBP, all these companies making their own oil. You have Gulf Oil, it's very competitive. But in this competitive nature, if you would look to see, they've actually done quite well. They've actually grown their top line, and they've talked about the fact that they've been able to capture a little bit more market share, and they're increasing their rural penetration and all of those points. So it's not so negative. Yes, the stock in the recent past, like you said, has underperformed, very recent past. But the way I look at it is they're diversifying into various new businesses. One of them is into, maintenance of cars. They're doing tie-ups with various players, and where they're going to have set up centers for repairing and maintenance of cars. Apart from that, they're going to get into setting up charging stations at their various store levels. And they are also diversifying to make a liquid which goes into the batteries for electric vehicles. So all of these businesses will also start seeing an uptick over time. Given the fact that it's a debt-free, cash-rich company, I think the long term looks good. Is it the right time to buy right away? Probably not, given the fact that it ran up from 120 to 200. Maybe if it comes down to the 180 levels, it would make a good investment from a 3 to 5 year point of view. And of course, we have to keep reviewing it, but we do like Castrol from a longer term point of view.
Gentlemen, do keep your answers a little bit shorter. We're going to try and fit as many as possible over the next 3 minutes. The next one's a Paytm question. It's from Nehal. She's bought at levels of 791. She's got a short-term view on the stock. Osho, should she hold on?
See, for Paytm, again, I'm not very much bullish, because looking at the overall trend, it has, after having a very strong fall, the counter has entered into a consolidation phase. So until it surpasses the zone of 440, 450 odd levels, I won't be having a very bullish approach in this counter.
The next counter we're talking about is IDFC First Bank. This one's from Sujay from Kolkata. They say they bought the shares at a price of 85 rupees. It's trading slightly below that price. Samir, from a longer term, and by a longer term I mean 1 year perspective, I think that's the holding period that they have in mind. Would you suggest holding on to it?
Absolutely. So my 1 year target for the stock is 120. The bank's growing quite well. They've been aggressive on provisions, which is why what you've seen after the results, the stock saw a bit of a dip. But if you look at it, the gross NPS, net NPS are down. So I would definitely hold on from a 1 year and a longer term.
That was Sujay's question, right? All right. The next question is on GMR Infrastructure. It's from Swastik. He's asking whether this is a good stock to enter at the current price, which is at 85. Osho, what's the view on the charts?
See, overall, this counter looks very positive. Recently, it has started gaining traction also. But at current levels, it's better to have a accumulation in a staggered manner, because it is already at a very stronger price zone, at a higher price. So I expect that from here onwards, undoubtedly, I'm expecting a 3-digit target in this counter. But on the lower end, one should keep a room near about to accumulate more, near about 75 to 70 odd levels.
All right. The next counter we're talking about is Irida, and this one's from Hanu Mantharao from Hyderabad. They say they bought the shares at a price of 103 rupees. It's trading around 181 rupees. Would you suggest holding on to this counter, Samir, from a longer term perspective?
No, I don't. I think one should take money off the table. As good as the run it's had, I think valuations are a bit stretched. There are other NBFCs trading at better valuations. Take your profit, get out, and find something else to invest in.
In Restaurant Brands Asia, would you hold on to this if you bought at levels of 95, I think, if I'm not mistaken, Samir?
Yes, I would hold on to it. The company's expanding its footprint with Burger King. I think the kind of penetration growth that can happen over the next many years has been exceptional. The overhang is that Everstone, the private equity that owns it, is looking to sell. And once that exit is completed and new promoter comes in, I think the stock will start seeing an uptick.
That last question was from Subodh Malhotra. We managed to fit it in. Samir, as well as Osho, thanks so much for taking the time. Viewers, we're completely out of time on this particular edition of Ask Profit. It's been a pleasure bringing it to you. Do stay tuned. Lots more coming up on NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Brought to you by State Bank of India, the banker to every Indian.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in
Welcome. We have with us a very special guest, a company that's been quarter on quarter performing well and of course delivering stable earnings is Castrol India. This time around, while the top line looks good, there has been a little bit of contraction on margins. But we have with us Mr. Bakshi, who joins in to talk to us about the quarter gone by and giving us a sense of what lies ahead in FY25. Mr. Bakshi, thank you very much for joining us today on the show. It's great to have you on NDTV Profit. Mr. Bakshi, give us some color about the quarter that's gone by. Your net profit is up nearly 7%. What are the factors that led to that? Apparently, and also the sense that we get is revenue is muted and margins have contracted a little bit. So wrap that up for us, and also tell us what lies ahead for FY25 in terms of a guidance.
Amina, thank you very much for having me on your channel. It's a pleasure talking to you. I think it was a resilient quarter. And the quarter started with a bit of a slowness in the consumer demand, but February and March we did pretty well, as a result of which we managed to grow volume above the market levels. The margin range that we give a guidance is around 22% to 25%, and we have been in that range for a while consistently. This quarter we delivered about 22% as well. We put a lot of actions in the marketplace. We've been continuously investing in our brands. We signed up with Shah Rukh Khan, who's going to be our brand ambassador. We're also investing in being performance partner with MI Indian, which is the IPL team, and KTM Cup. So overall, with all of this and new products, the rest of the year looks good as well.
That's exciting. In terms of what you had guided for on the margin front was about 23 to 26%. Margins have been lower than that. Now, is this a one-off as we go into FY25? Do you think the range of 23% to 26% still stands for Castrol?
I think it will. And this quarter, basically, there has been volatility in the crude price as well, and crude is our key input in terms of our raw material. And as I said, the year started a bit slow in terms of the consumer demand. So we think we will still continue with that margin. We're not giving any other margin as yet. So yeah, that range is something that we will aim to get and deliver.
Right. Fingers crossed on that one, Mr. Bakshi. Also, give me a sense of raw material. You alluded to that just a little bit in this question, but elaborate on that. What does the environment look like? Do you feel like there could be some more upside risk on raw material prices going ahead, which could then potentially impact margins? So a lot of that is already hedged in that sense.
So look, I think crude price is expected to go up slightly than what it was in 1Q. I would also like to share that, because we import crude, there is a foreign exchange impact that comes onto our input prices as well overall. So of course that is something that we have to deal with. But we've been doing this for a while. We have pricing models in place, and we continuously look to add value to our consumers. And if the pricing in terms of the input cost goes above a particular band, then we take pricing in the market as well. So from that point of view, I think we should be able to manage the EBITDA margins. At the same time, I think our focus is on to grow volumes. We have taken several initiatives to grow volumes, including expanding our workshops, which are the independent workshops, both in cars and bikes. And we also recently went into diversification on products like auto care. So that's doing well as well.
Right. So Bakshi, you talked about how your focus is going to be on top line, and give me a sense of that. You've talked about products as well that you've been launching. Any new products that are expected or that we can expect from the Castrol stable in FY25?
Certainly, I think firstly we would be launching a product into personal mobility. And, this is in line with our principle of both protecting the engines as well as, looking at how we can give a performance delivery at the high end. So that's something that we will do. We will also looking at technological advancement continuously. So there will be products in that range. And most importantly, on electric vehicles, we launched a few products last year in fourth quarter. So we will continue to expand on those products as we respond to the electric vehicles opportunity that is in the market.
And all this revenue increase that the company is currently focusing on will not come in at the price of profitability, right? So you won't let go of your margins to build revenues.
No, I mean, look, I think it is ultimately a trade-off, and it is cost benefit, and lots of factors play into the whole dynamics. But having said that, we're saying we'll be in that margin of 22, 23 to 26%, the guidance that we have given. So yeah, I mean, that's the range. I think we need that elbow room mainly because with the sensitivity of the crude price, there is always a lag. In terms of your response, by the time the consumers get the product and by the time we get the imports in. So therefore that lag, it should be looked at it more from a point of view of the margin growth within a band over a period of time as opposed to just one quarter. And therefore this quarter is not really a question of worry for us.
I do know that you'll have launched Castrol On that helps improve performance of EVs, and that's the space that you talked about as well that you're making investments in. How significant will this be, say, over the next couple of years in terms of top-line contribution? And is this a good, profitable business to get into, or are you just taking a leap from your customers where they are in the business and hence you have no choice but to venture into it?
I think there are various threats to responding to the EV opportunity, if I would say. Firstly, the Castrol On product, or the products that help electric vehicles. I mean, these are coolants, transmission fluids, greases, etc. We have almost top 3 or 4 OEMs in India to whom we supply these products. Currently, the volumes of these products is small, but as the EV sort of segment starts growing, I think we'll be able to supply more, and it will contribute to the top line. But currently, I would say this is a small, insignificant part of our top line. The second part of the EV is really around battery management, thermal fluids, thermal management, and there is a lot of research that is going on globally. We invested about 50 million pounds in our R&D center in UK. And, an offshoot of that, there are use cases being worked for opportunity in data center and data center fluids. So I think there is a lot of work that is happening, and, the technology of EV fluids in India and electric vehicles in India is fast evolving. And therefore, we are far ahead in terms of our products, given that we've launched products in other parts of the world as well. For example, China, Western markets. So the learnings from there will be brought into India very easily, and we have that global advantage as well. So we look pretty positive around the response on EV plans.
Right. Subakshi, what is capacity utilization standard and what are your capex plans for FY25? Are you looking to make more investments? And if you can quantify that for us, it'd be useful.
Yeah, sure. So capacity is about 80-85% utilization, and in terms of the capex plan, look, I think we will spend about anything between 100 to 150 crores, and this capex is I'm talking about the organic capex. And as we grow into the market, and we want to make investments, for example, in rural, yeah, we've had a new route to market, and where we are going to be investing into rural. I think that's one area where the capex is going to grow.
Oh, well, congratulations, Mr. Bakshi, and good luck. Hopefully FY25 turns out to be a profitable one for the company, and we'll hopefully cash you soon.
Thank you so much.
Thank you very much, Mr. Bakshi.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarva and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we've
Hello and welcome. Gallant Ispat is in focus on the back of its Q4 results today. The company reported a 8% of a revenue growth this quarter with increase in its production. Meanwhile, its sales realization remained under pressure with about 12% dip here, continued with a lower input cost. Now, if you look at EBITDA, EBITDA saw about a 49% jump with its margins moving upwards at 15.8% compared to 11.4% last year's quarter, and net profit saw about a 40%. But to discuss more on the quarter and the fiscal year gone by, we have Mr. Mayank Agarwal, the CEO, joining us. Hello and welcome to the show, Mr. Agarwal.
Hi, good morning, ma'am, and good morning to all the viewers.
So my first question is on the Q4 and the overall FY24. How did the quarter go by? Can you point out the key highlights that were for the fiscal and the quarter which went by for the year?
Ma'am, the results are really interesting and we are very excited to inform all of you. If we compare it to quarter versus quarter, the production capacity, the total production has increased by 9%. And if we talk on a year-on-year basis, it is about 7%. And even the revenues have increased by 4% and 8% respectively. While it is to be noted that the sales realization has dipped down to about 10%, even on quarter basis, and 12% on yearly basis. So despite that, there is a jump in the revenue of 4% and 8% respectively. And besides that, even the EBITDA is very strong, 24% on a quarter-to-quarter basis, and 49% on a quarter-to-quarter basis and 24% on year-on-year basis. So the profit is also extraordinary. If we compare it to the quarter last year, it is about 59% jump. And if we talk about year-on-year basis, it is about 30% jump. So overall, the performance of the company is extraordinary, and we are really excited to have posted these results, and it shows our dedication and performance, and we are gearing up for the next year now.
Okay, so just on the next year part now, if you have to look at the overall industry trend, we have seen some volatility in the iron ore prices, especially with the weak macros pointing out in China. I just want to understand, how does this impact you, and what does this set as a trend for you going forward in FY25?
See, the raw material is definitely been volatile, whether we talk about coal and whether we talk about iron ore. And however, I believe that the volatility would be lesser in the next financial year, mainly due to the volatility had increased due to various dynamics, global dynamics, which changed because of COVID and afterwards. So despite the volatility, we were able to post such impressive results. So we are totally built up and buckled up for this in the future as well. And it is also, I would like to share that the company has also announced today to provide 1 rupee per share, that is 10% of the face value, as a dividend. And this dividend was to be given to all the shareholders, including promoter shareholders, but promoter shareholders have waived off the taking of the dividend, and the company is withholding that amount to be utilized in company's expansions. So the dividend would be going only mostly to the non-promoter quota.
Mr. Agarwal, I'll definitely touch on the expansion plans in the future questions, but more on these macros over here, when do you expect the stabilization to happen? Can we expect this trend happening in the first half of the 2025 itself? Because that would also mean with the revenues now shifting focus, and we'll expect more revenue growth forward in FY25. And if yes, what is the kind of revenue growth are we looking at in fiscal year 2025?
So currently, I would say the fluctuations are already in the level of about 10 to 15%, and it is not as much as we have seen it in the past. And it's more or less already stable, if we talk about thermal coal or whether we talk about iron ore. And if we specifically talk about the company as to how the company is going to be in the next financial year, so we were undergoing about 100 crore of capex in the last couple of years, 3 years. And now all of that is already implemented, besides leaving aside one 500 TPD 2 lakh ton plant of DRI at Gorakhpur, which is under commissioning with an investment of 150 crores. Even in the current financial year under review, we have commissioned pellet plant in July itself. And even currently, despite approximately 10% of increase in the production, our capacity utilization stands at 85%. So the next financial year, from the company's perspective, we are looking at a quantitative growth as well as the impact of the complete financial year of the pellet plant which has been commissioned in July. That was a half year gone by the time it's stabilized. And also we plan to commission this DRI kiln by December. So all this would be adding to the profits and the better realizations of the company in the next financial year as well.
Can you put a number on this, the revenue growth and the profit expansion that you're seeing for the next year?
So putting a number would be difficult, ma'am. It all depends on the market supply and demand forces, and also what realizations and what competition is there. But I assure to all my shareholders and to all the people in the financial market that we are all buckled up for a better performance in the next financial year, and you will definitely see much better results than the current year as well.
All right, definitely. Moving on from this now, with the commencement of the pellet plant at Gorakhpur, which is expected to bring down the cost, along with the recent acquisition that you have made with the railway rakes, which has led to better logistic costs for the business. You did mention that the margins are expected to be in the 13% range by FY26 compared to about 11% that we have clocked in this year. But we have taken a lot of initiatives in FY25 itself. So what is the kind of margin improvement, or rather in basis points, or at what margins are we looking for this fiscal year, that's financial year FY25?
So actually, when the pellet plant was commissioned in July, so if in the current financial year you see, the capacity utilization is hardly 58%. So we plan to ramp it up to at least 80% in the next financial year, which will majorly add to the margins and margins of the steel making. Besides that, these two goods train that we have purchased, one was delivered in the mid of the year, and the second one was delivered in the fourth quarter of the year. So it has really helped us to ensure smooth and trouble-free operations. So besides even reducing the cost, so the impact of these goods train would be coming in the next financial year as well. So both these things put together, along with a better capacity utilization, would drive companies' growth to a great extent in the next financial year as well, despite the capex being low.
All right. Now coming back to the point with the promoters waiving off their right to take off dividend, can you lay out what are the kind of expansion plans that we are looking forward and put a number on what will be the kind of capex that we will require to fund these expansion plans that we are looking at?
So we are currently working on major capacity ramp up and expansion programs, but it is still under preliminary stage. But since the company is debt free, we have only working capital loans and we don't have any term loans. And we have a good generation, if you see, in cash. And besides cash, we also tend to get about 80% of net SGST refund through state industrial policy. So there's a lot of cash in hand with the company with no debt to pay. And we are working on certain aggressive plans, but I would be able to share you with further details only once we have received board approval.
When is this expansion planning out to be, in next financial year or by FY26? If you can share more on this.
We plan to kick in the next financial year. Let's see how things work out. As I told you, it's preliminary, so it's difficult to communicate once till the time it is not formally concluded.
All right. So.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language.
I'm happy to share with you the strong performance of Ambuja Cements for Q4 and overall for FY24. Ambuja Cements has achieved stellar financial results marked by revenue growth and operational efficiency. Our net profit has witnessed a remarkable surge, reflecting the company's resilience and strategic initiatives in a dynamic work environment. For the year-on-year consolidated performance, revenue increased 12% at Rs 8,894 crores. Operating costs went down by 9% at Rs 4,345 per ton, a reduction of Rs 418. This is mainly on account of 13% decrease in energy cost driven by our efficient fuel management. We achieved a 17% reduction in kiln fuel cost, now at rupees 1.84 from the previous 2.21 per 1000 kilocal. With these improvements in revenue and cost, our EBITDA is rupees 1,699 crores, a jump of 37%. The EBITDA on per ton basis increased by 17% to rupees 1,026, and the margin expanded by 3.5% to 19.1%. We achieved 100% growth in PAT at rupees 1,526 crores, up from rupees 766 crores, a jump of rupees 762 crores. On consolidated cash and cash equivalents, at the end of 31st March 24, it remains at rupees 15,999 crores. With the receipt of warrant money of rupees 8,339 crores in April 24, this goes up to rupees 24,338 crores. On a standalone basis, the net revenue exhibited a rise of 12% at rupees 4,780 crores, in line with the 18% volume increment at 9.5 million tons. A strong PAT growth of 6% at rupees 532 crores. Coming to strategic investments and expansions, Adani Cement's total cement capacity has now reached 78.9 million tons, including recently acquired 1.5 million grinding unit at Tuticorin. We are capitalizing on our successful acquisition of Sanghi Industries, which is on a path of significant improvement in EBITDA performance post-acquisition. With integration of 400 plus channel partners after the acquisition, our emphasis is on strengthening and reinforcing our iconic ACC and Ambuja brands through the positioning of Har Ghar Hoga aur Bhi Mazboot. With Asian Concrete, we will be able to strategically cater to a vast customer base across HP, Haryana and Punjab, improving our profitability and market share. We are well on our path of ongoing growth in our brownfield operations, adding 8 million tons of clinker capacity at Bhatapara in Chhattisgarh and Maratha in Maharashtra. With these capacities coming into service, we will also enhance our ESG standards on the lines of 42 megawatts of WHRS, 30% AFR, aided by green power for these new plants. This will allow 14 million tons of blended green new cement capacity by Q2 FY26. Reaffirming our commitment to sustainable practices with an investment of rupees 10,000 crores in 1 gigawatt solar and wind power projects, we are aiming for a substantial increase in green power capacity, taking green power share to 60%, promising compelling economic advantages to our planned larger capacity of 140 million tons. We are also continuously increasing the share of AFR and WHRS. We will be reaching 186 megawatts WHRS capacity by FY25. In addition to our branding effort, we have had robust and notable involvement with the technical and end users. Through our technical services, we are supporting ethical and environmentally friendly building practices, making a significant positive influence on society at large. While we have set out to achieve our long-term objectives, we are committed to sustainable growth with focus on water governance, sustainable livelihoods, women empowerment, uplifting rural infrastructure, and championing social inclusiveness. 3.3 million people benefit from our community development projects. The cement industry's outlook remains positive, driven by pre-election spending, ongoing government emphasis on infrastructure and development, and sustainable real estate activity. The industry is expected to witness another wave of strong demand as the normal monsoon season is predicted this year. Fueled further by the higher budgetary allocation to the infrastructure and construction in the interim budget 24-25, as well as the green energy transition, This demand momentum is expected to sustain going forward. Looking ahead, we are optimistic about the future and are committed to sustaining this momentum. Ambuja Cements will continue to leverage its strengths, explore new opportunities, and uphold the highest standards of corporate governance.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other,
Hello and welcome to Earnings Edge. I am your host Varsha Chandranani. REC reported a strong set of numbers in its March quarter. My colleague Vikas spoke to REC's chairman and managing director, VK Devagan, on its key growth drivers in the quarter gone by. Listen in.
The year 2023-24 has been really a fabulous year for REC. We have been able to achieve the highest ever profit after tax, about 14,019 crore. Last year our profit after tax was 11,055 crore. The main factor which has contributed to the significant growth of REC is our major focus on renewable energy segment. Last year we were able to sanction projects worth 1,36,000 crore of renewable energy projects, and we are targeting that our renewable energy portfolio should increase to about 30% of our asset under management by the year 2030. So we are targeting that. Right now our asset under management is about 5,09,000 crore. By the year 2030, our asset under management will grow to about 10 lakh crore, and out of that 30% will come from renewable energy portfolio. Second is that another factor which led to the phenomenal growth of REC was improvement in distribution sector. Government of India, Ministry of Power has taken huge reform measures. They brought revamped distribution sector scheme, late payment surcharge rules. This has really contributed in turnaround of the power sector utilities, particularly the state sector. All the state GENCOs, TRANSCOs are getting paid on time. The financial and operational efficiency of distribution companies are also improving. This has led us to this phenomenal growth in the current financial year.
Okay, so as you were saying that renewables have contributed majority share, so do you think that now the conventional form of financing, especially for thermal based power plants and all those, earlier the distribution kind of financing that you used to do, that has kind of taken a back seat, or you still think that there is enough potential even there?
Yeah, country has embarked on this ambitious path of installing 500 gigawatt of renewable energy capacity by the year 2030. But since renewable energy is intermittent in nature, we need to have storage solution, cost-effective storage solution, be it battery energy storage or pumped storage hydro projects. They are not able to provide round-the-clock power supply. Therefore, the coal-based capacity is going to play a major key role. The base load comes from the coal-based capacity. We don't have much of natural gas in the country. The base load will come from coal-based capacity. That's the reason Ministry of Power has laid the roadmap that country will require about 94,000 megawatt capacity of coal-based capacity. And we see a huge potential because the cost of installation of coal-based thermal power plant has gone up to about 10 crore per megawatt nowadays. About 94,000 megawatt capacity will be coming. So we are targeting we'll get a business of more than 3,70,000 crore from coal-based capacity itself.
3,70,000 crore.
Yeah.
Okay.
New projects are likely to be sanctioned.
Okay. And you also last time spoke when we met, you said that a lot of focus is going to be on financing the non-power sector. So which are these segments where majority of your financing is going or the funding is going?
We were a bit cautious while financing non-power infrastructure logistics. Initially, we financed only those projects which were there in state sector supported by the state government guarantee, like MMRD metro projects, MSRD's Mumbai-Pune expressway projects. Then we started financing a refinery, Hindustan Petroleum Refinery in Bardmer, then Jindal Steel project in Odisha. We have also done some financing of airports, Goa Airport, Visakhapatnam Airport, and refinancing of Kurnool Airport also we have approved. In addition to that, we have also taken up some IT infrastructure projects, a super specialty hospital also. But our main core area is power sector and renewable. We are getting sufficient business from power sector and renewable energy sector. The first priority is core area. If we are getting good asset quality, there are good entity in non-power infrastructure logistics, then only we'll be financing those projects.
Well, this was REC's management. Other company which is in focus today is RPG Life Sciences, which has reported Q4 FY24 results with revenue growth of almost 7% year on year, while company did see increase in margin year on year. To speak more on this, I'm joined by Mr. Yugal Sikri, who is the MD of the company. Welcome to the show, Mr. Sikri.
Thank you so much, Varsha.
So, Mr. Sikri, I noticed that in last 2 years, if you see, during the same quarter, you reported the revenue growth in double digit. However, this quarter, if you see, the growth has been in single digit. Could you just let us know the reason for the same, and going forward, what is the trajectory?
Okay. So, give me a couple of minutes just to give you a little bit of background so that you can appreciate that part better. RPG Life Sciences is into the three kinds of businesses. We are domestic formulation, international formulations, and API. Domestic formulation is 2/3, and remaining 33% comes from the international formulations and API. Now, the fourth quarter, which we have, the fourth quarter has a least saliency in the business. This is part of industry. This is part of our product portfolio. This is part of the seasonality which we have. So that's why the fourth quarter is always relatively a lower contributing quarter. Almost there's a difference of 20% when I compare to the average earlier 3 quarters. So that's the point number one. This year growth in the fourth quarter is apparently a bit muted because of certain customer or product specific reasons. But what is very, very critical for this two-third contributing business, which is domestic formulation business, our secondary growths are very, very robust. In the fourth quarter, market has grown at 6.5%. Our growth, as reported by the third party, the IMS data or IQVIA data, which we call them, has reported 19% growth for us in the same. So which indicates that those 2 or 3 transient issues which we had with certain product for seasonality, and we had a larger base last year because of certain development at that point in time, our fundamentals of growth continues to be the same. Our revenue growth is consistently higher than the market for the past 5 years, and so is the case going on quarter-on-quarter basis now. Number one. Number two, our margins are continuously higher every year for the last 5 years. From 10% margin, we are at 23.3%. Even this year, you would have seen our margin growth is 26% on EBITDA, 29% on PBT, and 28% on PAT. In terms of the volume, profit volume, in terms of the margins, there is increase of the 230 basis point, 240 basis points in all the indices, EBITDA, PBT, and PAT. Our cash flow is the record high, 127 crore after paying off capex of 51 crore. So in terms of the new products, I'm talking domestic formulation only. In terms of the new products contribute 30% to our sales. In terms of big brand building, we have a brand called Neprosin, which was 18 crore 5 years back. Today, this year, has clocked in 74 crore, registering a growth of 21%. And we expect this brand to become a 100 crore brand. We have another portfolio called immunosuppressant, which was half 5 years back. Today, we have clocked 70 crore. This is another portfolio. We are going to build it to a 100 crore portfolio going forwards. And this is all possible because of 2 strategies we have in terms of product portfolio. One is the life cycle management of our textbook iconic brands. And the second one is enter into chronic and specialty therapies. Put together, these have contributed 30% to the sales. Second very important point in case of the domestic formulation business is productivity. Our sales force productivity, which was 3.4 lakh 5 years back, last year it was 5 lakhs. This year it has crossed 5.8 lakhs. And therefore, productivity improvement, new product contribution, sales hygiene improvement, I think all 3 are contributing to revenue growth as well as the margin growth. In margin growth, we have a story on both COGS and OPEX. And both of them are contributing to the EBITDA margin improvement. Why we have consistent improvement is also because this is our structural story. We have done some fundamental interventions in the operations of the company, and that is what has helped us to consistently improve our margins. I hope it answers your question on a broad basis.
Yeah, sure. Mr. Sikri, your domestic formulation business is around 66% of your portfolio, and you want to increase your revenue contribution from other segments like API and international formulation. So with all this, what is the revenue growth you are expecting, let's say, for next 3 years?
Okay, so in terms of the revenue growth, our next obvious target is 1,000 crore. And that growth will come from all the 3 businesses. Large contributor so far has been the domestic business because that's what we focused 5 years back. Now we have IF, international formulation, API, both will contribute because we've done 2 interventions. One, we have modernized our age-old or decades-old plant by investing 140 crore on the capex, and we are building our R&D pipeline. We have set up a state-of-art R&D departments in formulations and API. They are working to make sure that the product pipeline also comes up as the infrastructure is getting modernized. So both of these business, international formulation and API, will also contribute, leading to our aspiration of reaching to 1,000 crore mark ASAP.
And so my last question to you would be, are you introducing some high margin products which will actually increase your margins going forward?
Yeah, I think very, very important point you raised. Yes, our focus is on picking up a product portfolio which is inherently having high margin. Three things on the export side. One is we are focusing on our major product portfolio called immunosuppressant, which inherently has a better margin. Number two, we have identified low volume product with some product competitiveness, with some kind of product differentiation. Example, we have what we call as complex generic. That's the second. Third one is you picked up those products which have some manufacturing complexities, low volume, so that it doesn't attract the attention of the biggies. And all of these three segments are relatively high profit margin business in the international side. On the domestic side, on the India side, yeah, our strategy is to go for products which are non-DPCO and the products which have better margins, which are chronic and specialty products. And 30% contribution, which I'm talking about, comes largely from these product portfolio, and that product mix also has helped us to improve our margin and continue to help us to improve our margin. This is the product strategy which we have worked out.
Well, thank you so much, Mr. Sikri, for joining us, and all the best for your business.
Thank you so much.
So, well, this was the management of RPG Life Sciences. Let's see how the future for this company pans out. Well, time for a short break. Management of Orient Cement on the other side. Stay tuned.
Your vote has the power to transform the future of a nation, which is the world's largest democracy. India stands at the center stage of the world today, and it's important to make the coming years count. I also have a message for the new voters. I understand the nervousness that sets in because it's your first ever vote and you want to make it count for a better future. Analyze the options carefully to understand the vision of the leader that you're voting for. Let us all come together and make one of the most important decisions in the history of a nation. One that will positively affect this crucial decade for the country.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Good
afternoon, viewers, and welcome back to Earnings Edge. This is Mihika Barve, and we're now joined by the Director and CEO of Orient Cement, Mr. Deepak Khetrawal, and we're going to talk about a little bit on the Q4 earnings of the company and the outlook going forward. Good afternoon, Mr. Khetrawal.
Khetrawal is my name.
Khetrawal.
Thank you.
Yeah. First, I want to go ahead and ask you on how the quarter has gone by for Orient Cement and what is your view on the same?
Well, on Q4, when we talk about the performance of Orient Cement, we also have to talk about the industry, cement industry, the very large industry, and we are a very modest size player in the industry. Well, the Q4 has not been easy for the industry and also not for us, largely because the prices in the highest quarter for the year this year have been much softer, and especially if we talk about in the month of March, the prices came down very sharply, which has hurt the entire industry. Within that context, if we look at our company, I think we have reasons to feel satisfied, if not happy, because we have been able to report better profitability, and despite the fact that the volume growth didn't come by as much as we would have wanted. But certainly with our strategies of premium products, of managing our costs a lot better, we are one of the few companies who've been able to increase the EBITDA per ton in Q4 compared to the same quarter last year. So yes, we wish it was a better quarter than what we have, but compared to the rest of the players in the industry, I think we can be considered that we've done a few things better than the industry.
And you spoke about volumes, fairly muted. What was the volume number for the quarter, and what are your expectations for FY25?
So for the quarter, we did a little over 1.7 million tons of sales in this particular quarter. And in terms of pricing, I would say we were significantly better than what happened in the previous quarter, but Q3 is never comparable to Q4. Compared to Q4 last year, the prices are, just maybe under % higher than that. And as a result, the EBITDA for the quarter, in absolute rupees, we are at 155 crores vis-a-vis 144 crores of last year. And EBITDA per ton, we are close to 900 rupees a ton, which is a gain of over 100 rupees, I would say, over the previous year, which is something we can draw the satisfaction from. But like I said, the plans, the aspirations that we had in the company were higher. So to that extent, we need to try harder going forward.
What is the guidance that the company has, or like a target that the company has for the EBITDA per ton in the same next 1 or 2 years?
Next 1 year, let's speak about, because 2 years tends to be a little too iffy. But if we talk about the year FY25 that we've already entered, we are gunning for 8% growth. That means from about 6.13 million tons, we certainly would want to go to about 6.6 million tons or more. And EBITDA per ton that we are targeting this particular is between 850 and 900 rupees a ton.
And, I would really want to talk about the pricing. There's been weakness, especially in the last quarter. All India average prices were down 6% on a sequential basis. But is there some kind of, do you see some kind of sparks in terms of pricing improvement, especially in the southern and the western corridors that the company operates in?
Not yet, because I guess you people are picking up from the market also that the April demand has been very disappointing in the industry. Largely to do with the fact that there's elections going on, and construction activity largely engages migrant labor who go back to their native places to cast their votes. So there's a shortage of manpower who can do the construction, the extreme heat conditions in many parts of India, water shortages coming up. So all kinds of negative influences are keeping the demand and construction down right now. So April has not been good for us. May again is likely to be soft. We're expecting some strength to come back in the market in terms of demand only from June onwards, when the elections are over and the government starts taking the usual decisions that they need to take. And also, I think when the demand starts improving, that's the only time we expect the prices to improve. As of now, the prices are marginally better than what we had in the quarter that's gone by in Q4 of last year, but not enough. We would perhaps expect better pricing as the demand picks up from June onwards.
Mr. Khetrawal. And when you talk about fuel costs, I wanted to know the percentage that fuel costs have in terms of your total expenses, and how the company is kind of managing to optimize these costs, and do you all have a target to get these costs down with respect to green power or any other methods?
Absolutely. No. You see, the fuel power remains one of the. I mean, it's one of the most the important, the largest part of our total cost that we. So fuel and power put together is the metrics that the company and the industry monitors, and all the analysts also talk about the same thing. So there are two aspects to it, fuel and power. One, fuel power largely is a function of how the fuel prices in the market are. Because in terms of efficiencies, I think we are already counted as one of the most efficient companies when it comes to fuel consumption to produce clinker and cement. The other part is the power cost. In that, there are significant gains that we have started having from Q4 of FY24, when we commissioned our waste heat recovery plant. And in Q4 itself, the total gain in that one quarter, the gain in terms of the conventional power that we were using and we replaced it is about 11 crores of rupees. The second phase of that waste heat recovery plant has already been commissioned late in the month of April, just a few days back. And put together, we expect that the total savings from the waste heat recovery plant and the additional solar power that we are bringing in, put together, we should have a gain of about 55-60 crores on a per annum basis, divided by the volume of 107. We're talking about 75-80 rupees a ton of benefit coming from purely the power side of it. And that is the large saving that we think when I say that we will target between 850 and 900. A large part of that gain is actually going to come from these two initiatives.
Got it, Mr. Khetarpal. And I wanted to know where the company's current capacities and capacity utilization stands, and also maybe a little update on the Rajasthan and Chittarpur expansion plans.
Yeah. So in terms of capacity utilization, in Q4 last year, we finished with 81% capacity utilization. If you talk about current, obviously April has been so low that it's obviously worryingly low. So that's not, and that in any case is not the norm. It should improve soon. But on a quarterly basis, we had 81% utilization, and made up largely of one plant which happens to be in a more, I would say, more active market, doing more than 100% utilization. The oldest plant in Telangana has suffered in just about 60% utilization. That the mix is a little tricky for us. But going forward, as the volumes pick up, the capacity utilization definitely is going to look better.
Okay, and where do the Chittarpur and Rajasthan expansions currently stand at? Like what stage are they in?
Yeah, so the first plant that's likely to take up the expansion activity is going to be the Chittarpur plant in Gulbarga district in Karnataka. We have gone through all the requirements that we needed to do from the company side. Now the application or our request for environment clearance has to be approved by the MOE of Delhi, which I'm afraid that it may not happen till the government gets formed in June, because obviously the ministers get appointed and they start taking decisions all over again. But once the application is being processed, typically a process of just 3 to 4 weeks. So hopefully, if not by June and early July, we should have the environment clearance. And that is the time we'll immediately place the orders for equipments and all. The Chittarpur plant capacity expansion should be completed. The target would be to start sometime within this year, very early in the second half of the year, to be completed by end of FY26. Rajasthan, you're asking about, perhaps will come a little later, but before that, there's a plan to put up a split grinding unit in Madhya Pradesh, which will support our other plant in Telangana in terms of utilizing the clinker there and improving capacity utilization. That also we intend completing by FY26. Rajasthan is a completely greenfield project where the land acquisition is the first challenge that we have to get over. The process of land acquisition has just been started. We are beginning to negotiate with some of the owners of the large chunks of land there. And I think Rajasthan, we can't start construction activity to my mind for at least another 2.5, 3 years. It'll take that long.
Okay, and one last question, Mr. Khetarpal. There were recent media reports that suggested a potential big player acquiring the company. Do you have any comments on the same?
I have heard the same media that you have heard, but internally from the company, I can tell you there's nothing going on. Media has its own, let's say, ways of finding out things. I wish they had checked the facts with us.
Okay. Thank you so much, Mr. Khetarpal, for joining us. We wish you all the best for your next adventures. And that's what we had on Orient Cement. The management suggested the recent media reports to not be factually correct. But stay tuned. We have lots more lined up on the other side.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dream?
Benchmarks trade in the green, the Sensex closer to the 74,700 mark, while the Nifty hovers around the 22,650 mark. HDFC Bank, RIL and Power Grid pull the index higher. Roaring rally for autos, the index clocks another high post-April sales data. Strong growth seen in two-wheeler and the PV segment. Meanwhile, growth in the passenger vehicles lags. Another strike for Kotak Bank a week after punitive action by the RBI. The bank's joint MD KVS Manian steps down. The stock plunges, and how? And a fresh high for GST collections in April as collections cross over 2 lakh crore rupees, making a substantial growth of 12.5%. And India's worse than expected harsh summer conditions impact Lok Sabha election schedule in the country. Polling hours have been changed across 17 Lok Sabha seats. Hello and welcome. You're watching Market IQ and I am Pallavi Nahata. Let's take a quick look at where the markets are at first. The Nifty 50 remains a little bit shy of the 22,700 mark. We're currently in the green, up by about 80 points. The Sensex and the Nifty 50 both up by about 0.33%. Well, what's contributing? Let's take a quick look at that. BPCL, Power Grid, Asian Paints continue to lead the index in terms of the percentage change. Power Grid up by 4% currently, but the key contributors remain HDFC Bank, RIL and ITC along with Power Grid. What's not performing well, however, is Kotak Mahindra Bank. The stock is down by about a little over 2%. ICICI Bank, Bharti Airtel and Axis Bank also continue to remain a little bit of a drag on the index. Let's also have a quick look at the sectoral indices. Most of the indices are in the green. The Nifty PSE in the lead, it's up by over 2%. Nifty Energy, Nifty Metal and Nifty Auto are all up by over 1%. What's not performing well is Nifty Media, Nifty Realty and the Nifty Bank along with the Nifty PSU Bank index as well. The Nifty Media is down by almost about 1%. Realty almost down by as much. Nifty Bank down by about 1/3%. For the broader markets, it's not turning out to be a bad day either. The Nifty Mid Cap 150 is up by almost about 0.5%, while the Nifty Small Cap 250 is up by about 1/4%. So most major indices continue to remain in the green. But from the markets to the macros, the HSBC India manufacturing PMI data came in earlier today morning. It signaled the second best improvement in the health of the manufacturing sector in nearly 3.5 years. So despite seeing a slight ease and declining to 58.8 in April from a 59.1 in March, it actually continues to show strong expansion that continues to remain well above the average. Now, for context, a print above 50 in the PMI indicates expansion and a print below that indicates contraction. Stocks of purchases have increased sharply in April. Indian manufacturers continue to report robust demand conditions for their goods from domestic as well as external clients, but the domestic market continues to remain the key growth driver. Total orders have also seen a fairly sharp rise, with the pace of expansion being the second strongest since the start of 2021. All of this has meant that the pace of job creation has been fairly decent. It's been the quickest since September 2023. With a rise in material as well as labor costs, Indian manufacturers have also reported an increase in selling prices. The rate of charge inflation has risen to a 3-month high, converging to its long-run average. And continuing with more news on the economy, GST monthly collections crossed 2 lakh crore rupees. This was the first time that we've seen these figures cross the 2 lakh crore rupee mark. That happened for the month of April 2024. My colleague Janani joins us with more details. Janani?
That's right, Pallavi. Like you mentioned, this is the first ever time that the monthly collections in the month of April have reached the 2 lakh crore mark. To be precise, it came at 2.1 lakh crore. Now, is this really surprising or is this according to trend? The answer to that question is that it's quite normal for the last month of a financial year to record high transactions or high GST collections. Now, remember, the collection for April is actually for transactions in March. So you have the fiscal year ending upswing that would have contributed significantly to this figure. However, just comparing it to the last year, 1.87 lakh crore was where April 2023 had clocked monthly collections. So we're already seeing a 12.4% rise when it comes to monthly collections. But other than the fiscal year-end upswing, what else contributed to it? Of course, domestic transactions and tax from imports largely led this growth. About 13% growth from domestic transactions, 8% growth again tax on imports. These have significantly contributed, as is the audits and the tax buoyancy and controlment of evasion, those measures that have been taken by the department, particularly this again sees an upswing towards the end of the financial year. So these, of course, could have also contributed. This is what we're hearing from economists and tax experts. We'll continue to track this figure. The government is looking to attain 1.88 lakh crore monthly collections in the upcoming financial year. This is a good start, and we'll have to see if it holds up. Back to you.
Thank you, Janani. And as she's mentioned, we are going to be watching out for whether the 2 lakh crore rupee mark actually sustains over the coming months. But moving on to some stock-specific action. Max Estates is buzzing in trade today. This is as the company has announced a strategic investment of 388 crore rupees from the New York life insurance company. My colleague Anushi joins us with more on that. Anushi?
Right, so Max Estates is in focus again. The stock has seen about 18% of an up move in just today's trading session itself. Now, this is on the company signing an MOU with New York Life Insurance Company, wherein the New York Life would be investing about 388 crores over a year and will acquire 49% stake in 2 of their SPVs, which holds about Max Estates, Max Towers and Max House Phase 1 and Phase 2 respectively. Again, with this, the Max Estates will hold about 51% stake in this. So it is to be noted that New York Life Insurance already holds about 22% stake in the company and has had a long-term history with the company's financials as we move forward. The company has also made such strategic investments in the past as well. But how Max Estates is standing to benefit from these proceeds if it look forward? So most of the, it is going to be using these investments to finance its future projects over here, especially in the NCR regions, which is the high growth market that they see. Again, the company also maintains to acquire up to about 2 million square feet of development opportunity every land, again in the NCR region. So focus would remain over here to expand the land bank in these said regions and how they can bank on these opportunities. Now, again, if you have to look at the stock price movement of the company over here, 1 month return of about 16%, majority of the contribution from just today's up move itself. While if you look at the 6 months, about 30% of an upside over here, and 1 year the company has seen about a 19% of a gain compared to other real estate players which have seen about a significant up move. So these are a couple of reasons why Max Estates is buzzing today.
Thanks, Anushi. The stock is currently up by almost about 15.5%. But moving on, REC is powering the Nifty PSE index on reporting a strong set of numbers for Q4. My colleague Vikas spoke to REC's chairman and MD VK Devangan on the key growth drivers in the quarter that's gone by. Listen in.
The year 2023-24 has been really a fabulous year for REC. We have been able to achieve the highest ever profit after tax, about 14,019 crore. Last year our profit after tax was 11,055 crore. The main factor which has contributed to the significant growth of REC is our major focus on renewable energy segment. Last year we were able to sanction project worth 1,36,000 crore of renewable energy projects, and we are targeting that our renewable energy portfolio should increase to about 30% of our asset under management by the year 2030. So we are targeting that. Right now our asset under management is about 5,09,000 crore. By the year 2030, our asset under management will grow to about 10 lakh crore, and out of that 30% will come from renewable energy portfolio. Second is that another factor which led to the phenomenal growth of REC was improvement in distribution sector. Government of India, Ministry of Power has taken huge reform measures. They brought revamped distribution sector scheme, late payment surcharge rules. This has really contributed in turnaround of the power sector utilities, particularly the state sector.
Well, it's time to slip into a short break, but do stay tuned because on the other side, we will bring to you the monthly weather forecast by the IMD and NDTV's special election coverage.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the market.
Welcome back. You're watching Market IQ on NDTV Profit. Today on How Rich is Your Candidate, we put the spotlight on Smriti Irani's portfolio. My colleague Alex Matthew joins us with the details. Alex?
Well, the question that we're asking is whether the money plant of Smriti Irani has flourished as much as, well, the other plant that she's known for. Let's take a look at the portfolio that she's got. First, before that, let's take a look at the taxable income that she's got. And FY23, she had 97.87 lakh. In FY19, that stood at less, at 61 lakh. So that's a sizable growth. In terms of cash in hand, she's got 1.09 lakh, and she's got movable assets of just over 3 crore rupees. That is split between bank deposits of 25.5 lakh rupees, mutual funds of 88 lakh rupees, Public Provident Fund, as well as Mahila Sanman Savings Certificate of about 30.7 lakh rupees, personal loans that she's disbursed of 20 lakh rupees, jewelry, including gems, of about 37.5 lakh rupees, as well as miscellaneous wealth of about 78 lakh rupees. She's got one car worth about 27 lakh rupees, and that is an MG Hector. Now, talk about her mutual fund holdings. Most of them are in the form of SBI Magnum Mid Cap Fund as well as SBI Blue Chip Fund. She's also got the Kotak Emerging Equity Fund, which has a large amount of funds. Now, the immovable assets are broken into the agricultural land, which is worth about 1.7 crore rupees, as well as non-agricultural land and residential property of about 3.4 crore rupees. So, has the money plant flourished as much as the tulsi?
Moving on to the weather update, the weather department has come out with its monthly weather forecast, where it says that above normal maximum temperatures are likely to continue to persist over most parts of India. The number of heatwave days is likely to be above normal by about 5 to 8 days. That's for over South Rajasthan, West MP, Vidarbha, Marathwada and the Gujarat region, and by about 2 to 4 days over remaining parts of Rajasthan, East MP, Punjab, Haryana, Chandigarh, Delhi, UP and some parts of Chhattisgarh, interior Odisha, the Gangetic West Bengal, Jharkhand, Bihar, North Interior Karnataka, Telangana and parts of North Tamil Nadu and Andhra Pradesh. Clearly, higher than normal temperatures are here to persist for this month as well over most parts of the country. Now, elevated temperatures do pose significant risks, and the IMD does recommend that authorities authorities take proactive measures. Meanwhile, El Nino conditions continue to weaken across most parts of the equatorial Pacific Ocean. The latest forecast suggests that the El Nino conditions are likely to turn into neutral conditions in the beginning of the monsoon season. The climate models suggest that positive IOD conditions also are likely to develop during the monsoon season. That's going to continue to bode well for the southwest monsoons. But speaking of the heat waves, was it too hot to go vote an excuse you heard in the previous polling phases? The EC has decided to change polling hours across 17 Lok Sabha seats because of the ongoing heat waves. My colleague Uma Sudhir joins us with more on that.
We have been seeing an intense heat wave. In fact, yellow alert was first issued and then orange alert has been issued for several of those areas. And at least in 13 different districts, the temperature was more than 45 degrees and only set to get worse in the next coming days. But of course, polling is about 12 days away now. 13th of May is when Telangana as well as Andhra Pradesh are going to polls. What the political parties have done is to appeal to the Election Commission after the kind of figures that we have seen in the first and second phase, which are really a significant dip from what we would otherwise expect. Telangana has just had assembly elections in the month of November. Of course, the weather was pleasant at that time, 30th of November. The weather conditions were suitable and we had more than 70% polling across Telangana. And right now, the concern is that the polling percentage should not dip, and that's the reason why the political parties have appealed to the Election Commission, and the Election Commission has agreed to extend the polling to 7 p.m. What I must also point out is that while people talk about voter apathy and others, it's really seeming to be the weather conditions that seem to hit most on polling day itself. Campaigning wise, some of the parties of course are taking a mid-afternoon break when they decide to have their internal meetings and behind the scenes kind of meetings with their people, and they are in fact preferring convention halls and such places where they have a gathering instead of the open kind of a public meeting gathering. So they call in the different communities and meet with them inside convention halls because no way to break this heat, and that's the reason why they have to look for alternate means. And I must say that the use of social media going up that much more, because with the heat you can't expect people to come out. Of course, the lure of the 300 rupees or 500 rupees that they are being paid, forcing many people to come out in the sun, not really because of loyalty to the parties, but because there is an amount to be earned at the end of the day. Back to you.
And on to NDTV special election coverage. With phase 3 of the Lok Sabha elections approaching soon, the land of the Reddy brothers will see a closely contested election in Karnataka's Ballari. BJP's Sri Ramulu is trying to ensure he's not pushed to political oblivion, while Congress's Tukaram is trying to break the BJP fort. Here's a ground report by Pratibha Raman.
As you travel around 300 kilometers from Bengaluru, the granite rocks of Ballari welcome you. The active markets of the Hyderabad-Karnataka region, the soaring temperatures across the rural lands, the dry deciduous forests, home to over 18 lakh voters, make it the Ballari Lok Sabha constituency where political temperatures are always high. In this constituency reserved for the scheduled tribes, BJP's B. Sri Ramulu, who was a Lok Sabha MP in 2014, will be contesting against Congress's E. Tukaram, who's fighting to enter the parliament for the first time.
The moment you land in this constituency, your ears are ringing with catchy tunes. While one highlights Sri Ramulu's accomplishments in this constituency working for the development and progress, another captures Tukaram's pro-people initiatives. Each of them carefully crafted and composed intricately by the respective teams to make it a viral and a political sensation.
Sriramulu hit the spotlight when he worked with the Reddy brothers during party leader Sushma Swaraj's election campaign in 1999. Though she lost then, the BJP barged into the Congress stronghold, holding fort since 2004, except for 6 months between 2018 and 2019. An MLA in 2008, he parted ways with the BJP and the Reddy family in 2011 post the illegal mining case in which Reddy was arrested. While he got back into the party fold in 2014, he now has the power of Janardhan Reddy too behind him. Despite 6 of the 8 assembly segments having been backed by the Congress, Sriramulu is banking on the Modi factor and Reddy's influence to wrest the seat.
ये बार 400 सीट जीतना पड़ेगा। वो 400 सीट्स पे श्री रामलू भी बल्लारी और विजयनगर डिस्ट्रिक्ट से रामलू भी एक होना चाहिए। देखो हम कभी ये 10 साल से मोदी जी साहब को हम देख रहे, एक गुड गवर्नेंस दे रहे। देखो ये एक भी बिना एलिगेशन, बिना करप्शन देश के लिए काम कर रहे।
लेकिन अब जनार्दन रेड्डी जी जो है वो अभी यहाँ पे आपके साथ जुड़ रहे हैं।
देखो पार्टी हमारा पार्टी में नहीं था, बाद में उसका एक रीजनल पार्टी खोले। रीजनल पार्टी खोलने के बाद वो भी एमएलए को तो पब्लिक इलेक्ट से किया ना, नहीं बोलते। कभी पब्लिक से कभी जीत को है तो उसको लीडर को तो एक्सेप्ट करना ही पड़ेगा। अभी बीजेपी में है, अभी तो बहरहाल इधर के लोगों में उसका भी क्रेडिबिलिटी है।
After biting the dust in the recent assembly election in Karnataka, when Sriramulu represented Ballari rural and lost, he is now looking to revive his political prospects with mining baron Janardhan Reddy's Ghar Vapsi to rebuild BJP's fortress here. But the Congress is now claiming that Janardhan Reddy is looking to exonerate himself from the cases. Sriramulu's desperate attempts to gain sympathy votes are being debunked by Congress's E. Tukaram, who is highlighting his welfare initiatives and contributions while holding several posts, including that of district in charge minister. And the Congress guarantees are another poll plank. For Tukaram, challenge lies in the fact that his reputation may be limited to the Sandur Assembly constituency that he has represented 4 times.
In Karnataka already we have seen, so guarantees are work out. In next overall India, it definitely will work out. He's not spoken this accountability. He's already last time he's become a minister, then also he's a MP. His accountability must now. Ballari people are seeing this Reddy administration. He's last is a minister, no, on that time he already seen. Nothing has happened. This time definitely Congress I will win.
A mix of urban and rural population with an estimated 21% scheduled castes and 18% scheduled tribe population. The issues here are diverse.
मैडम हमें मोदी जी के ऊपर भरोसा है। मोदी इज द पर्सन ही कैन मेक द रूल्स एंड हमारा इकोनॉमी थर्ड पे लेके जाने के लिए वो गारंटी दे रहा है। 2000 रुपए के लिए हम हमारा वैल्यूएबल वोट खोने के लिए तैयार नहीं है।
काम कर रहा है आदमी वो और गरीबों को मददगार है, बहुत अच्छा काम किया।
आपको लगता है कि यहाँ पे जो है सिद्धरामैया गारंटीज और मोदी गारंटीज के खिलाफ यहाँ पे
नहीं वो भी काम करेगा, क्यों गरीब लोगों को अनुकूल हुआ ना, हर गरीबों घर को पैसा पहुँच रहा है, एक जिंदगी चलता, गरीब घराने का जिंदगी चलता।
Both the parties have worked out the caste equations by fielding candidates belonging to the Valmiki community. The BJP is looking to mine Janardhan Reddy's clout in the region, and the Congress is looking to scale Ballari boulders in this region with its guarantees. With camera person Govind, Pratibha Raman in Ballari for NDTV.
And moving on, former Delhi Women's Commission Chief Swati Maliwal has hit out at the Delhi Lieutenant Governor V.K. Saxena after he removed hundreds of employees from the commission. In a major crackdown, Mr. Saxena removed 223 employees, alleging that the appointments made by Ms. Maliwal violated rules. Soon after the order was issued, Ms. Maliwal, now an Aam Aadmi Party MP, said that the Women's Commission was built from sweat and blood. She questioned the reasoning of the order, saying that if all the contract staff is removed, the commission will be logged. That's all we have on the show for today. Do stay tuned to NDTV Profit. We have a lot more lined up.
Your vote has the power to transform the future of a nation, which is the world's largest democracy. India stands at the center stage of the world today, and it's important to make the coming years count. I also have a message for the new voters. I understand the nervousness that sets in because it's your first ever vote and you want to make it count for a better future. Analyze the options carefully to understand the vision of the leader that you're voting for. Let us all come together and make one of the most important decisions in the history of a nation. One that will positively affect this crucial decade for our country.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
We are joining NDTV's Pledge to Vote initiative. I pledge to vote and also encourage all of my colleagues to exercise their voting rights. Election is the largest celebration of democracy and we fully support it.
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Like the name suggests, this show gets you actionable insight on everything mutual fund related, whether that is the concepts that go into the right kind of investing in mutual funds, or in fact, a check of how the schemes that you're invested in are performing. And that last topic is what we're going to focus on today. Joining me in the first half of today's show is Piyush Gupta, Director, Funds Research at CRISIL Market Intelligence and Analysis. Thank you so much for joining in today, Piyush. And we're talking about your latest report, which has a ranking of mutual fund schemes in various categories. And I want to focus on 4 categories, which is large cap, mid cap, small cap, as well as flexi cap, because I think that covers most of the industry. But let's start with large cap. And before we actually get into the top rankers, could you very quickly reiterate the basis for the ranking that you do?
Yeah, hi Alex, good afternoon. So this is a ranking that we publish on a quarterly basis. Today we are going to talk about equity as a category. So I'll give a broad overview of the framework or the parameters that we consider for the equity funds ranking. There are 5 parameters that we look at, starting from performance, which has the highest weight in the overall ranking, followed by volatility to measure risk in the portfolio. Apart from NAV-based parameters, there are 3 portfolio-based parameters we typically look at. This includes diversification at company and sector level and liquidity of the underlying portfolio. All of these factors are combined together to arrive at the final ranking within the universe. This is a relative ranking, which means that top 10 percentile typically are ranked 1, while the bottom 10 percentile are ranked 5, rank 1 being the highest. Yeah. And then 2, 3, 4 is looking at next 20 percentile, middle 40 percentile, and the next 20 percentile in the overall universe.
Fantastic. So in today's conversation, Piyush, I would like to focus on the top percentile and the bottom percentile. Let's talk about large cap funds. And there are a couple of names that are very well known in the large cap category that are at the top of the list, which is ICICI Prudential Blue Chip Fund, which was ranked 1 in the previous quarter that you ranked, and also is ranked 1 this time around, and Nippon India Large Cap Fund as well. JM Large Cap also makes it to that list, all 3 of which were ranked 1 in the previous quarter as well. What's working for these schemes?
Right. So when we look at ICICI Prudential Blue Chip, so this is a fund which has consistently been ranked 1. When we look at the historical ranking, it's ranked 1 for the last 4 consecutive quarters. When we look at the parameters where it has fared well, it is ranked 1 on performance. It also has lower volatility in its performance. That means it's ranked 1 even in the volatility parameter. It's a fairly diversified portfolio at the sector level, which means that it's again a rank 1 in terms of industry diversification. Now the fund is fairly large in terms of assets. It's a 50,000 crore portfolio, which means that its liquidity of the underlying portfolio is weaker, or it ranks lower in the liquidity parameter. When we look at its performance, it's outperformed the benchmark as well as the category across time frames. Some of the sector or the stocks in some of the sectors like auto, power, energy, they have positively contributed to its performance. When we look at Nippon Large Cap, this is a fund again which is ranked 1 continuously in the last 4 quarters. This is a fund again delivering return higher than the benchmark as well as category across time frames. When we look at parameters, it ranks 1 on performance, which is a major driver for its higher rank in the category. But when we look at parameters like liquidity, it is ranked 4, partially because of the large asset size that the fund has. It also ranks 5 on the volatility. Now, when we look at its allocation across capitalization, the fund has relatively higher allocation to small and mid cap compared to the category. while it maintains a 80% allocation to large cap, which is the category definition. Some of its exposure in mid caps and small caps have contributed positively to its performance. Apart from that, sectors like construction, capital goods, and power are some of the positive sectors from its performance perspective.
All right. I do want to focus on the bottom three funds as well, because it's important to talk about underperformance equally when you speak about outperformance, right? And just like the top three have remained constant for some time, the bottom three have also remained constant. Axis Blue Chip, LIC MF Large Cap Fund, and Mirae Asset Large Cap Fund are in the bottom percentile of large cap actively managed funds. Why is that, Piyush?
Right. So when we look at Mirae, this is a fund which has been ranked 5 in the last 3 consecutive quarters. And even before that, the fund was ranked 4. So to that extent, the fund performance has been weaker across time frames. It ranks 5 lowest in the rank in the category as far as the return is concerned. Some of its exposure in the mid cap space and also some of the sectors like financial services and IT is where the fund has lost out in terms of performance. When we look at LIC Large Cap Fund, this is a fund again which has remained in the bottom percentile, bottom 10 percentile for the last 4 consecutive quarters. The fund ranks lower on the return parameter, and also in the portfolio-based parameters, it is either 3 or 4 or 5. When you look at the performance, while fund has a large cap bias, some of its exposure in the small and mid cap space and sectors like IT, pharma, and chemicals is where the fund has lost out in terms of performance.
I want to move next to the flexi cap category, which is a pretty popular category. And the reason I want to talk about it immediately after the large cap is because of the tendency of these schemes to be more orientated towards the large cap category. In the top 2 rankings, you have, again, consistent performers in the way of Bank of India Flexi Cap Fund and JM Flexi Cap Fund. What has worked for these, Piyush?
Yeah, so JM and Bank of India, there are relatively smaller size funds in the category. JM is ranked 1 in the last 4 consecutive quarters. Its rank 1 is primarily driven by its performance, where it is ranked 1 on return parameter. Even on portfolio-based attributes, fund is fairly diversified at a sectoral level as well as at a company level. With its lower asset size, the fund also scores high on the liquidity parameter. Bank of India is a fund which has been ranked 1 in the last 2 consecutive quarters. When we go into the further history, it was ranked 2 in the earlier 2 quarters. It is also a relatively smaller size fund with approximately 600 crores of assets. Fund scores high on return. It has outperformed the benchmark and the category across time frames. However, the fund has relatively higher volatility compared to the peer set, but it's a fairly diversified portfolio at a company level and is ranked 1. Some of its bet in PSU sector, PSU banking sector, financial services, power sector stocks have played favorably in terms of its performance.
Got it. Now, in the last 2, we've got Axis yet again, the FlexiCap Fund and the UTI FlexiCap Fund, which have underperformed. Why is it that these schemes have underperformed? And is it because of the relative underperformance of the returns compared to peers, or is it more than that?
Yeah, so return is one of the primary factors for their lower ranking in the category. UTI, for instance, has remained 5 in the last 4 quarters. It ranks 5 in the return parameter. Even on the portfolio-based parameter, UTI, with its asset size of 25,000 crore, scores low on the liquidity. So performance as well as liquidity, lower liquidity score has contributed to its lower ranking in the category. When we look at Axis, Axis is a fund which has again remained in the lower ranking category for last 4 consecutive quarters. Its performance has remained weak over a period of time. It is ranked 4 in terms of return parameter. The fund also has traditionally maintained a relatively concentrated portfolio, especially at a company level, which means that some of the stocks where the fund has higher exposure and which have also not performed in terms of return has adversely impacted its overall ranking. Its ranking on the liquidity parameter is also weaker with its 11,000 crores of assets.
Got it. I want to move now to the mid-cap space where you've seen quite a bit of churn, and there's a new fund that makes it to the list right at the top, ITI Mid-Cap Fund. Motilal Oswal Mid-Cap Fund is ranked 1. It was ranked 2, or rather in the next category in the previous quarter, and Quant Mid-Cap Fund is also breaking into the top percentile. What's worked for these?
Yes. So ITI is a fund which has completed 3 years of its performance, and hence it has entered into the ranking in the latest quarter. The fund is ranked 1 in this particular quarter. It scores high on the returns. With its lower asset size, it scores high on the liquidity parameter also. Fund is a fairly diversified portfolio at a company level and is ranked 1 even on that parameter. Some of the stocks in large cap, PSU space, financial services, capital goods have positively contributed to its performance. When we look at Motilal Oswal, this is a fund which has seen improvement in ranking compared to the previous quarter. It was ranked 2 in the earlier quarter. Even before that, when we look at earlier quarters, it was ranked 1. So to some extent, the fund has remained in the rank 1 or rank 2 category in the last 4 quarters. The fund performance in the ranking is primarily driven by its returns. It is ranked 1 on return parameter. Having said that, the fund has a relatively concentrated portfolio, ranked 5 on the concentration parameter. Some of the stocks in energy, auto, IT has contributed positively to its outperformance.
All right.
Quant mid-cap, just like all the quant funds that we have seen in the equity category, it's a portfolio which has a relatively higher churn in its portfolio. The fund has been ranked 1 in the latest quarter. Prior to that, the fund was ranked 2. Some of its stock selection bets have continued to play positively for its outperformance, and it has remained outperformer across time frames.
Let's quickly run through the laggards and then move to the last category of mutual fund schemes. But in mid-cap, you have DSP mid-cap, PGI India mid-cap, as well as UTI mid-cap that have underperformed. Why briefly has this taken place?
Yeah, so DSP, when you look at its ranking, it has declined from rank 4 to rank 5. When we look at parametric-wise ranking, its decline at its return parameter has meant that its ranking has declined. It was rank 4 in the previous quarter. It has come down to rank 5. Its exposure to some of the stocks in consumer discretionary has adversely impacted its performance. It also scores lower on the liquidity parameter and company concentration parameter.
Got it.
When we look at PGIM again is a weaker performer in terms of ranking. It's ranked 5 in the last 3 consecutive quarters. Its lower ranking in return parameter and relatively lower ranking in liquidity parameter has impacted its overall ranking in the category. And third being UTI. UTI is a fund which was ranked 4 in the previous quarter. However, it has slipped to rank 5 in the latest quarter. Fund scores low even on the parameters like industry concentration and liquidity. While it is a fairly diversified portfolio at a company level, some of its exposure into consumer discretionary healthcare stocks have adversely impacted its performance.
Yeah. Piyush, let's quickly run through the small cap winners and the losers. On the winner side, you have Bandhan as well as Quant. What's worked here?
Yeah, so Quant small cap is a fund which has seen improvement in its ranking in the last 3 quarters. The fund was ranked 3, in fact, 3 quarters back. It has gradually come up to rank 2, and now in the latest quarter, it is being ranked 1. If you look at quant funds across equity category, they follow a strategy of high portfolio churn with a concentrated portfolio, and some of its bets at a stock selection level has worked, and which has meant that the fund is ranked one. When you look at Bandhan, again, this is a fund which has seen improvement in its ranking in the last 4 quarters. The fund has improved from rank 4 quarters back to rank 1 in the latest quarter. Its performance being the primary driver. Apart from returns, it also scores high on company concentration parameter, thereby ranks higher in the overall ranking.
Absolutely. And on the underperformers, you have Aditya Birla Sun Life Small Cap as well as UTI Small Cap. Unfortunately, we're running out of time on this particular segment. But thank you so much for joining in and for giving all of the analysis that you give. I'm sure that's going to be useful to a lot of people out there.
Thank you, Alex.
All right, viewers, we have to slip into a very quick break. But on the other side, we'll talk about flexi cap funds in more detail. So do stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe.
Welcome back. You're watching the Mutual Fund Show, and I want to talk to you about flexi cap mutual funds, equity mutual funds, because this is one of the largest categories in the actively managed equity mutual fund space. Nisreen Mamaji is joining in to talk about how you should go about choosing the scheme in this category. Nisreen, thanks so much for taking the time. Now, this was a classification that was done a few years back by the Securities and Exchange Board of India because they found that multi-cap funds were not being true to label. How do you rate the way that these schemes are currently being managed, and how many, according to you, are truly flexi-cap in nature?
So basically, I'll just, explain what is the difference between a flexi-cap and a multi-cap before we continue with that discussion. So a flexi-cap fund doesn't have any mandate to be in a particular market cap. So it can be, 60-70% in a large cap if the market conditions are, as they are right now. And they can reduce their mid and small cap exposure. A multi-cap fund, on the other hand, has to be mandated to be 25% in large cap, 25% in mid cap, 25% in small cap, and the balance 25% will be as per the discretion of the fund manager. So in that sense, a flexi cap fund manager has much more discretion of his own to decide whether he wants to be 100% in large cap and say, maybe 0% in the others, or he can even select a 70% in a large cap, 30% in mid cap, and 0% in a small cap. So there is much more flexibility with a flexi cap fund manager, and as the conditions prevail today. Since the mid caps and the small caps have already run up to a large extent, a flexi cap fund manager can reduce his exposure to mid and small and make sure that for the next 2 or 3 years, his fund may outperform a multi-cap fund. So these are the basic differences between a flexi cap and a multi-cap fund.
Got it. All right. Now, how do you judge the performance of these schemes? I ask because in a market that is doing well, that is running up, you see outperformance in the form of stock selection that is aided by that bullish trend. But do you also pay attention to underperformance and portfolio protection or downside protection, because these schemes ultimately should be offering that?
So definitely, in a 100% large cap fund, basically the investor horizon has to be 3 years upwards. So whether it is flexi cap or whether it is multi cap or even a large cap, it's very difficult for the investor to be in an equity fund and at the same time ensure that you're protecting your downside. What you can do is make sure that your tenure is longer, okay? Because no fund manager can protect downside like what happened in 2020. Suddenly in that year, there was obviously, a cataclysmic effect, and suddenly overnight, all the NAVs have dropped, and there was obviously, for some people who were newly invested and for people who had been invested for 2 to 3 years also, they would might have seen a loss in principal as well. So when you are an equity fund investor, you have to make sure that your horizon is at least, 5 years upwards, between at least averagely 4, so that you can withstand the volatility and protect the downside as well as have an expected return on investment over a longer period of time. So that is one thing that the investor has to make sure, that you are there for the longer term. If you are a shorter term investor, say for 1 to 3 years, then there are a range of dynamic asset allocation funds that you can, be an investor for. You have the equity savings fund, you have balanced advantage funds, you have dynamic asset allocation funds, you have asset allocator funds, you have multi-asset funds. So if your tenure is shorter, then it would be advisable for you not to be in a 100% equity fund like a flexi cap or a multi cap or even a larger mid cap.
Okay, having said that, very quickly, before we move to a few of the queries that have come through, Nisreen, are there any schemes and managers that you have paid close attention to, that you have followed and that you like?
Basically, we do recommend Parag Parikh Flexi Cap Fund, HDFC and Franklin Templeton, not only for the performance, but for the consistency over various periods of time, and also for the value that the AMC brings to the table. So it will be Parag Parikh Flexi Cap, which is a very long-running Flexi Cap, Franklin Templeton, and HDFC Flexi Cap as well.
Got it. Let's move quickly to the questions that have come through. The first one's from Anuj. He says he's 40 years old. He's asking, is it better to create an emergency fund in a high-yield saving account with 7% return, or to buy a liquid fund for the long term? He wants to move 20 lakh invested from regular mutual funds to direct funds, and he's wondering about the tax implications and the market conditions. What would you say about these two questions, Nisreen?
Sure. So, Anuj, the query depends on basically how long you're planning to hold the emergency funds for. Because in a liquid fund, the average return would be, post expenses about 6.7 to 6.8% post expenses in a direct option. In a regular option, it will be around 6.5. So if you're comparing between, a liquid fund where you're earning about 7% return on investment, and in a liquid fund where you would be earning about, say, between 6.5 to 6.8, it depends on the tenure. If you're holding it longer, then you can get advantage of the interest rates moving down, in which case the yields will go up. Okay, so you have to keep that in mind. Also, your own marginal tax rate, which will be, applicable for both your savings account and a liquid fund. What I would recommend is that you look at arbitrage funds presently, because you will get the benefit of equity taxation on that. At the same time, the current, spreads are around 7.5 to 8% annualized. So that option you haven't mentioned, but I think for an emergency fund, which you're holding for about 6 months or longer, you can look at, besides the savings account with a high yield savings account or a liquid fund, you can look at an arbitrage fund. Also, once you've established your emergency fund, you will be holding that for a longer period of time. So, it's basically 6 months of expenses. So neither of these options also suit you, because once you've established that, if you're doing an SIP, then yes, either of these options are fine. Once you have the lump sum, you can easily be in any dynamic asset allocation fund. You can be in an equity savings fund. Yeah. You can be in a BAF or a multi-asset fund, because you can withdraw from it anytime.
Yeah.
The second part of your query is regarding, whether you want to move from a direct option to the regular option. So remember, on the books, it will be a sale. So you have to sell out of the direct funds and purchase the, direct, sell out of the regular funds and go into the direct funds. So you'll have to book your profits and pay the taxes. And after that, you will, it's like a fresh start. So if you're mentally prepared to do that, then of course it would be a good option, and then you can continuously review the direct fund returns.
Yeah, and if you're holding for a long period of time, then it certainly makes a lot of sense. The second question and the last one that we'll take today is from Sheetal Gonzalez. She's got 8 lakhs that she wants to invest into mutual funds, and she's got 2 primary goals. One is her daughter's education that she'll need after 8 years, and a retirement fund for her husband in 10 to 12 years. Could you suggest a few schemes, Nisreen?
Sure. So for her daughter's education, I would recommend a Flexi Cap fund, which is Motilal Oswal Flexi Cap fund, a Bandhan Core Equity fund for the large and mid category. So Motilal, we can put in about 2 lakhs. Bandhan Core Equity, we can put in about 150,000. And ICICI Pru India Opportunities, where we can also put in about 150,000. So the future value for the daughter's education after 8 years at about 13% return on investment or compounded annualized growth rate would be around 13.3 lakhs. And for a husband, which is who's going to retire about 10 to 12 years down the road, we would recommend ICICI Pru Business Cycle Fund, which is a sectoral thematic kind of a fund. And there she can invest about 3 lakh rupees. And at about 15% compounded annualized growth rate, she can expect about 16 lakh rupees at the end of 10 or 12 years.
All right,
so this is the asset allocation.
Absolutely. Thanks so much, Nisreen, for getting us those questions answered, and indeed for the conversation that you had with us on Flexi Cap funds. That brings us to the end of this particular edition of the Mutual Fund Show. Let us know what you think in the comments, and do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome, you're watching Earnings Edge and I'm your host Mahima Vajrajani. Well, let's take a quick check on how the markets are panning out to be. In terms of benchmark indices have traded in a band of around 125 points when we talk about Nifty. If we can pull up the Nifty 50 chart, we'll realize that at present it's off from its day's lows, currently trading at around 0.4% higher. Top gainers on the Nifty, if we can pull up, Power Grid is something that's leading the Nifty 50 today. There's BPCL, there's Bajaj Auto, HDFC Bank, TCS, all of these contributing to towards the Nifty. Something that's weighing down the Nifty include ICICI Bank, Bharti Airtel, Kotak Mahindra Bank, Axis Bank. But let's pull up a chart of Sensex and see what Sensex is doing today. It was trading within a band of around 400 odd points. Sensex is also off from its day's lows, currently trading at 0.34% higher. In terms of the breadth of the market, if we can pull up that, the breadth of the market is skewed towards the buyers today. There you go, the graph has been straightening out, and there's 1072 advances and 860 declines. Let's take a quick check on how the broader markets are doing. Mid cap 150 and small cap 250. There you go, mid cap 150 has recovered and now currently doing better than the benchmarks, 0.5% higher, and small cap is a bit under pressure. It's trading at around 0.2% higher. But let's shift focus to India Mart. It came out with its results recently, and to give us some color as to how the quarter has gone by and to break down those numbers for us, we have with us Mr. Dinesh Agarwal, founder and CEO of India Mart, who joins us now. Welcome to NDTV Profit, sir.
Thank you.
Yeah, my first question to you is that, give us some color on how the quarter has gone by. Good set of numbers, net subscribers have improved. So tell us how the overall, trajectory of the company is panning out to be.
So the quarter has been satisfactory on few fronts and unsatisfactory on few fronts. So if you really see, we have improved the margin from last year same quarter to this year same quarter. We have been able to optimize certain costs and improve the productivity. On the standalone basis, the margin is about 30%. On the customer front also, last quarter we did about 1800 customers. This quarter we have been able to improve net addition of about 2700 customers. So we will continue to improve from here on towards our usual target of 5000 customers per quarter in a couple of quarters. Since the last 4 or 5 quarters have been slower on the customer addition, so we have been relying mostly on the ARPU growth or customer realization growth, which has resulted into good revenue and good collections in the quarter 1 and quarter 2. But in the quarter 3, collections had come down to 16-17%, and in the quarter 4 also collections had come down to 16-17%, which has also resulted into the lowering of the revenue from operations to only 17%. We believe that one or two more quarters are going to be tough on the collection side, but as we improve the paying subscriber base addition, our collection from customers will also improve towards upwards of 20%, and then our revenue from operations will start to grow from there.
Understood. So you had guided for a 20% growth in collections. So from H2 is what you're expecting, that they'll recover from the 16% mark to 20% mark?
Yes, sir.
Okay. In terms of your churn in silver category, that's remain elevated, and that's a concern which is overhanging. And so I want to understand that thereby going forward, will it continue to be same, and will it impact your overall revenue growth itself?
As I said earlier, it has been declining quarter on quarter for the last 4 quarters. We have come down from 5,000-6,000 customer addition per quarter to barely 2,000 customer addition per quarter, which was the result of both some 1,000 customers shaved off from the gross addition and more coming from the silver monthly and silver annual churn. Now, having said that, we are working towards correction of both. over the next 2 quarters, I am confident that we should be able to get back to our usual 5,000 customer per quarter addition, and then collection and revenue will fall in place as well.
Okay, and can you give us a brief understanding as to what is your mix between platinum, gold, silver and free suppliers right now?
So we give you the in the investor presentation. If you see, we have started giving a guidance on the silver and gold total customer base, which is about closer to some gold and platinum total customer base, which is about 50% of the total customer base and contributes about 75% of the revenue. Our top 10% ARPU has also been growing significantly over the last 5 years or so. It has grown from 1,30,000 rupees to almost 2,60,000 rupees in the last 5 years. On the overall ARPU side, I think we are now sitting at last year at about 53,000 rupees.
Okay, and can you give us some idea as to what is the share of outsourced sales from your total revenue?
Outsource sales, we use outsource sales only for the new client acquisition. And as I have been guiding earlier also, depending upon a particular month or a quarter, we try and maintain a balance about 50-50%, 50% coming in from in-house and 50% targeted from outside. Some certain quarters it could be 45-55 and or it could be 55-45.
Understood. And Mr. Agarwal, in your last con call, you had mentioned that you're making investments to enhance customer experience. Now, I really want to understand, what are the kind of investments that you're making, any progress in that from Q3 and going forward in FY25, if you can give us some color on that.
Yeah, so enhancing customer experience is one we have started to invest on the chatbot side, AI-enabled chatbot. So if you really see some of the margin improvement that has come from the buyer side customer experience improvement, where we have implemented a buyer side chatbot and we have been able to reduce the call volumes for buyer customer service. And it has resulted into significant cost savings as well as improved buyer satisfaction, that we don't need to disturb them on call and they can leisurely reply over WhatsApp or Messenger at their ease. So we are continuing to work on that side. We will use multiple AI technologies that are coming up in order to improve the matchmaking and in order to improve the relevancy of the matchmaking for the supplier and buyer both.
Okay, Mr. Agarwal, I'll ask a question from a long-term perspective. What kind of revenue growth you're seeing for the next 3 years? One thing, and your margins are very good at 30%. So going forward, FY25, FY26, what are your margins looking like then?
So margin, as I said, we have now. We feel very confident that this 30% margin we are going to protect over the next year or so. As I said, if we are able to do upwards of 20% revenue growth, then we will probably have our margin expansion by 1% every year. But on a very, very longer period of time, I'm not a future grazing person who can give you an idea into what would be the 3-year revenue guidance. But looking at past performance, I think we have been growing upwards of 20% in revenue. And about, if you leave out the COVID years and the COVID recovery years, we have been typically having 18% of the expenses growth. So there has been some margin expansion on that side. Having said that, now that we have reached to 30-odd%, I think it will be slower from here on, but it will all depend on the what kind of top line growth we can manage.
Understood. Well, Mr. Agarwal, thank you so much for taking out time and speaking with us at NDTV Profit. It was a pleasure talking to you.
Thank you. Thank you very much.
Thank you. Moving on, Adani Total Gas had earlier come up with the fourth quarter earnings with net profit surging 59%. The company's CEO, Suresh Manglani, addressed key highlights from the March quarter. Listen in.
I am pleased to share the financial results of Adani Total Gas for the full year and quarter 4 of the financial year 23-24. Financial year 23-24 has been a transformative year for Adani Total Gas, and the team ATGL has delivered a robust operational and financial performance. Let me share with you the key highlights. Overall, CGD volume rose by 15% year-on-year for the full year and 20% year-on-year during quarter 4. Our CNG network has now increased to 547 stations. We are serving now over 8.2 lakh PNG homes and chasing a target of 1 million homes.
Well, those were the key highlights for Adani Total Gas. But shifting our focus to the IPO space now, my colleague Vishwanath earlier spoke to the management of Aadhar Housing Finance about their upcoming IPO. Listen in to a slice of that conversation.
In terms of the IPO, we are looking at 3,000 crore of IPO, out of which 1,000 crore is primary and offer for sale is 2,000 crores. In terms of price band, we are looking at a 300 to 315 price band. In terms of timelines, we are opening the issue on 8th of May and closing will be on 10th of May. And probable listing is on the 15th of May. 7th, sorry, my mistake. 7th is the opening of the anchor book.
7th is the opening of the anchor book. That's a brief on the IPO. Got it, sir. I want to tackle the first question first with respect to the amount that you outlined, 3,000 odd crore. When this discussion was happening last year, the number was close to 5,000 crore. That has been brought down to 3,000 primarily because the selling shareholders, which is the promoter of the company, Blackstone, is not looking to sell as much as what it was talking about earlier. Can you just tell us about what went behind this decision?
I think, the answer lies in your question itself. The primary intake remains more or less the same. We were talking about 1,000 to 1,200 crores earlier. We are talking about similar numbers now. It's now, not to be precise, it is 1,000 crores primary, which is going to be used towards expansion strategy of the company. As far as the offer for sale goes, earlier it was 4,000 crores. Now we are talking about 2,000 crores. I think it is more to do with more external market factors and the way the promoters view the current situation. Management obviously would not have too much to comment on, why it has dropped.
Okay. Let me also get in some answers with regard to where the business stands as of 31st of December, which is the numbers that you have disclosed in on your RHP. First and foremost, on the profitability side, you are a fairly highly profitable housing finance company out there in the market. Can you tell us a little bit about the operating environment that you have been functioning in over the last 2 or 3 years since COVID?
So I would say, since you use the word COVID, I think post-COVID, the market has been very, very dynamic. While there were fears, immediately post-COVID, there were fears of the market shrinking down, but I think it is industry-wide phenomena when it comes to low-income housing. Yeah. We've all together seen a thrust in demand. I think it is also to do with the kind of segment that we operate, the kind of sentiment that this segment operates in. Everybody post-COVID, I think, has at least the segment that I operate in wants to have a own house to secure their family for a future perspective. There has been thrust and demand from all kind of loans that we do. We do resale loans, we do self-construction loans. So I think the demand has equally moved across the product portfolio. So I would in nutshell say the market has been very dynamic, and when we interact with our peer groups, I think this is a similar feeling that we have across the industry. Which is an excellent sign when it comes to, especially the segment that we are dealing in. It's a great sign that the market has been very, very dynamic.
Well, with that, it's time to slip into a short break, but do not go anywhere. We have a very interesting conversation with management of Federal Bank on Q4 earnings. Stay tuned to NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Brought to you by State Bank of India, the banker to every Indian.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving,
welcome to NDTV Profit. I'm Harsh Saita, and with me we have the management of Federal Bank. We have Mr. Harsh Duggar joining us with regard to the Q4 numbers as well as what we can expect from Federal Bank going forward. It's been, sir, FY24 has been a year in which margins have been under constant pressure. What changes for you, especially in terms of that top line as well as margin number for FY25, because growth continues to be quite strong for you?
So a couple of things which we are looking at. Obviously, the margins are under pressure. That the run for deposits is an issue across the banking sector itself, not just Federal Bank. Couple of things which we are looking at addressing this, and the NIM is looking at the high NIM accreting products like commercial vehicles, microfinance, credit cards, personal loans, gold, and MSME business. So that business used to be around 21% of our total advances, has grown to 24%. And we are looking to materially increase this over the next 2 to 3 years. And their share in the income also has been steadily increasing. So that is one part. The second part is obviously the focus on CASA. We're looking at expanding. We opened about 140 branches last financial year. We're looking at expanding our branch network significantly this year. Should help us in getting us low-cost CASA. So this is other thing which we are looking at. Apart from that, increasing product per customer, we're looking at that, looking at government business and other areas which can get us a liability business at a low cost.
Understood, sir. So a couple of points you've made, I want to try and break that. FY25, will margins recover? Where should they be at in FY25? What's the broad level number that you're looking at? And over the next 2 to 3 years, as you've described, probably higher margin business, where should margins therefore normalize at? What should be the new normal for Federal Bank?
So if you look at it, the pressure on the NIM in the current financial year was largely on account of the cost of deposits going up. Typically, that's what happens. The advances, the yield goes up and the deposit cost goes up with a lag. We are assuming that the increase in cost of deposits by and large is done with. On the share of which is what I mentioned, high margin business, which is at about 24%, 25%, we are looking at their share to contribute materially more in the next 2 to 3 years. So we would look at improving our NIMs over 10 to 20 basis points over the next 2 to 3 years.
Understood. Yeah, okay, point taken. And with regard to OPEX and with regard to the way you've grown your branch network, extremely strong. I know some one-offs on the OPEX front, but OPEX has been elevated even outside of that. If I do the rough math, outside the one-off, 8% sequential is what OPEX has gone up by. Would you expect that kind of number to stay elevated given the branch increase you're doing, or what exactly is contributing to that elevated OPEX?
Okay, in the number for Q4 which we gave, about 162 crores was the impact of provisioning for pension cost, which is you're aware of, which obviously elevated the numbers of cost to income and our OPEX cost. We don't expect that. That's a one-off, as we mentioned. Apart from that, the branch network cost would definitely be there because we typically expect branches to break even within 18 months to 24 months. But we have met with quite a bit of a success of our new branch openings in FY23 and FY24. So we hope to replicate that piece with a faster break even. Secondly, the OPEX cost on an expanded base. So cost to income is something which we're looking at trending downwards and not upwards.
Understood. So where should that cost to income band be for FY25?
You would expect it to stay there around 52%. Not giving a real number, but that's what we would expect it to
Sure, sure. Yeah, absolutely fair. Yeah, doesn't have to be absolutely spot on, but just a broad range. Understood. With regard to credit costs, of course, Q4 absolutely muted in terms of credit cost number. But how do you assess the numbers for FY24 overall? Because we did see a bit of increase with regard to some of those numbers in Q2 and Q3. Would FY25 in comparison be a smoother year for you, or you expect the credit cost number to remain slightly patchy?
See, our asset quality to that extent, I mean, we must give the credit to the bank. It has been fairly consistent over the years. The last quarter in particular, the credit cost was at 1 basis points annualized. So, I mean, that's an absolutely low level. That's not expected to continue for in lending business. But we do not expect any surprises over here in terms of asset quality. Both our retail and wholesale book are quite pristine in terms of asset quality. So I don't think there's any surprises over there. And we expect that to only trend downwards and not upwards. The high margin business also, which we are doing and supposedly which are considered as slightly higher in terms of lower in terms of asset quality, we are also treading that very cautiously. So in terms of asset quality for FY25, we only expect it to get better than from where we are at. In general, even in the banking sector, if you look at it, asset quality has in general for across the banks been trending downwards. And we expect FY25 to be no different.
Understood. And that should basically allow you to grow well or continue to grow well, because you've done very well this year in terms of growth, 20% on loans, 18% on deposits. What's the sense that kind of trajectory to continue maybe for the next 2 to 3 years?
Most certainly, yes. If you look at the system level growth, it was more than 20%, but if you exclude the HDFC Bank merger, it was about 16.5%. So I would expect the industry growth for advances to be about 16%, and we would expect to grow definitely a tad higher than that. So a 20% growth is something which we've been guiding, give or take depending on how the industry trends and how the economy behaves. But there's no reason to believe that it would be any bit different. In fact, if at all, it will only get better. On the deposit side, it has been a challenge. We've shown an 18% growth against an industry growth of 13.5%. And we expect to grow faster and gain market share both on the advances side as well as the deposit side.
Understood. What one thing that analysts, whenever I speak with them, seem to be pointing out with regard to Federal Bank is ROAs don't seem to be, once they reach the 1.4%, it starts to become slightly difficult to breach that number. When can we expect that we go beyond the 1.4 to the 1.6, 1.7 kind of number?
So we've been guiding of 7 to 8 basis points growth in ROA year after year. And if you look at even Q4, if you take off the cost of pension, one-off cost which we incurred, we are almost at 1.4 levels, 1.38, 1.39 levels, which is the same as last quarter. And hopefully with NIM's improvement and a better control on the cost part of it, I mean, we have quite a few levers. Asset quality is something where we almost kind of fully leveraged on. But if you look at NIM in terms of CASA share to increase, and the C2I to come down, there are enough levers for us to pull to hopefully improve the ROA as what we've guided for.
So could we expect a 1.6% in FY25?
No, that's a tall task. Much as I would love to have that, that's a tall task.
Sure, okay, fair. Any guidance at all?
Over here, we definitely expect an improvement from where we are at, which is what we've been guiding.
Sure, understood, got it. And with regard to leadership, right, there's been all this chatter that's happening. I'll try to be as candid as possible. What's the kind of timeline, if not any name dropping happening, but what's the kind of timeline that the bank is expected to finalize the leadership by?
See, as you would be aware, there's a search committee which has been appointed by the board and the NRC, which is evaluating candidates, both internal and external. They expect, that's something which should go to the RBI for its approval. So I expect that to happen sooner than later. And I could presume it will be, because it has to be at least 3 or 4 months ahead before Shyam retires. So that extent also be able to expect something to come sooner than later.
Understood. Thank you so much, Mr. Duggar, and wishing you all the very best for your own role here, as well as, of course, wishing the bank all the very best going forward into FY25.
Thank you so much, Harsh. Thank you.
Well, the management of Federal Bank having a candid chat with us on Q4, as well as going forward, what one can expect. With that, completely out of time on this one. Stay tuned to NDTV Profit for more. For now, goodbye.
Your vote has the power to transform the future of a nation, which is the world's largest democracy. India stands at the center stage of the world today, and it's important to make the coming years count. I also have a message for the new voters. I understand the nervousness that sets in because it's your first ever vote and you want to make it count for a better future. Analyze the options carefully to understand the vision of the leader that you're voting for. Let us all come together and make one of the most important decisions in the history of a nation. One that will positively affect this crucial decade for our country.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Brought to you by State Bank of India, the banker to every Indian.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome to India Market Close, and it's been an interesting session, rather volatile but respecting important levels on the index, and that's what we saw. The day belonged to earnings and the markets were largely reacting to that. The breadth of the market was good and the broader markets have actually outperformed the benchmark index in terms of trade. That's what the Sensex and Nifty getting up to. 22649 is what we have. Remember, 22,600 is an important level of support for the markets that seems to be well respected as we see it. So pretty much at a flat day in terms of what we've had. We've been volatile, but in a very tight trading range. The Sensex as well trades high by about 120 points. It is the broader markets, like I said, that are outperforming the benchmarks. The mid-cap and the small-cap index, both trading with gains of nearly 0.5%. Small-cap index, though, on the other hand, trades flat. The mid-cap index seeing gains on back of earnings reaction. A couple of those counters are currently witnessing 210 points on the mid-cap index. Bank Nifty is having a bit of a sulky day. Remember, on Tuesday, it was a U-turn of sorts that we saw in trade with big gains on and record highs on Bank Nifty in the first half of trade. It was the second half on Tuesday that saw the markets do a U-turn, and of course the weekly expiry, the Bank Nifty continues to keep traders on their toes. In terms of the big movers and shakers, of course the last sort of closing looks slightly worse from where we started off this morning in terms of the breadth, but nevertheless not much to worry or complain about just yet. Power Grid is your top gainer, nearly 4% higher. OMCs are looking good from the word get-go, and that's what I highlighted early this morning on back of lower crude prices. Crude trades at a 7-week low on back of US rising inventory, and of course OMCs are a proxy play to crude prices. BPCL is up 4%, and it's a sweet move. It started off flat and has gradually gained as we've gone along through the day. Paint companies also not doing too badly. Bajaj Auto on back of those monthly numbers. NTPC, Tata Steel are having a pleasant day. M&M continues its upward journey. It was the top gainer on the Nifty on the start of opening today, but continues to have a solid sort of move up about 1.5%, building on to what we saw on Tuesday. On the sell side, it's Kotak Mahindra Bank that gets another blow with its joint MD stepping down. Bharti is having a weak day. Wipro had a pretty big order win, but tech seems to be in a bad mood in today's day of trade. So the whole tech pack is trading slightly lower as we see it. HDFC Life, as is ICICI Bank, Titan, of course, are some of the other mild losers in terms of trade. But like I said, the action is across the broader market. Stocks like REC, PFC, Power Grid are the ones that are reacting pretty well to earnings, and the party in that space continues to catch our attention as we go into the last 45-50 minutes of trade today. But it was the Adani pack that has been reporting pretty fantastic numbers, to say the least. Let's go across and hear out what the management of Adani Ports has to say as they lay out the road ahead for the company in FY25.
APSEZ has delivered its strongest ever operational and financial performance in FY24. We have outperformed against the cargo, revenue, and EBITDA guidance provided at the start of the year by 6 to 8%. Thanks to our customers, shareholders, and other stakeholders for maintaining their firm confidence in APSEZ's business. Some highlights of the year gone. Firstly, on ports. APSEZ handled 420 million metric tons of cargo in FY24, which is 24% year-on-year growth. In India, our cargo volume grew by 21% year-on-year, which is 3 times the average Indian cargo volume growth rate, hence contributing significantly to India's growth. Given the sweating of assets, our domestic ports business EBITDA margin expanded by around 150 basis points to reach 71%. Next, our logistics business. The rail volumes jumped 19% year-on-year to reach around 0.6 million TEUs, while bulk cargo volumes increased by 40% to reach around 20 million metric tons. During the year, we launched the trucking business segment with a fleet of around 900 trucks to provide last mile connectivity to the customers from ports, ICDs, and customer premises. Now let me discuss the financials for the full year. Our consolidated operating revenue increased by 28% to reach rupees 26,711 crore. The consolidated EBITDA, excluding Forex, grew by 24% year-on-year to rupees 15,864 crore, and the profit after tax jumped 50% year-on-year to rupees 8,104 crore. Talking about our leverage, despite a capex of over rupees 7,400 crore during the year, our net debt to EBITDA ratio improved to 2.3x, below our guided range of 2.5x. An update on annual dividend. For the financial year 2024, the APSEZ board has recommended a dividend of rupees 6 per share in line with our capital allocation policy. This implies a payout of around 1,300 crores. APSEZ continues to enjoy an investment grade rating from global third-party rating agencies. One of the Indian agency, CARE Ratings, has assigned AAA to APSEZ, making us the first private corporate infrastructure developer to be rated AAA. While S&P and ICRA upgraded the outlook of APSEZ to stable from negative during the year. As of year end, APSEZ is present across 15 ports in India, 4 ports internationally, and its logistics base include 127 trains, 111 tugs, 900 trucks, 12 MMLPs, agri-silo capacity of 1.2 million metric ton, and 2.4 million square feet of warehousing. Looking at the current financial year, that is FY25, with an increase in our customer base, increase of our revenue streams like trucking and operational excellence, we expect cargo volume in the range of 460 to 480 million metric ton, revenue within 29,000 to 31,000 crore, and EBITDA in the range of 17,000 to 18,000 crore, while investing a capex of rupees 10,500 to 11,500 crore for future growth. Our net debt to EBITDA ratio is expected to be around 2.2 to 2.5 after factoring the capex and the scheduled loan repayments. We look forward to another great year ahead. Thank you.
Okay, that's the commentary coming in from Adani Ports. Let me quickly welcome on board Nagaraj Shetty, HDFC Securities, to talk to us about markets. Nagaraj, tell us, how are you viewing markets at this point? What should one do?
Hi, Ash. Good afternoon. Nifty has been in a consolidation mode at the resistance, no doubt about that. At 22,800, 850 is going to be a strong resistance of multiple highs and trendline resistance channel, upper end of the channel, and important Fibonacci extensions comes around 800 to 850 levels. So there is a possibility of a consolidation, some more weakness in the next 1 or 2 sessions. And at the lower levels, 22,300, 250 is going to be a good support for the market. So major trend, intermediate trend remains up for the market, currently showing consolidation placed at the higher levels. There is a possibility of some more consolidation or a minor dip down to another 200 to 250 levels points at the lower levels, and Nifty likely to bounce back from the lows.
Nagaraj, what's the trade on Bank Nifty after what we saw on Tuesday? This afternoon as well seems like it's still finding its feet. With the weekly expiry as well, how would you approach Bank Nifty at this stage? Consider going long in this this time of consolidation that it's going through?
Are you asking about Bank Nifty or Nifty? I just missed out.
Bank Nifty.
Yeah, Bank Nifty. After a stellar movement a few days back, Bank Nifty has been consolidating. If you look at the chart pattern over the last couple of sessions, we have seen some selling pressure building up from the higher levels, from near 50K in Bank Nifty. But I'm not expecting any bigger decline from here onwards. I think buy on dips opportunity is there for Nifty as well as Bank Nifty. 48,500, 48,700 is going to be a good support for the banking sector on any dips from here. I think it is going to be a buy on dips opportunity.
Okay, Nagaraj, and we had the management of Adani Ports on the channel. Obviously, the type of guidance given is quite bullish for FY25. They're planning 460 to 480 MT in terms of capacity for FY25, so quite strong, and on top of very strong FY24 as well. What's your sense with regard to this one?
Adani Ports has been in a range-bound action over the last couple of weeks, and we have seen its intermediate trend remains up. We have seen some higher tops and bottoms on the daily and weekly chart, indicating that the main trend is up, remains currently showing a consolidation patterns, and today making an attempt of moving above the immediate resistance of around 1350, 1360 levels. Once it breaks above that level, 1410, 1420 going to be the next resistance for these stocks in the near term.
Okay, thanks for that, Nagaraj. Let me also bring on board Sunny Agarwal of SBI Cap Securities. Welcome, Sunny. Good afternoon. With regard to Adani Ports, your views, given the kind of numbers that they've posted FY24 and what they've put out in terms of expectations FY25, the margin improvement is also significant.
Yeah, good afternoon and thanks for having me on the show. I think the entire infrastructure sector, including port, is going through a very sweet spot. So we have seen the port volumes have increased consistently over the last 3 to 6 months. And I think Adani Port, being the largest port operator with close to 30-35% market share, they are definitely likely to benefit. And based on the recent numbers and commentary, I think we continue to remain bullish on Adani Ports with a medium to long-term investment horizon.
That's of course the word coming in on Adani Ports. Adani Enterprise are both trading with a marginal gain, 1 to 1.5% high. Nagaraj, as we go into the last 45 minutes of trade, do you have any trading strategies, any calls on the long short side for the May series?
Yeah, I have a couple of long positions. If you look at the mid and small cap segments, they are continuously moving up. They're into a new all-time highs. There is no any sign of any tiredness in the broader market indices like mid and small cap 100 of NSE exchange. I have a couple of stock picks. First one is Wellcorp. If you look at the Wellcorp, has been in a range-bound action in the last few sessions. Today, made an attempt to move above the range, currently placed in the hurdle of around 590-95 levels. Once it moves above, currently trading around 599, I'm expecting this upside momentum to continue. And the next upside target would be around 635, 640 levels initially, and one can place a stop loss at 575 levels. And the second is DBL, Dilip Bitcoin Limited, has been in a range-bound action. He made an attempt of upside bounces. Immediate resistance is around 500, currently trading around 465. One may look to buy at this point of time. It can move towards 495, 500, which is the next set of resistance for this stock price, and 445 is going to be the stop loss.
Right, but the stock of this week is, I think, REC and PFC. The twins have actually had a pretty good run. REC reported earnings around market close on Tuesday. Even before that, the counter was up 10%, and responding positively to those numbers, the stock is up 9%, made a new record high earlier today. Well, let's hear what the management had to say. My colleague Vikas caught up with the chairman and MD on the key growth drivers in the quarter gone by and what lies ahead as we gear up for FY25.
The year 2023-24 has been really a fabulous year for REC. We have been able to achieve the highest ever profit after tax, about 14,019 crore. Last year our profit after tax was 11,055 crore. The main factor which has contributed to the significant growth of REC is our major focus on renewable energy segment. Last year we were able to sanction project worth 1,36,000 crore of renewable energy projects, and we are targeting that our renewable energy portfolio should increase to about 30% of our asset under management by the year 2030. So we are targeting that. Right now our asset under management is about 5,09,000 crore. By the year 2030, our asset under management will grow to about 10 lakh crore, and out of that 30% will come from renewable energy portfolio. Second is that another factor which led to the phenomenal growth of REC was Improvement in distribution sector. Government of India, Ministry of Power has taken huge reform measures. They brought revamped distribution sector scheme, late payment surcharge rules. This has really contributed in turnaround of the power sector utilities, particularly the state sector.
Right, management of REC continues to be decently bullish, 15 to 18% kind of growth number given. You know, Nagaraj, let me come to you first on the technicals. What really explains the kind of move that we've seen over the last couple of days at least, nearly 20% up on both REC as well as PFC?
Yeah, first look at REC. What it was going on is the larger range bound action over the last couple of months. Technically speaking, there was a resistance around 460, 465 levels, and the stock has been finding resistance of the downsloping trend line. Technically, we believe whenever the repeated hitting of the trend line resistance or whatever hurdles eventually results into a breakout, decisive breakout. This is what exactly happened in the last 1 week. A 20% move above the level has happened. So this is phenomenal, and I am expecting this upside momentum is likely to continue. Having moved up recently sharply, there is a possibility of some consolidation. There is a possibility of some range movement. I'm not expecting a bigger decline from here onwards. A small dip is going to be a opportunity, and eventually this stock could move towards around 580, 590 levels, which is the next set of resistance for the period of time.
Okay, point taken. Sunny, if I can come to you with regard to fundamentals, this one's trading now at 2 times trailing, maybe 1.7, 1.8 times 1 year forward, around 15 to 18% growth, but the key being recoveries. What should one make of this? Because it's trading at its life highs in terms of relative valuations. Lows, maybe 10-year lows in terms of dividend yield. Of course, recovery is in the pipeline. You think any more juice left in this one in terms of value?
Yeah, I think we continue to remain bullish on REC from a long-term perspective. The reason being that with their AUM close to now 5 lakh crore, I think the management has aspiration to take this to 10 lakh crore in 5 years. So that's near close to 15% kind of figure as far as the loan book growth is concerned. One of the positive factors which is working in favor of REC is the continuous improvement in asset quality. So I believe that maybe by the this fiscal year end FY25, I think asset quality will further improve, and we may see a very near negligible NPAs in REC. And obviously the growth driver is a renewable energy portfolio. In terms of valuation, yes, I agree. Trading close to life high in terms of valuation close. So as per our estimate, it is trading at 1.6 times FY25 price to book. But if you compare other power companies like IRE, DA, which is trading close to 3.54 times price to book, I think there is still some juice left in terms of re-rating as far as REC is concerned. So our fair value for REC with a 12 to 14 month investment horizon is close to 620 rupees per share. So any deep is an buying opportunity in a medium to long term.
Understood. And Sunny, if I can just take your view with regard to just recoveries, what's the kind of recovery number you all are penciling in with regard to REC for FY25?
So I think I don't have that number handy right now. Sure. Just give me a moment. I will get back to you on that.
Sure, no worries. So probably post the break. Thanks so much, Sunny. Stay on, of course. We'll slip into a very, very short break. On the other side, we have the management of Dabur India with us live. Stay tuned to NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Welcome back. You're tuned into India Market Close here on NDTV Profit. Quickly want to take you through a couple of stocks which are really making news and moving in trade today. One of which is Kotak Mahindra Bank. On the back of KVS Manian, who was elevated to joint managing director at Kotak, and him stepping down and possibilities of him being linked to Federal Bank as well. A stock taking a bit of a tanking, 2.5% lower, on top of the 10% that it's already done after the embargo put in by the RBI. Want to quickly try and take Sunny, your views first off with regard to Kotak. You know, just how critical is Mr. Manian as a cog in the leadership? Do you believe that this materially shakes up the proposition that Kotak Mahindra Bank had in terms of an investment?
I think, obviously, it's a bit shocker that post recent promotion and of the management and leaving, definitely there is some vacuum in terms of leadership. But what I feel ultimately, organization is something which is run by the group of people, and I think Kotak is a well-run institution. I think today's reaction is a knee-jerk reaction. So somebody else will definitely lead the bank, and again, I think it should not be an issue as far as growth is concerned for Kotak. And even assuming an hypothetical scenario that Mr. Manian is going to Federal Bank, which is what the street is expecting. We all know that Kotak is also on prowl to acquire a small regional bank. You never know that going forward, Kotak may go and acquire the Federal Bank, and again, Manian will be back in the Kotak fold. So I think, let's see, I think it's a knee-jerk reaction today. Management change is a part and process of any organization. I don't think so. That's a big blow as far as business growth or any business-related aspects are concerned for Kotak.
Right, it's a knee-jerk reaction. Nagaraj, another corporate action that I want to get your view on is the realignment of the Godrej brand, or the family rather. Now, what we are seeing today is all those Godrej counters seeing a cut of 6 to 7% each. In my opinion, there is no breakdown on the charts of any sort. This is a fundamental news trigger that came out of nowhere, and the stocks have corrected. Do you think this becomes a good opportunity for a trader to pick up maybe a Godrej Properties, a Godrej Industries? Of course, if there is no breakdown of any important support levels.
Yeah, for Godrej stocks initially, if you particularly Godrej Industries has reacted. Most of the Godrej stocks have reacted from the swing highs, and I think it's going to be a correction for a shorter term. I'm not expecting any bigger decline. Some more weakness is likely, especially for Godrej Industries. Next lower support will be around 820 to 830 levels.
Right, that's the call coming on Godrej Industry. Sunny, do you make anything of it? I mean, I believe minority shareholders would not be impacted because this has been done with a lot of finesse and respect, to say the least, and probably becomes a blueprint for other corporates to follow in terms of realigning or succession planning. Fundamentally, any impact on Godrej Properties or Godrej Industries, in your opinion?
I think there is no fundamentally there should not be any impact as far as normal business operations is concerned. Since I think this entire dispute has been resolved amicably, and all the key listed companies continue to remain with Adi Godrej and Adi Godrej Group. In fact, that will clear a lot of overhang pertaining to what can be the outcome of this family split. So I think once this outcome is behind us, I think maybe today's today's knee-jerk reaction. From tomorrow onwards, we may see market again going back to discussing the business growth, and accordingly, stock price will react. So I think I would like to add a few companies from the Godrej Group in my portfolio, especially holding companies like Godrej Industries, which is trading at a significant discount to the holding which the companies have in the other Godrej Group. So I think even Godrej Consumer, I think the company is growing at a relatively faster clip as compared to the other peers in the FMCG industry, and is well placed to report a decent 12 to 13% kind of earning growth. So I think it's a good opportunity to add quality businesses in the portfolio.
Right, it's a good opportunity to add some of those Godrej names so far.
Sure. Also, you have Adani Enterprises, those numbers flashing at the bottom of your screen. Revenues up roughly 1% or thereabouts on a consolidated basis, coming in at around 29,000 odd crore. Also, you have profit after tax slightly lower than what was expected. Of course, those numbers trickling through as we speak. The stock absolutely flat as we speak, just about slight positive bias coming in, flickering between the red and the green at the moment. Also, let me quickly switch focus to Dabur India. We have Ankush Jain, who is the CFO at Dabur India, who joins us. Of course, Dabur's numbers also, and you can see the spike on the stock price. Ankush, first off, welcome to NDTV Profit. Good having you here. Good afternoon. Just wanted to quickly try and understand and break down. Gross margins gotten roughly 300 basis points better. You're expecting this to sustain through FY25, the kind of flattish kind of tone in the material cost?
Yeah, good afternoon to you and all your viewers. In fact, this year we saw almost 270 basis expansion in gross margin, which was, it was really good, and we have almost reached pre-COVID levels in operating margin. While this year has been deflationary, and we had also stepped in our cost saving and value addition initiatives, next year, I think a bit of inflation will set in, but our sense at this point of time is that H1 probably may remain muted inflation. But from H2, there might be a bit of inflation. Having said that, with the various initiatives which we are taking in the organization, especially identifying inefficiencies, value levers, redefining every value lever in the organization, I think we should be able to protect our margins. We are, I think, quite a bit of confident in that at an annual level. There may be some blips quarter by quarter, but we should be able to protect our gross margins and, in fact, slightly increase through the initiatives we are talking about. Yeah.
Okay, that's good to hear, Ankush. So if there is a chance or a likelihood of an upside surprise on margins for FY25, that could be a little bit of a relief for the street. Let's talk about top line. You've reported mid-single-digit growth on your revenue, and that comes as no surprise because when you did that business update about a month ago, that was the expectation that was laid out. But rural demand seems to be your trigger going ahead as well. You want to break that down for us, tell us what's driving growth, and if FY25 we could see a pickup in rural demand and potentially go back to double-digit growth?
Yeah, in fact, there have been some green shoots, visible green shoots in rural demand. It has been a bit of sluggish, in fact, declining demand in rural over the last 3 years. This is the first quarter in last 3 years where rural has marginally outpaced urban, by almost 100 bips. Over last 3 quarters, it was lagging urban by almost 300 to 400 bips, so which was putting pressure on many FMCG companies, especially us as well. Having said that, with these green shoots, and we are better placed because our distribution is increasing, our reach is increasing, we're adding more villages, so it augurs well for us, especially with, I think, normal monsoon is expected, election season to end soon, the government will continue to its infra, spending and all. So this should augur well for us as an organization, and we are optimistic on that.
Now, Ankush, break this down for us, right? So while you're optimistic and growing revenue is going to be a key objective for Dabur in FY25, will that come at the cost of profitability? So any price cuts, rollbacks? I mean, this is staples that we're talking about. So the universe is fairly price sensitive.
Yeah, in fact, as an organization, we have not resorted to price cuts even in a deflationary environment last year. And we don't think so, because what we sell is mostly, branded, and we hold leadership positions. For example, Chyawanprash, honey, or air fresheners, or even, tooth, oral care, etc. In fact, we command premium, and therefore, probably, there is no need for price cuts. In fact, we will be offering more premium offerings to consumers, especially the affluent, consumers being urban, driven by modern trade and e-com. So price increases will continue wherever possible, but also there will be more focus on, cost optimization, and therefore that should drive margins, and that should release funds for us to redeploy it back for demand generation as well. So I think we are better placed, in coming year.
Sure, Ankush. With regard to cost optimization, I want to try and understand where this will come from. Your ad spends in particular, and I want to try and club these two questions, are up roughly 33% for FY24, 20+% for Q4 alone. Would ad spends be one of those expenses which would materially change, and where would that number be at?
Okay, so first of all, we don't classify ad spend as a cost. It's an investment, it's a demand generation investment. So that our priority is to wherever there are efficiencies in an organization, they are partly flown to the P&L and partly to redeploy, and partly redeployed to generate demand in the form of higher ad spend. Now we had in the past, we in the last year have increased it to almost 8% in India. We intend to increase it, provided there are more, price saving opportunities, or price increase opportunities, and cost saving opportunities. But having said that, opportunities would be more in the value chain. Whether it's packaging cost, whether it's supply chain cost, whether it's people cost, whether it's factory cost. Those cost efficiency programs will take precedence next year, and a lot of efforts have already gone in the past.
Sure. So
and I think we will start yielding results shortly.
Sure. So this kind of a 20% kind of a run rate, 20 to 30% on ad spends set to continue for next year. Is that what one can expect?
I can't say with certainty, because that will also depend, and because it's slightly dynamic. Why? Because sometimes when demand is not there or it's muted, then you resort to more, more point of sale, more consumer promotions on ground, etc. So you have to rebalance between media and between e-com and modern trade, spends. So while overall will grow, but I don't think so in this line. 20% is 25% is relatively high. So it should be slightly ahead of top line.
Last off, Ankush, so what I make of this is it's going to be a twin engine. One is going to be your revenue is going to go up, your OPEX likely getting more efficient, if I can call it. Therefore, margins, where should that trend towards?
Yeah. So before I answer that, first of all, just for clarity, our operating margins today on an adjusted basis is 20.2%, which is pre-COVID, which were almost a peak of 20.4. So it's almost there. Going forward, all upsides in margins, our thumb rule would be, thumb rule, I'm just saying thumb rule, 75% should get back into redeployment into media spend, and 25% of that, any expansion in efficiencies should flow back into the P&L. And that will have to be calibrated quarter on quarter.
Ankush, talk to me about exports, because I think that's a space that's doing well for you. Double-digit growth on the export business. What is the contribution of exports in your top line, and what are you guiding for in terms of export growth for FY25?
Yeah, I think exact guidance, may be difficult at this point of time because it depends on specific orders also. But we have stepped up our capabilities both in terms of operations and people to take, because India is, with Make in India concept of the government, India is becoming a preferred source of supply and also with good quality. So most of the European countries and US countries are looking for exports from India. And we export almost all of our HPC products and even a slight bit of healthcare, but majorly, home and personal care. So it should grow, continue to grow. And it's a combination of not only our branded products, but it's also a bit of, private label for certain big institutions in US especially.
Can you quantify what that could be like internally? What is the growth on exports you're working with for this year?
We are working for almost double-digit growth.
Okay. Also, one quick vertical that's actually done quite well for you is oral care, which that portfolio has grown at 22%. Have you managed to aggressively increase market share in that business?
Yeah, market share has increased, by almost, I think, 10 to 20 bips, if I remember it correctly. So it's increased. And also, very important point in oral care is that we have become now the number 2 player in the country. And an interesting information that the penetration is more than 50%, which means that every second household in the country, and that's a big number, every second household in the country uses one or more of Dabur oral care product. So therefore, that means in future, when they learn Dabur product oral care, it's going to be better for us, and the growth trajectory should continue.
Sure, Ankush, 3.3% higher on Dabur. So clearly that positive reaction coming in. But last quick question with regard to value versus volume and how pricing is evolving, maybe a couple of those points if you can help us with regard to FY25. You believe stable pricing, and what would the value versus volume kind of numbers look like in your view?
Yeah. See, very difficult to exactly dissect and give guidance, but I think next year it will be mostly volume-led, and so it will be more skewed towards volume than value, than pricing. So if I were to want, give broad, very, very broad guidance, it should be 2/3 volume and 1/3, value, or slightly even more towards volume for next year.
Excellent. Thank you so much, Ankush, and wishing you as well as everyone at Dabur all the very best for FY25. Thank you for this.
Thank you so much.
Right. Time to slip into a very short break. More on the other side. We'll bring you top buy-sell ideas as well as picks and everything in the derivatives market, all of the updates. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, Kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching India Market Close here on NDTV Profit. I want to quickly take it across to Agam, who's standing by with a breakdown of the FNO cues for the day. Agam, we're probably just about 20 minutes from close. What's the FNO data indicating?
Well, a quiet expiry, Harsh, something that we were not expecting, but that's how things are panning out. Of course, the other positive is that the index continues to advance, continues to move up, even though it's up marginally. We're once again above the mark of 22,600, and there has been an increase in open interest in the Nifty futures towards what looks like longs at the moment. The Bank Nifty futures will also be in focus, considering that has also seen a decline by around 0.3%. So it is essentially the Bank Nifty. A lot of that is on account of the weakness in Kotak Mahindra Bank, but the open interest has also declined, so long unwinding coming through in the Bank Nifty. Moving on to your options market, of course, today was the weekly options expiry for the Nifty, and we were keeping an eye on 22,600 and 22,700, and that's exactly where we are expecting the Nifty to expire in today's day of trade. Moving on to how things are panning out when it comes to stocks. We do have REC, which continues to climb up 9% now at the moment. India Mart is the other one, which is also looking at longs based on, earnings coming through. Godrej Properties, Hindalco and Pidilite, among others, which are seeing shorts. And of course, about a short covering for Canfin Homes, RBL Bank, L&T Technologies, Ambuja Cement, as well as Berger Paints. So a lot of these counters continue to be in focus. All in all, a good day of trade as far as the Nifty is concerned.
Okay, thank you so much for that, Agam. Let me also quickly introduce Jay Bala from Cash the Chaos. He's joining us as our technical guest for the afternoon. Good afternoon, Jay. Jay, let me come straight to you. India Mart, that one is up roughly 8%. With all the financials in focus, that one seems to be slightly more ignored. Talk to us about what that's looking like on charts.
Yeah, it's trying to find a base around 2,500, and it's developing an interesting pattern out there. The fact that it's trying to close about 2,700, it's a positive for it. There's a small inverse head and shoulder breakout for it. So if the stock can maintain about 2,500, I think the potential for the stock is about 3,100 to 3,200. So yeah, positive setup there.
Okay. Sunny, any views with regard to something like an India Mart, the way it's looking extremely strong after everything that's come out?
I think a very robust set of numbers reported by India Mart, and so what we have seen is that for FY24, EBITDA is up by 28%, net profit up by 24%, and for Q4 also, net profit is up by close to 80% and have reported a very strong set of number, 100 crore number. Cash flow from operating activities has been pretty robust, up 25% to 60 crore, and To that extent, Street is rewarding the company in terms of stock price. We continue to remain bullish on India Mart.
Right. Sunny, outside of auto, you also have something like a power grid doing very well. All of the power stocks, in fact, PSU stocks are doing fairly well in trade today as well. Do you see some amount of value still left in these? Something like a power grid, something like even an HPC and BPC are doing very, very well.
Again, what I feel is that the way India's power demand is shaping up, I think the power sector is well in place for a structural run for at least next 3 to 5 years. And to that extent, they are also supported by the very robust set of numbers. Coming particular to the REC, I think reaction by followed by a pretty strong set of numbers. HPBP IOC, I think again because the crude prices have corrected, and to that extent we are seeing a correction over there. In terms of power transmission, companies like Power Grid, yeah, definitely I think although we have seen one leg of regretting in those kind of companies, but what I feel is that the way power infrastructure is setting up in India, whether it is on generation side, distribution side, transmission side. I think the transmission sector is also in a sweet spot, but I would like to ride that sector through transformer rather than transmission. So companies like CG Power, Voltime Transformer, these are the few companies where we have seen a robust set of numbers also, and since they are the one of the leading transformer manufacturers, they will continue to report a healthy set of number over the period of medium to long.
Sure, thanks for that, Sunny. Let me switch across to Jay. Jay, just with regard to, I want to talk about one sector in particular, the Nifty Realty. Just if you can pull up the intraday chart for that, you'll see what I'm talking about. The Nifty Realty took a nosedive all the way till noon today, and the recovery after that has been phenomenal. What do you make of this? What does this signify? What does this mean?
Yeah, such volatilities tend to come around markets, when they're trying to change their trend. And Nifty Realty Index has got a huge resistance around the 1,000 mark. And if you see the daily time frame, the charts of Nifty Realty Index, we see closest at end somewhere near where the market started. That's another signal the markets are stalling. So once the index were to come very close to 1,000, I think it will complete a positive structure. There's a possibility it even completed something yesterday. So if the nearest support, that's about 915, if that were the index were to close below 915, that will signal the end of the move that started from 2022. I've been bullish on this since the middle of last year, but now this is getting a little bit long in the tooth. So watch out for resistance at 1,000 and watch for a close below 915 for a medium-term investor to signal that you should be taking profits.
Sure. Jay, before I move on to the auto sector, which is the top gaining sector today, I want to quickly take your views with regard to a Kotak Mahindra Bank and a Federal Bank. Tale of two different banks going two different ways, but one person in common. So talk to us about what do you make of both of these on charts?
Yeah, if you recall our conversation from the 4th of April, I had given a shot on Kotak Mahindra Bank, and I said it's heading towards 1,000 over the next several months, not in one shot. And the intermediate stopping point for me was 1630, and the stock actually stopped at 1620, and it bounced back and going to the next level of 1430. So there's a huge double top pattern that's playing out for Kotak Mahindra Bank. That's the reason why it's heading for 1,000 over the next several months. So the bounces are likely to get sold, and this is just the probably beginning portion to middle portion of the move. When it comes to Federal Bank, it looks good in the very short term, but from a medium to slightly higher, longer time frame, I think it needs a little bit of rest. So while it can stretch somewhere close to 175 to 180. I think that will probably exhaust the momentum that's been driving the stock from the recent low of about, say, about 120. So the stock needs a medium-term correction, consolidate, and then resume its long-term move.
Okay, some bit of caution with regard to Federal Bank and Kotak Mahindra Bank. But let me switch over. Auto sector buzzing in trade. Nifty Auto up over 1%, comes after companies reported their April numbers. Puneet joins us with a look into the April auto sales numbers and what the key takeaways are. Puneet.
Hi, thanks for that. So post-March, generally we see a very quieter April this time. But the thing is, we've seen a lot of pockets within these segments doing pretty well. And the key commonality between all of them is the rural theme. So let's start with the two-wheelers. They've shown really stellar growth led by Hero MotoCorp, up 35% compared to the previous year. It has blown past analysts' expectation of roughly 20 to 22% growth that they had anticipated. Now, the company has said that the 125cc Extreme has been doing well, while they've also started deliveries of the Harley in the 400cc, which has also been gaining traction. Going forward, we see that TVS Motors taking a stellar performance from the previous year into the financial year of 25 as well, showing roughly 25% growth, much above analyst expectation of 17%, while Bajaj Auto has shown growth in domestic as well as its export market, which was down 10% for the whole financial year last year. So do note for Bajaj Auto also, they are looking to launch the Bajaj 400 in this weekend itself. So a lot of updates on that as well. And finally, Eicher Motors finally crossing the 80,000 sales mark per month, coming at a 12% growth compared to the previous year, also blowing past analyst expectations. If you look at the CV market as well, the CV business has also done well for most companies, but Tata Motors has been the stellar performer here. The expectation was roughly 2 to 3% flat growth. The company has shown 31% growth. And if you look at a little more deeper into the numbers, the passenger carrier as well as the ILCV, which is the interstate transmission transport modes as well as vehicles, those have gained 100% from the previous year, showing stellar growth. Finally, the divergent trend here, Ashok Leyland showing 10% growth, which generally does. The bus market has grown 100%, but VECV has been surprisingly degrown by 18%. So we'll watch out for more commentary in the earnings call for Eicher. And finally, clocking it with the PV volumes, Mahindra is the key winner here, showing 18% growth. The Bolero does very well in the rural as well as the suburban markets, and they've also launched the 3XO, which is in the compact SUV space. So really strong set of numbers for some players. Some have missed expectations, but a strong momentum going forward as well. Back to you.
Okay, thanks for that, Puneet. Pretty comprehensive. Let me toss it across to Sunny. Sunny, with regard to the numbers itself, what were the key takeaways for you from these April numbers?
I think the key takeaway was, first of all, we have seen a decent recovery as far as commercial vehicle space is concerned. So that was one area which it was expecting that ahead of election, we may see a kind of muted sales volume. Although looking at April sales number, it seems that even commercial vehicle sector is bottoming out. And to that extent, we are seeing today a reaction in Ashok Leyland also. So I think commercial vehicle is one space to be in. And second important sector to note is two-wheeler. So we have seen a very robust set of number in two-wheeler segment, both on domestic as well as export side. So that was a key thing. Passenger vehicle, we everyone knows that FY24 ended on a very high note, close to 3.9 million vehicles. And on the top of that, the industry is likely to grow 5% in terms of volume for FY25. However, certain players like Mahindra and Mahindra are likely to outpace the industry growth. And especially with an SUV portfolio under its fold, I think even on margin front, we will see a margin improvement as far as Mahindra is concerned. So I think Mahindra and Mahindra is a clear winner on passenger vehicle side. Even on tractor side, although the volumes continue to remain muted, but with an expectation of robust monsoon, a normal monsoon in beginning June, I think tractor companies are also looking good. So companies like Escort and Mahindra again, both the companies look good from a tractor segment.
Sure. Jay, just with regard to M&M, and I want to take a cue from what Sunny said, 6.5% higher over the last 5 trading sessions. It's indeed doing extremely well from an investor standpoint. What should one do? What are charts indicating?
Yeah, Mahindra & Mahindra is looking a bit tired, and it's it's something that you need to trail your stop loss at somewhere close to below 2,000 mark. If you want to look at new auto names, you might want to look at something like Munjal Auto or Munjal Showa. They have not yet moved, and so likely to play catch up, just like how Ashok Leyland is doing. But at the moment, I don't have a buy signal on neither of these names I've mentioned, Munjal Auto or Munjal Showa. But I anticipate something to come, but so be prepared for it. And the move in Escorts Kubota, it's extremely powerful. Despite the sharp rise, it's still got considerable amount of movement left.
Sure, Jay. Also, 5 minutes from close, BTST, any ideas?
Yeah, I like Schaeffler India. It's more like a more a positional trade than a BTST. With a stop at about 3150, I'm expecting this stock to about scale somewhere close to 5,000. And the fact that it's trying to close about 3,600 and change, that is going to be the highest close for the stock in several weeks now. So that's having a closing breakout. So it's likely to see a follow through. And I also like Dr. Reddy. It's a slightly defensive name. Dr. Reddy with a stop loss about 5080 for a price objective of 6,800. And you can even play this as a BTST with the stop at about 6150 for objective about 6,400.
Okay, quickly switching focus to earnings. We had plenty of earnings candidates. You also have something like a Coal India. Let's pull up that stock. What is it doing? I think around 0.25% lower for Coal India as we speak. But yeah, that's where we're at. A bit of a gash there that we see in the last few minutes, but numbers expected nonetheless. So keep your eye out on Coal India, and you also had something like a Federal Bank come out with its numbers, decentish set, stock up 3%, likely on numbers, plus of course some amount of reports, including our own sources, suggesting that this possibility of KVS Manyan going to Federal Bank. Sunny, very quickly, just on fundamentals on both of these counters with regard to Federal Bank and Coal India, your views, and between these two, something that you would pick?
Again, so Federal Bank has come out with a very robust set of numbers. So I think close to 150 crore was one of expense in the Federal Bank number. If you net that off, I think a very decent set of number. And even management has guided that for FY25, the credit growth is likely to be in the band of 18 to 20%. NIM may expand, especially in the second half of fiscal year 25. So I think we continue to remain bullish on Federal Bank, trading at a reasonable valuation. And at the same time, Coal India, although numbers are due today, what I feel even Coal India is trading at a very reasonable valuation, 8 to 9 times price to multiple. We have seen a decent uptick in the volume as far as Coal India is concerned. And at the same time, the dividend yield continue to remain very high as far as Coal India is concerned. So somebody with a value buyer can look at a Coal India, and a growth buyer can definitely look at Federal Bank.
Okay, thank you so much for that. Both Sunny as well as Jay, thanks for all of your views over the last half an hour to 1 hour. It's good having you guys here. Thank you. But we're in the last minute and a half of India market close, and let's quickly look at where the indices are settling. Can we pull up the Nifty Bank as well to try and figure 1/3% lower on the Nifty Bank? Let's pull up the heat map. Auto obviously leading the pack today. Clear leaders. You have something like a Bajaj Auto up 2%. You have Tata Motors up as well. But outside of that, let's look at some PSUs. BPCL 4%, Power Grid 3.5+%. You have SBI Life up nearly 2% plus, NTPC up 1.5%. So there's plenty of action in those stocks as well. Adani Twins, both Adani Enterprises and Ports, at least Ports up 1% or thereabouts. Adani Enterprises somewhere near the flat line. But those two came out with numbers. What's languishing? well, you have a couple of financials, Kotak, HDFC, Axis. I see those three, and ICICI, those four. Titan also in focus on the back of possible numbers, but also not doing great, around 0.5% or thereabouts lower in trade. That's where we are at as we start to wind down. Let's quickly pull up the broader markets and where they are at. We've closed for the day. The Nifty mid cap up just about 0.5%, so the broader markets continue to outperform. The Nifty small cap largely in line, and if we can pull up the advanced decline, indicative of course, how the breadth of the market is, you'll see a bit of a reversal happening there, and pretty much 1:1 is where we've closed off at today. Let's pull up the sectoral heat map indices. The Nifty PSC, the Nifty Metal, the Nifty Auto, those are the three leaders, and that's the trend we saw even on the Nifty 50. We discussed that, 2% higher on the Nifty PSU, which is strong nonetheless. Top laggard, the Nifty Media. The Nifty Realty Index has made a tremendous comeback. It was down 1.5% midway through the day, closing at the flat line. That's impressive. And the Nifty Energy also up 1% or thereabouts. So you had a good bunch of sectors performing fairly well. If we can pull up the BSE 500 top gainers, losers, just try and discuss a few names. Raymond, REC, REC on the back of numbers, of course. Chola also up 9% on the back of numbers. So we've seen a plethora of very good numbers, aiding the stock prices. The kind of growth Chola showed, nearly 40% on an AUM, not bad at all. You're looking at Supreme Industries on the losing side, Godrej Industries and Aegis Logistics also down anything between 5 to 7%. Teamly is also down roughly 4%, and Patanjali down around 3+%. But that's all that we have for you today on this Thursday. It's a truncated week. Tomorrow's the last day of trade for the week. But with that, from Samina, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome, you're watching NDTV Profit. I'm Harsh Saita. With me is Mahima Vachrajani, and we're going to talk to you to two very interesting managements today. First off, we have SIS Limited on the back of its numbers. Diverse managements we'll speak with. One is SIS Limited, of course, into a plethora of businesses, from security all the way to facility management. We have Mr. Dheeraj Singh, CEO, joining us. Welcome, sir, to NDTV Profit. Dheeraj, talk to us about first off the securities business and margins, because margins have fallen a bit short of what you had guided for.
In security business, if you look at the FY23 to the FY24 numbers, the security business has actually grown by 1.1% in margin. Overall, the EBITDA growth has been 19%, which has been one of the highest growth in many recent years. So we are focusing on the margin as a top priority. We've got that going in the security India business. Even the international business, security has grown in the EBITDA margin, both on a quarter-on-quarter basis as well as on year-on-year basis by 0.3%. Facility management business has not improved on the EBITDA margin side, but we've cleaned out a lot of the contracts, which gives us a good platform for the coming year to work on the margin, and we are very confident of seeing an improvement there.
Understood. Mr. Singh, Mahima joining this side. I want to understand that, your market share, as you said in your previous quarter's con call, is around 5%, but you aim to grow it at 10 to 15%. So, what will be the growth triggers that will take you to, that 15% mark, and how quickly do you think will you go there?
So, any market leader in a developed country has 15 to 20% market share. Our own Australian business in security is about 20% market share. So in India, the drivers that will help us, one is obviously the phenomenal GDP growth that we are expecting, which will have a multiplier effect on a business like ours. Apart from that, we all expect the minimum wages level to increase. It's lagging behind for many years. So we are talking about the living wages also. That will again help our business because we have a cost plus percentage model. We are getting into many new sectors, so we are gaining market share from other competitors. As there is more focus on compliant services, compliant standards that are going to be required from the clients, that will make a shift towards the larger company like ours. So all of this together will help the business continue to gain more market share.
Understood. And with regard to the cash business, any headwinds that you are seeing in terms of the sustainability of the cash business over a longer period of time? That's my first question. Second, how quickly do we list?
So first question, let me share with you that pre-demonetization and as of now, the cash in circulation has grown 3 times. So it's a 3x growth for the cash in circulation pre-demon and now. At the same time, yes, the digital payments have also grown 800%. Summary is both cash is here to stay and grow together with the digital payments. Regarding the delisting part, we have announced that we are considering the delisting and very soon. And we hope that within a year or so, we'll be able to deliver that.
Understood, sir. So with regard to the cash business itself, I understand you've highlighted that the opportunity seems large. Would you therefore, there are some pockets of the market which are tending to lean on the assumption that it's a business which may not survive into the next decade. Do you believe that that is untrue?
Absolutely. As I mentioned, the cash in circulation has grown up 3 times together with the digital payments increase. So the cash part is definitely going to stay. We've seen the similar trends in developed markets too. Having said that, we are also pivoting our business to working directly with the banks on more outsourcing solutions of the banking industry. And that part of our business is growing rapidly. We're doubling that part of our business every year. Last year, it was about 3.5%. Now it is about 7%. So we will continue to focus on that part of more banking outsourcing solution services.
Understood. Mr. Singh, I'd like to shift focus to your debt. Your debt has been reducing. So I just want to, I want you to give a color on, how the debt will pan out to be by the end of FY25. Do you see it reducing, going up? How is it shaping up?
So below level of 2 for the net debt to EBITDA ratio, it is a comfortable level for our industry. As of now, we've reduced it from about 1.72 to about 1.5, and which is pretty healthy. Now, if you do an acquisition in the near term, it might see a little bump. But what we are very happy to share is that our collections has been one of the highest in the last quarter, which gave us an OCF to EBITDA ratio of almost 68%, which is an all-time high. So we continue to focus on our cash collections, and as and when any acquisition opportunities come, we will consider altering our debt structure.
And Mr. Singh, going forward, I want to understand that, what kind of revenue growth are you expecting, one thing, and will it be through wage growth or volumes, one thing, and, what will be the revenue mix like going forward?
So if you look at the past 28 quarters, we've been growing at more than 15% CAGR. And for the coming year, we should be in that same range. Apart from that, we are looking at inorganic mergers opportunities, which can add it further to it. Security business and the facility management business in India, both will obviously continue to grow at a higher rate than the international business, where we will focus more on improving the margin profile.
Good. Quickly, Mr. Singh, last piece, with regard to acquisitions, internally funded?
For some of the acquisitions, which might be smaller, we can do internal funding. For others, we will consider external funding.
Good. Okay. Thank you so much, Mr. Singh. We're short on time, but we will call you maybe in a month or so from now to break this down a little bit better. Thank you so much for your time and the perspective on Q4 numbers.
Thank you.
Well, we'll slip into a very, very short break. On the other side, we have the management of 5-Star Business Finance joining us to talk to us about the company's fourth quarter earnings. This one is trading at a price to book of 4.5 times, trailing 12 months, of course. Stay tuned. Expensive business.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy, when to sell? How do you stay ahead of all the finance?
Welcome back. You're watching the Small and Mid Cap Show, and 5-star business finance is in focus on the back of Q4 earnings. And to break down the numbers for us, we have with us Mr. Rangarajan Krishnan, CEO of 5-star Business Finance, who joins us now. Welcome to NDTV Profit, sir.
Hi, good morning. Thank you for having me on the show.
Yeah. My first question to you is, the significant AUM growth that you've witnessed, where is it exactly coming from? Is it geographical expansion, or, what is actually aiding the growth? And, going forward in 3 years, do you plan to double this?
So the growth typically comes from 3 factors for us. I think one is, of course, the geographical expansion and the number of branches that we're able to put up in a new year. Last year has been a very significant expansion for us. We actually ended up opening 147 new branches. A part of these branches are what we call as split branches, wherein we transfer a set of existing accounts from an older branch to a newer branch. This helps us in better business and collections and managing the risks in a far better manner. The second aspect of the growth comes from the number of people that we're able to put in a branch. So last year, through this branch additions and a little bit additions to the headcount in the existing branches, we added roughly about 900 officers across these branches. So that adds to the throughput of what we are able to get out from each of these branches. And of course, the third is also, in terms of any increases in the ticket sizes that we're able to get. So last year we saw, the ticket size on an average increase for us from about 3 lakhs to 3.5 lakhs. This used to be the ticket size that we enjoyed pre-COVID levels. During COVID, we were consciously conservative and we got down the ticket sizes by tightening our credit norms. So last year, even that came back on track given the increasing incomes that we were able to witness at the ground level. So a combination of these 3, gave us an extremely good growth last year. We ended up clocking a growth of about 39% in the previous year.
Understood. So, Mr. Krishna and Harsh also joining in, want to try and understand, are you going to double loan book in 2 years? Would this kind of trajectory continue, this 40% kind of growth?
No, I think we will be comfortable at 30% plus kind of a growth rate. One is what you are capable of, but of course, second is also what you should be growing, given the considerations of where the economy is, where the players are, what does the regulator want, and what is the risk environment. I think considering all this, we are fairly comfortable in growing and clocking a growth rate of about 30% plus. So instead of doubling the book in about 2 years, we are confident that we will certainly double the book in about 3 years.
I want to try and understand that is this a conscious calibration is what you're talking about, or is this a higher base which is slowing you down?
No, I think the segment that we are serving, we have sort of addressed this multiple times in the past. This is a very, very niche segment amongst most of the sub-segments within financial services. This segment probably enjoys the least amount of competition. This has the highest entry barriers. This is the toughest to operate, in terms of operational intensity of the business that you have to do. And we being a very significant player in this segment and having an experience of over 2 decades, I don't think there is a dearth in the opportunity per se. So it's more about calibrating and, making sure that you're doing the right moves and building the company for the long term rather than clocking an immediate sort of expansion in your, growth rates.
Understood. Mr. Krishnan, I really want to understand that, why aren't others entering into this then?
No, I think, firstly, you have to understand who are we serving. We have 3 categories of segments that we serve. The first and the largest category are people who do extremely small businesses. You see them, in every small towns and every city in India. So these are people who are single shop owners. They can offer any kind of a product or a service through the single shop outlet. We have almost 60% of our customers coming in from this segment. So these are people who don't have a big credit track record, who don't have an operating bank account, while they do have an account. But it's very difficult for you to get comfort looking at their bank transactions in the past. So it's very difficult to evaluate their incomes. The second segment that we serve is self-employed individuals. Again, this is a very, very large segment in India. So this includes your plumbers, painters, masons, carpenters, drivers, maids, a whole host of these people. Everybody is credit hungry. Everybody has a lot of credit needs. But again, they cannot go to formal institutions for the reasons that I just explained. The third segment that we also cater to is typically people who get their salaries in cash. And that's a very large segment in India. We still have a lot of casual laborers, people who are employed in shops, people who earn their wages. They get paid in cash. So, it's very difficult for them to again go to formal financial institution and establish their income streams. Now, given the difficulty around establishing income streams and given the difficulty around establishing previous track records, mostly this segment of people go and end up borrowing from money lenders or the informal segments. And that is the segment that we are trying to disrupt. So for somebody to be successful in this segment, you have to understand these segments very, very deeply in terms of firstly, how do you assess their cash flows? And secondly, how are you going to collect the monies back on time? And thirdly, how are you going to keep the operational costs in check? I think a combination of these three is very difficult. I wouldn't say it's impossible. This is a segment which is attracting a lot of attention. But I think, competition will pick up over a period of time. For players like us who have been exclusively focused on this segment, we probably enjoy an edge.
Understood. Okay. And as you're suggesting that competition is starting to pick up, is it?
Like in any other segment, this is a fairly attractive segment. I think people get attracted to the yields. People get attracted to the large size of the opportunity which is there. And, they are trying to carve their own niches within this segment. It's a good thing in some sense. Because, I think all of us are trying to eat the market share of informal money lenders rather than stepping on each other's shoes at this point of time.
Understood. And therefore, you should be able to sustain on your margins and yields?
Yes, I think to a large extent, we will be able to sustain on margins and yields, except to the point that we have always been guiding the market that today we are enjoying a little bit higher spreads than usual. Because if you were to track us over the last 2 years, we have enjoyed the benefits of lower cost of borrowing, but we haven't really passed on this benefit to the customer segment still, because we have been waiting and watching the interest rate scenario that is panning out in the country. So it's a question of time. I think when we get the clarity about how the scenario is going to play out, we will be passing on some benefits in terms of our lower cost of lending to the borrowers. So we always say that the steady state spreads that we would like to enjoy is about 12%.
Understood. So where would therefore, in your view, yields lie? Would you calibrate it according to your cost of borrowing as it continues to come down? So first off, how much should cost of borrowing come down from here? It's come down substantially. What's the scope like, maybe in the next year or two? And I think where would yields therefore lie?
Today, the cost of borrowing for us is about 9.7%. We have enjoyed significant benefit over the last about 2 years. But assuming that it stays around 10% for now, unless we are able to break and get into the next level of credit rating, or we are able to get a larger balance sheet, which will take some point of time. So let me not assume very significant benefits in cost of funding. But if we are assuming that our cost of funding is around 10%, we would like to enjoy a spread of about 12%. So our comfortable lending rates will be in the range of 22%. Today, it's about 24%. So, we will definitely be able to pass on some benefits to the borrower over a period of time. I don't think it will be immediate, but over the next about 2 to 3 years, we'll be able to gradually pass on these benefits to the borrowers.
Understood. Mr. Krishnan, I also want to understand that, your branches have grown significantly, but your OPEX has remained in the same range. So how are you managing that one thing, and going forward, OPEX will remain in the same range?
Yeah, I think thank you for asking this question. It gives me an opportunity to clarify this. Usually, we don't end up opening close to 150 branches in a particular year. Our steady state ability to open new branches is in the range of about 70 to 80. And this is what we have been guiding this market. But last year, we consciously took a slightly different strategy. We wanted to break down the larger branches and make it into smaller branches. We wanted to be operating in a denser network of branches rather than operating in very significantly large size branches. Because that helps us manage business better, that helps us manage collections better, It helps us manage attrition better, and much more important, it helps us bring down the overall risk in the business. Imagine handling about, let's say, 2,000 customers in a single branch, as opposed to handling about 1,000 customers in 2 branches. This is a very widely different operational risk that you are dealing with. So last year, about of the 150 branches that we ended up opening, roughly about the same 70 branches are freshly new branches, and the balance set of branches are split branches, which means one branch got broken down into 2. When a single branch gets broken down into 2, your OPEX doesn't go up because you are redistributing your existing people, you are redistributing your existing resources from a single branch to 2 branches, and that has helped us maintain the OPEX cost at a very reasonable level.
Understood. And you expect to operate in that 33 to maybe 40% kind of OPEX band? OPEX to income?
Our cost to income is about 35%, and that's one of the best cost to income that you will see across the segment. And we are very comfortable operating in the same vicinity.
Understood. And with regard to ROAs, you've got best in class ROAs, 8.5%, just below 8.5%. You expect that to sustain because it seems that the way in which factors are lining up, margins, OPEX, credit costs, we haven't spoken much about, but credit costs nonetheless, and therefore ROAs should hang around that 8.5 kind of mark?
Harsh, except for the fact that when leverage increases, ROAs will drop. Everything else what you have said is perfect. So our ROAs will drop because today our leverage is hardly about 2.25%. So, and our capital adequacy ratio is close to 50% when the regulatory requirement is 15%. We have been very clear that, the business is going to be funded purely out of internal accruals and existing capital for the next about foreseeable future of at least 4 to 5 years, which means we don't need to rely on external capital. But when you are growing at this base and you don't have the need for external capital, which means the capital adequacy will keep dropping and your leverage will keep increasing. Consequently, your ROAs will drop. So 8.5% is not what we are expecting in the steady state. Our steady state ROAs will be more comfortable in the range of about 6.5%. But I think the point to note is you will see an uptick in the ROEs, which you have been able to demonstrate even this financial year, where the ROAs have picked up from about 15% to 17% plus or close to 18%. And you will see that in the next 2 to 3 years, as leverage further picks up, we'll be able to deliver a 20% plus kind of an ROE.
Understood. And how many touch points would you get to? Maybe say 3 years from now, would you double touch points?
Yeah, I think doubling touch points in the next 3 years, combination of new locations plus split branches is very much in the cards. We should be able to do it.
Okay, Mr. Krishnan, with that, we're completely out of time. Thank you so much for breaking that down for us in such an elaborate manner. It's all we have on the show for now. Stay tuned for more news and updates on NDTV Profit.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Benchmarks end marginally higher with Nifty Auto and Metal gaining 1% each. Broader markets outperform. Federal Bank reports flat growth in profit on higher operating expenses. CEO Shyam Srinivasan says the board has set up a panel to appoint the next MD and CEO, and the list of candidates contains 2 internal names. Adani Ports profit grows by 77% in the fourth quarter. Revenue rises 19%. Company guides for revenue of up to 31,000 crore rupees for FY25. From agricultural land to SBI PPF, Smriti Irani believes in having a prudent mix of traditional and contemporary investments. A deep dive into her portfolio coming up ahead on the show. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host Pallavi Nahata, and as always, the show aims to bring to you market headlines along with national and international news. But before we move on with the show, it's time to see how the markets have fared today. I'm joined by my colleague Harsh Saita for a quick market wrap to share with us all of the D-Street action. Harsh?
Well, markets on the benchmark at least closed marginally higher, around 1/5% or thereabouts on the Nifty 50. As you can see, the Nifty Bank though closed slightly lower, around 1/3% lower on the Nifty Bank. Key drag, of course, being Kotak Mahindra Bank. That was the one in focus. But you also saw ICICI Bank down nearly 1% as well. So ICICI and Axis, all of which were drags. Let's pull up the heat map and we'll see a lot of that action coming through. Let's look at the bottom tier of that. Kotak, you also had an ICICI, and you'll also find an Axis there, 1% lower on Axis as well. But in terms of what did well in trade, let's talk about the PSU pack first off. Look at BPCL, Power Grid, NTPC, all of which are first row contenders on that heat map, clearly doing extremely well, 4%, and 1.5% on NTPC as well. And HDFC Bank was one which silently did well today, 1% plus higher, and an SBI also doing fairly well in the banking pack. But despite that, the Nifty Bank closed lower, and that's what I wanted to kind of mark off. Quickly onto the advanced decline. Let's pull that chart up, and what we'll see is while we started off decently well, we've closed pretty much even Steven. So we have a 1:1 advanced decline, and let's pull up the mid cap and the small cap. The mid cap index did well, decently well, in fact better than the benchmark, nearly 0.5% higher on the mid cap, but the small cap index largely flat, just a slight positive bias on close, around 0.1% higher on the Nifty small cap. So that's probably where a little bit of the pain is. Let's quickly pull up the sectoral heat map as well. What did well? PSE, no surprise. Metal, auto was of course in focus because of the April numbers, and 1% plus on auto. You had something like a Bajaj Auto do 2% plus in trade today. What didn't do well was the Nifty Media, 1.5% down. The Realty Index made a sharp U-turn midway through the day, recovering 1.5% from the low. BSE 500, if we can, top gainers, losers. You'll see a lot of action coming from companies which have declared Q4 numbers. And a lot of this was dominated by those Q4 numbers. But that's all for now. Back to you.
Federal Bank's reported Q4 results below analyst estimates. The bank recorded flat growth in net profit at 906 crore rupees. Talking about the bank's succession plan, the CEO Shyam Srinivasan said that the board has appointed a panel to finalize the prospective names. Listen in.
The board has set up a very effective search panel. They are doing their job. The board has a long list of people to choose from in the market, including our two senior internal candidates, and that process is underway. When the process is complete, the letter will go to RBI. When the letter from the regulator comes in, we will make sure that we flash it on the exchange and share it with everybody after the board approves.
Nifty Auto gained more than 1% as companies reported above estimate sales for April. Two-wheelers have led the pack while cars have witnessed muted growth. Let's go across to my colleague Puneet Jhaveri for more on this. Puneet, what worked for the companies and what did not? Tell us.
After a blistering month of March, generally April is supposed to be a subdued month for automakers, but this time the trend is a little different. We've seen strong rural growth across segments of two-wheelers as well as CV makers. While some companies have outlasted growth, let's deep dive into which ones were they. Hero MotoCorp has shown a 35% growth compared to the previous year. The company has said that the 125cc Extreme has done really well, while the 400cc Harley has incrementally increased the volumes. When you look at TVS Motors, the company has shown growth of roughly 25%, higher versus the analyst expectation of roughly 17%. While for Bajaj Auto, the company has grown 17% compared to the previous year for this month, which is higher, and exports have been a key contributor in this. While for Eicher, it's currently at roughly 12%. It is higher and has crossed the 80,000 mark for the first time per month. While we look at the CV players, there are some divergent trends. For Tata Motors, the CVs has grown 31% compared to a flat growth estimated by analysts. The passenger vehicle, the passenger carrier, as well as the ICLV has grown 100% compared to the previous year, while VECV has shown a degrowth, which is a surprising trend, and commentary by the management on this will be key. When we look at the passenger vehicle makers, Mahindra has been a key outperformer, growing 18% from the previous year, while Maruti as well as Tata Motors has shown subdued growth. Do note for Mahindra, the 3XO has been a new launch, while for Maruti, the Swift is expected to start bookings from the 1st of May, while the launch is eventual on the 9th of May.
And staying with the earnings, Adani Ports' fourth quarter consolidated net profit rose by 77% to 2,014 crore rupees. Revenue rose by almost 19%. The company expects to achieve 500 MMT of cargo volumes in 2025. The company has offered a revenue guidance of up to 31,000 crore rupees for FY25. Let's listen into what Ashwini Gupta, the CEO at Adani Ports, has to say.
Looking at the current financial year, that is FY25, with an increase in our customer base, increase of our revenue streams like trucking and operational excellence, we expect cargo volume in the range of 460 to 480 million metric ton. Revenue within 29,000 to 31,000 crore and EBITDA in the range of 17,000 to 18,000 crore.
The Godrej family unveiled a new shareholding structure within the sprawling group. This focuses on restructuring their land bank holdings as well. My colleague Mahima Vajrajani joins us with more information about the split. Mahima, who will own what post this restructuring? Tell us.
The Godrej family split is in focus, and the company has revealed its structure of shareholding going forward. Just to take a look on how the bifurcation will be, Godrej Industries, that is all the listed companies, will be on one side, and Godrej and Boyce will be on the other. In terms of the listed entities, the 5 listed entities, Adi and Nadir will be heading these 5 listed collectively at a value of 2.4 lakh crores. That is Godrej Industries, Consumer Products, Godrej Consumer Products and Godrej Properties. It will also include Godrej Agrovet and Aztec Life Sciences Limited. But in terms of the Godrej and Boyce, the Godrej and Boyce manufacturing and affiliate will be headed by cousins Jamshed and Smita, and they will receive units, for this entire Godrej and Boyce manufacturing affiliates. This is basically the company which has been known for its locks as far as the company has been since the inception itself. In terms of Jamshed and Smita, they'll retain land parcels over 3,400 acres in Vikhroli. This is a huge land parcel which will go to Godrej and Boyce only, and not to Godrej Properties so far. And the privately held Godrej and Boyce reported a revenue of around 14,796 crores as of March 23. But moving on, Nairika Holkar and Piroj Shah Godrej have risen as key next generation leads for the Godrej family. Now, in terms of if we talk about the land parcels overall, the 3,400 land parcel acre, in terms of, we'll talk about that later, but let's focus on both groups which will continue to utilize the Godrej brand, and there will be no royalties that will be paid for using the brand name of Godrej. So both Godrej listed entities and Godrej and Boyce will be able to use the Godrej name altogether. Adi Godrej Group announced an open offer to acquire shares held by public of Aztec Life Sciences. Of course, the minority shareholders will be taken care of considering the Godrej name that it carries. But moving on to the land parcels, as we talked about, the restructuring of land parcels will be in such a way that Godrej and Boyce, both Godrej and Boyce and Godrej Properties will be having the marketing rights for the lands. However, the development rights will stand only in the hands of Godrej and Boyce. So basically, if Godrej there's no kind of exclusivity now in place for Godrej Properties and Godrej Boyce. Godrej Boyce is free to sell the land parcel to whosoever they want to. And if Godrej Properties wants to use the land, they will have to enter an agreement before using the land for development. But Godrej and Boyce to continue their MOU executed from time to time, MOU for the development of the farmers' land in Vikhroli, as we discussed. And lastly, the proposed development to take place when Godrej and Boyce is desirous of developing the land, as we discussed. And lastly, in terms of the Godrej family, this is the family tree which starts with the founder, the co-founder, and in terms of the co-founder's children. And moving on, if we see their children going forward, Adi and Nadir, who will be taking over the Godrej Industries, and Jamshed and Smita, who will be taking over the Godrej and Boyce. But with that, this is the overall update on the family split of Godrej. Back to you.
Thank you, Mahima, for that roundup. Now, amid the money crunch, Byju's has implemented a policy linking the salaries of its sales staff to weekly revenues. The policy became effective from the 24th of April and is likely to continue till the 21st of May. My colleague Rishabh Bhatnagar joins us with the details. Rishabh?
That's right, Pallavi. We have access to an internal document that was circulated at Byju's. This was targeted directly at the sales staff and this includes all sorts of sales staff. This is within Byju's as well as within the test prep unit that they have. What it says is that there will be no base salaries given to any of these sales staffs. Those stand suspended as of April 24th up until May 21st, like you mentioned. And instead, employees will purely be paid on the basis of what they bring in. So 50% of any revenue that they bring in, for example, if an employee brings in 50,000 rupees worth of courses within a week, the first day of the next week, they get paid 25,000 rupees. That's how they've also explained in this internal document. Now, what this points to is an acute shortage of funds, right? This points to a continuing grave situation at Byju's, which has tumbled from about $22 billion in valuation in October of 2022 to about $25 million currently. It is also constantly battling insolvency petitions. There is infighting between investors and the management, and Baiju Ravindran has also been has also been named to be ousted from his position as founder and CEO, though he has returned. So we will continue to keep tracking the grave situation at Byju's.
Thank you, Rishabh, and as promised by him, we'll continue to bring to you the latest on that. Moving on to an NDTV Profit exclusive, the Employee Provident Fund Organization, or the EPFO, is considering a massive digitization drive and is expanding auto settlement scope in the next couple of months. My colleague Janani Janarthanan joins us to share more details about this exclusive update. Janani, what have you picked up?
That's right, Pallavi. We are hearing that the Ministry of Labour and the EPFO are working together to bring about a major digitization exercise. This will include also some reforms that were much overdue when it comes to the EPFO. These are in conjunction to many of the suggestions and reports that have been placed before the body. Now, chief of this includes expanding the scope of auto settlement. Now, this used to be previously up to 1 lakh only for illnesses, and that too, this was during the COVID period. Now the idea is to extend the scope of auto settlement across multiple reasons, be it illness, marriage, education, housing, and make it up to a limit of 1 lakh rupees. Now it's also important to understand that many of the structural changes that are being proposed are more to do with digitization, such as digitizing death claims, digitizing in fact what they call are claims that are to be returned for further correction as such. Now these will be in fact linked to previous claims so that they don't fall under the bucket of rejected claims. There is a huge number of rejected claims that often is not categorized, so this is an effort to change that. They will build more eligibility checks at the very beginning, at the time of submission of claim, so that if there are any inconsistencies they can be corrected immediately or perhaps at that stage. And if there is any rejection as such, why is it being rejected? So these remarks clearly state that, and sort of eliminate a lack of communication is also something that's being envisioned. Now another important one is that bank accounts are expected to be authenticated with NPCI, so that an individual does not have to show their checkbook or their passbook at every individual point. Now a lot of these is still in the pipeline. The earliest of the goals for some of these is still June 30th, so we'll have to see if it comes about. The long-term goals, of course, spread across for an entire year, and we'll get back to you with more on that as we know better. Back to you.
Thanks, Janani. And with that, it's time to slip into a short break. But stay tuned. We have a lot more lined up for you on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Welcome Welcome back. You're watching The Reporter on NDTV Profit. Now, let's start with our special election coverage on NDTV. Today on How Rich Is Your Candidate, we put the spotlight on Smriti Irani's portfolio. My colleague Alex Matthew joins us with the details. Alex?
Well, the question that we're asking is whether the money plant of Smriti Irani has flourished as much as, well, the other plant that she's known for. Let's take a look at the portfolio that she's got. First, before that, let's take a look at the taxable income that she's got. And FY23, she had 97.87 lakh. In FY19, that stood at less, at 61 lakh. So that's a sizable growth. In terms of cash in hand, she's got 1.09 lakh and she's got movable assets of just over 3 crore rupees. That is split between bank deposits of 25.5 lakh rupees, mutual funds of 88 lakh rupees, public provident fund as well as Mahila Sanman saving certificate of about 30.7 lakh rupees, personal loans that she's disbursed of 20 lakh rupees, jewelry including gems of about 37.5 lakh rupees, as well as miscellaneous wealth of about 78 lakh rupees. She's got one car worth about 27 lakh rupees, and that is an MG Hector. Now, talk about her mutual fund holdings. Most of them are in the form of SBI Magnum Mid Cap Fund as well as SBI Blue Chip Fund. She's also got the Kotak Emerging Equity Fund, which has a large amount of funds. Now, the immovable assets are broken into the agricultural land, which is worth about 1.7 crore rupees, as well as non-agricultural land and residential property of about 3.4 crore rupees. So, has the money plant flourished as much as the tulsi?
The row over quota does not seem to be dying down in this poll season. Congress MP Shashi Tharoor has now countered the BJP's quota charge against the Congress. Speaking exclusively to NDTV's Vasudha Venugopal, Tharoor said that there is no mention of inheritance tax in the Congress manifesto and that Muslim quota is not on the Congress agenda. Listen in.
Not at all. Every charge the BJP has applied is completely concocted by the BJP's propaganda machinery. They have talked about people snatching gold and Mangal Sutras. Yeah. There is no reference to any of this. They've talked about the inheritance tax. There is no reference to any of this. And none of these issues are even discussed, by the way, in the manifesto committee. The only issue that they have drawn attention to is Rahul Gandhi using the word X-ray. Yeah. But that does not mean coming into your house and opening your cupboards. What Rahul Gandhi said very clearly is an X-ray gives you a picture, an accurate picture of what's going on inside your body. Similarly, we need an X-ray to find out what's going on inside our country. Caste census is simply to identify caste because, as you know, in every state government and the central government, some benefits are given or withheld depending on your caste affiliation. Therefore, knowing the real numbers in any case makes sense. If you're making policies that give benefits to caste, you may as well know what you're talking about. Secondly, we've said it should be a socio-economic caste census. In other words, we should correlate what people are earning with what they've got in terms of a caste affiliation. For example, if there is a correlation between Dalits and poverty, if more Dalits are below the poverty line, for argument's sake, then you really need to make an effort to have targeted policies to benefit Dalits. If you find Adivasis are disproportionately below the poverty line, you should do the same thing. And so it goes. Right. My argument with all of this is that this is a process that will have to be embarked upon. Yeah. It is not at this stage anything more than a diagnosis. An X-ray is used for diagnosing. Yes. The prescription has not been made until you've done the diagnosis. Absolutely. Why is the BJP inventing an imaginary prescription of wealth redistribution and ascribing it to the Congress? All we're talking about is let's have an accurate picture of what's going on. That's a diagnosis. It is not a prescription.
And continuing with NDTV's special election coverage, with phase 3 of the Lok Sabha elections approaching soon, the land of the Reddy brothers will see a closely contested election in Karnataka's Ballari. BJP's Sri Ramalu is trying to ensure he's not pushed to political oblivion, while the Congress's Tukaram is trying to break the BJP fort. Here's a ground report by Pratibha Raman.
As you travel around 300 kilometers from Bengaluru,
The granite rocks of Ballari welcome you. The active markets of the Hyderabad-Karnataka region, the soaring temperatures across the rural lands, the dry deciduous forests, home to over 18 lakh voters, make it the Ballari Lok Sabha constituency where political temperatures are always high. In this constituency reserved for the scheduled tribes, BJP's B. Sriramulu, who was a Lok Sabha MP in 2014, will be contesting against Congress's E. Tukaram, who's fighting to enter the parliament for the first time. The moment you land in this constituency, your ears are ringing with catchy tunes. While one highlights Sriramulu's accomplishments in this constituency working for the development and progress, another captures Tukaram's pro-people initiatives. Each of them carefully crafted and composed intricately by the respective teams to make it a viral and a political sensation. Sriramulu hit the spotlight when he worked with the Reddy brothers during party leader Sushma Swaraj's election campaign in 1999. Though she lost then, the BJP barged into the Congress stronghold, holding fort since 2004, except for 6 months between 2018 and 2019. An MLA in 2008, he parted ways with the BJP and the Reddy family in 2011 post the illegal mining case in which Reddy was arrested. While he got back into the party fold in 2014, he now has the power of Janardhan Reddy too behind him. Despite 6 of the 8 assembly segments having been backed by the Congress, Sriramulu is banking on the Modi factor and Reddy's influence to wrest the seat.
ये बार 400 सीट जीतना पड़ेगा। वो 400 सीट्स पे श्री रामलू भी बल्लारी और विजयनगर डिस्ट्रिक्ट से रामलू भी एक होना चाहिए। देखो हम कभी ये 10 साल से मोदी जी साहब को हम देख रहे, एक गुड गवर्नेंस दे रहे। देखो ये एक भी बिना एलिगेशन, बिना करप्शन देश के लिए काम कर रहे।
लेकिन अब जनार्दन रेड्डी जी जो है वो अभी यहाँ पे आपके साथ जुड़ रहे हैं।
नहीं, देखो पार्टी हमारा पार्टी में नहीं था, बाद में उसका एक रीजनल पार्टी खोले। रीजनल पार्टी खोलने के बाद वो भी एमएलए के तो पब्लिक इलेक्ट किया है ना, नहीं बोलते। कभी पब्लिक से कभी जीत को है तो उसको लीडर का तो एक्सेप्ट करना ही पड़ेगा। अभी बीजेपी में है, अभी तो बहरहाल इधर के लोगों में उसका भी क्रेडिबिलिटी है।
After biting the dust in the recent assembly election in Karnataka, when Sriramulu represented Ballari rural and lost, he is now looking to revive his political prospects with mining baron Janardhan Reddy's Ghar Vapsi to rebuild BJP's fortress here. But the Congress is now claiming that Janardhan Reddy is looking to exonerate himself from the cases. Sriramulu's desperate attempts to gain sympathy votes are being debunked by Congress's E. Tukaram, who is highlighting his welfare initiatives and contributions while holding several posts, including that of district in charge minister. And the Congress guarantees are another poll plank. For Tukaram, challenge lies in the fact that his reputation may be limited to the Sandur Assembly constituency that he has represented 4 times.
In Karnataka already you have seen, so guarantees are work out. In next overall India, it definitely will work out. He's not spoken his accountability. He's already last time he's become a minister. Then also he's a MP. His accountability must now. Ballari people are seeing this Reddy administration. He's last is a minister, no, and that time he already seen. Nothing has happened. This time definitely Congress I will win.
A mix of urban and rural population with an estimated 21% scheduled castes and 18% scheduled tribe population. The issues here are diverse.
मैडम, हमें मोदी जी के ऊपर भरोसा है। मोदी इज द पर्सन, ही कैन मेक द रूल्स एंड हमारा इकोनॉमी 3rd पे लेके जाने के लिए वो गारंटी दे रहा है। 2000 रुपए के लिए हम हमारा वैल्यूएबल वोट खोने के लिए तैयार नहीं है।
कामगार है आदमी वो, और गरीबों का मददगार है, बहुत अच्छा काम किया।
कि यहाँ पे जो है सिद्धरामैया गारंटीज और मोदी गारंटीज के खिलाफ यहाँ पे?
नहीं वो भी काम करेगा, क्यों गरीब लोगों को अनुकूल हुआ ना, हर गरीब घर को पैसा पहुँच रहा है, एक जिंदगी चलता, गरीब घराने का जिंदगी चलता.
Both the parties have worked out the caste equations by fielding candidates belonging to the Valmiki community. The BJP is looking to mine Janardhan Reddy's clout in the region, and the Congress is looking to scale Ballari boulders in this region with its guarantees. With camera person Govind, Pratibha Raman in Ballari for NDTV.
And that's all the time we had on this edition of The Reporter. But do stay tuned to NDTV Profit for more news and updates, and of course our continuous coverage of the Lok Sabha elections 2024.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after